Okay, so picks and shovels and not necessarily the miners themselves didn't show up. Good morning, Neeraj here. Non-energy, the newer themes, like let's say defense seems to be an area where India is upping the spend and the global options are opening up as well. Do you have a sizable exposure to defense, or is it kind of risky to defend that position?
No. So, Neeraj, actually, we've been very choosy and picky in this space as such. We, not so long back, just had one particular stock in defense, which was Bharat Electronics, is one of the top 5 positions that we hold as such across our funds. But that was mainly because it was a service agnostic play. It was not limited to Air Force, I mean, across all 3 services, right? So that's why we like that play. Secondly, why we liked it was it's not capital intensive. If you want to increase your production, you don't have to spend huge amount of money on capex and all that, which is the case with the other players. They are service particularly limited to certain services, like HAL would be Airways, Air Force. Same will be the case with Musground stocks, which will be like, I'm not saying that there are any, we don't own these stocks, so don't take me wrongly, but they're limited to Navy and stuff like that. So we don't like those plays, and plus they're capex heavy. I mean, you can imagine if the orders exceed certain limits, they'll have to invest huge amount of money into their capexes, and that will create a long-term probably pain going forward. So that's why we don't like those. However, we recently got into one explosives company, which is providing solutions for missiles and stuff like that. I think we like that. And by the way, on a longer term basis, that's
the large cap explosive or the micro cap explosive?
No, large cap explosive.
Large cap explosive. Okay. I think people can do their figure. Energy and explosives. I gave as many cues as I can. Okay. Dinshop, tomorrow if Donald Trump were to put this tweet out that, okay, the conflict has ended, would you believe that, and would you put all money to work if you had some, or would you wait for some smart retorts from the Iranian side? Because now they have learned this X and Truth Social game very well.
They've done a fantastic job, actually. They've come out with funny tweets and such. But I think I would rather wait. The fact is that we've seen these tweets from Portos, and they've always led to some wrong moves as such. So rather wait for a confirmation from the Iranian side as such, saying that, okay, the deal is through, we've gone ahead with this and stuff like that. And then it probably played out there. But having said that, Neeraj, I think the market has already built that in. The market is already believing that it's around the corner. Frankly, I mean, both the sides don't need it. Right? They don't want to extend this war any further as such. So it's a matter of time before this happens. And once that happens, I think the sectors which suffered the most will be the ones which will react the most. In fact, our call is fairly clear that mid caps and small caps are something that one needs to look at now, especially given the fact that they've corrected a lot, and the fact is that their uptick also is happening now. So that.
Yeah. Dinsha, I'm wondering if, like the Irani community in Mumbai, you are also engaging in heated conversations about your Iranian roots. Because I have a number of friends who are really getting into this, on the Iranian side.
So I actually proposed my US friends to put my name out for being the Shah of Iran, because I have a Dinsha Shah in my name. So.
I don't think it's a bad idea. At least you'll handle the economy well. Okay, we'll definitely vote for you if we have a vote. No, so
thank you.
So I want to ask the counter. So the question to you is, what if tomorrow Donald Trump says "Sab khatam, okay, ceasefire extended"? What if the reverse happens? And they have no agreement, because we don't even know if the Iranians are taking that flight to go for the meeting.
Shubh shubh bolo yaar, Tamanna.
No, none of them have boarded a flight so far. They're waiting on the tarmac.
But then the US folks are going, so let's hope that they are as well.
You need two sides to negotiate.
But they will know, nah? The US will know. They won't send anybody.
The US folks are sitting there for a while. So, I mean, we don't know what's going to happen. You have to look at both scenarios. What happens in scenario 2?
Yeah, you guys, 3 of you guys are sitting there and having a conflict between what's going to happen. But the fact is that if it doesn't materialize, I mean, the war starts again, that will be a very big negative. I mean, no doubt about that. I think all bets are off the table after that, because then you're talking about energy. I mean, crude prices hitting like 150 odd dollars a barrel, which is bad news not only for India but the world itself. I mean, you're talking about demand collapse. You're talking about supply chain disruptions. It's a very bad scenario. I don't think we need to. We want to go there. Hopefully, things will work out. And as I said earlier, that the fact is that the US team is already in Pakistan, despite the fact that the Iranian team is not coming. So the desperation is quite clear on both sides. I mean, rather one side, the other side has to come and compromise somewhere.
You should pull out the glasses that the market liked so much. I see that you're not wearing it anymore.
No. So those glasses lost their charm. I think these ones are the ones working now. So that's why I'm holding on to these ones now.
Well, let's all hope that it does work its charm. Thank you so much, as always, for taking the time.
Thank you.
Well, I certainly hope that the new glasses work.
Yeah, I would vote for Din Shah,
Din Shah
of Iran. No, on a lighter note, great conversation there, and the outlook seems to be positive, and that's important. So are the markets right now. That's all the time we have on India Market Open. So from all of us and everyone who puts the show together, thank you so much for watching. Stay tuned to Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
कुछ खास होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the
Brings the chart.
Charts speak the
Brings the chart.
charts speak the
watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani, with me as always is Puneet Zaveri, and I think the markets are holding up, Puneet, because the Nifty 50 right now is trading almost about 0.6% higher, well above the 24,500 levels is what we're seeing. So far as the day goes, till now, we've seen stability when it comes to the benchmark indices. Even the bank Nifty is holding up by about 1%. Let's try to pull up the Nifty 50 heat map to see as to what counters are, kind of contributing to that stability coming in. You have counters like Asian Paints, which is seeing the most gain, coming in up 2%. Nestle, followed by Nestle, of course, we expected the earnings to come by today by around 2 odd p.m. That's when they generally post their numbers, up 1.7%, followed by Trent, which is expected to post its earnings tomorrow, followed by Adani Ports, HUL, Axis Bank, JSW Steel. So FMCG as a pack is doing fairly well. But on the flip side, you have counters which are facing pressure as well. SBI Life is down 4%. Geofinance, Dr. Reddy's, Reliance are some of the names that are seeing a downtick anywhere between that 1% to 4%. But let's try to pull up the sectoral heat map as well to see as to how sectors are faring right now at this hour. All of them at least in the green. So that's a good thing and a relief to see. Nifty Realty back again in the green, up 2.3%, followed by Media. Defense is also doing fairly well, up 1.2%, followed by Nifty Bank, both Private Bank and PSU Bank doing fairly well, and FMCG also seeing an uptick of around 0.9%. I think the least gains is coming in from Nifty IT and Nifty Pharma. Nifty IT at least slightly in the green today. Let's try to put up the advanced decline ratio, because that gives you a perspective of how the broader end of spectrum is doing, and doing a tad bit better than where the benchmarks go, right? But overall, the advanced decline ratio looks very healthy, almost that 4:1 ratio coming in when it comes to the advanced decline ratio in the broader markets.
Well, most certainly, it's been an important time to track the broader markets as well, because we've seen a larger correction there. And while we've also seen, as Mahima highlighted, that Nestle will be reporting results today. Both HUL and Nestle are up 5% in the last, in the last week or so. So those are important counters, and HUL generally comes out with results between 10:30 and 11:30. So you always disrupt the Ask Profit show. If it's anywhere stock price related, we could see a disruption there, but most likely in the midterm is where you're expecting the results. A crucial one in terms of demand as well as volume growth, which Mahima will be tracking very closely. In terms of the broader markets, mid cap and the small cap, as highlighted today, yesterday it did slip in the red, but today up firmly 0.7% for the mid cap 150, small cap 250, up over 1% now. And the BSE 500 also, individual stock names buzzing in trade today. One of them has been Lemon Tree, up 11% today. PNB Housing on the back of strong results is also up around 8 to 9%. While Borosil Renewables as well as Aavas Finance are some of the other key names. Aavas Finance also had a management change announced very recently, so you are seeing that stock buzzing in trade. SBI Life though, taking it on the chin today, down almost 4%, so is ICICI Pru, but largely gains seen on the BSE 500. At this point of time of the show, let me also welcome in our guest for today, Astha Jain, Senior Research Analyst at Hem Securities on the fundamentals, as well as Swati Hotkar, AVP Technical Research at Nilman Bang, joining in now. And viewers, if you haven't already, do start sending them. Both of you ladies, thanks so much for joining in. The first question now coming in, it's on Geofinance. It's been a stock that's been in focus since they came out with results. Ravi Jadhav is holding roughly 200 shares at 252, asking what he should do with this counter now. Should he hold or exit? He's a long-term investor. Astha, good morning. What would you recommend?
All of you. So if I talk about Geo Financial, definitely what we are seeing in this counter is that whatever earnings they have reported, I mean, this earnings we have seen that PAT was mainly driven by, the NBFC income. And we are seeing that going ahead also, the kind of product mix this company is offering, definitely it will going to help the company in posting good set of numbers. Although whatever numbers we have seen in this quarter as well as for full year seems to not to be so much on the higher side, and hence valuation seems to be a little bit stretched, keeping in mind the kind of numbers which the company has posted. although the core business at the inflection point, but all will take some more time to show their strength. And hence, we believe that in the short term, the stock might see some sort of a correction. Maybe it can fall down to 220 odd levels. But in the longer term, one should stay invested in this counter, because in the long term, we can see good momentum in the growth of this company. So for a long term, it is a hold, but in the short term, we might see some downfall. So be prepared for that. For the long term, our price targets are somewhere at around 260 to 270 odd levels.
Okay, so that's the view coming on Geo Financial. The next one is on Suzlon. Sneha is asking whether this is the right time to sell Suzlon. She's bought 250 shares at the levels of 23.75. So she's sitting on over 50% of profits right now. Swati, would you recommend that booking profits on this one?
I would suggest to hold on for some more time, because the trend is in an uptrend as such, and likely to be continued for a target of at least 55 to 58 levels. So you can hold on your long position. If possible, keep a profit stop loss of 51 rupees and hold your long positions for a target of 55 to 58 levels.
Got that view, Swati, and welcome to the show. The first caller for today is actually Chandu from Hyderabad, who has a stock query for us. Chandu, good morning. Welcome to Ask Profit. What's your query?
Very good morning. Very good morning to all. My query related to PNB Housing Finance. I bought a PNB Housing Finance.
Yeah, Chandu, go ahead with your query.
Yeah. PNB Housing Finance hard actually. Shall I hold for long term? I want to know the.
Got it. Swati, Astha, I'll come to you actually, since the long-term query. Chandu's bought it at 866 and sitting on a gains of almost 1 lakh rupees. How did you view the results? It's definitely one of the stocks of the day for now. But how are you viewing this counter? Should Chandu continue to hold?
So if I talk about the number seems to be on the stronger side. If I talk about their AUM growth, so AUM growth has shown a good jump of around 10 to 12%. Retail loan asset has also shown some growth. But what I think is a little bit on the downside is their net interest margin, because we have seen a slight in the NIMs. I think it is not more than 2 to 3 bips or 3 basis point, but we have seen some sort of a dip in the NIM. But if I talk about the other ratios like ROA, ROE, they all look on the higher side. So idea here is to book partial profit in case if the horizon is short term, but in case if horizon is long term, definitely one should remain invested for the price target of 1100 at the initial levels.
Okay, all right. The next question that we have is from Indra, who's writing us from Visakhapatnam, asking about NHPC. What she's asking is that she's bought 3,200 shares at an average price of 90 rupees. Wants to know whether to hold or exit at the current level. Swati, the stock is currently trading at 84, so she's sitting on around 18,000 of loss. Would you recommend her to book her loss or continue to hold?
I would suggest to hold on with this particular position as such. No wonder the buying cost is at elevated levels. But if you look towards on a larger degree on the monthly chart, the stock has formed the cluster supports nearby 70, 71 levels. And from there onwards, we are getting a strong bounce back rally. Now, the immediate resistance is placed at around 88 to 90 levels. If it surpasses those levels, then definitely a strong up move rally can be seen into this particular counter towards 200, 210. So my long-term view is definitely positive. Hold for some more time. If you're getting any dips at around 878 to 75 levels, you should average out your positions, because longer term horizon, I'm looking forward for a target of 100 rupees in this particular stock. So you can definitely hold on.
Okay, all right. So that's the view coming in on NHPC. I think we've got our next caller. Venkat is calling us from Hyderabad. Venkat, a very good morning to you. What's your query about?
Hi, ma'am. Good morning. Thanks for taking my call. Ma'am, I have a query on Piramal Pharma, where I'm holding 200 shares at 218.
Okay.
I bought it 1 year back and I didn't get any returns so far. I just wanted to know whether I can sell this and shift to some other counter.
Okay.
Or I should hold it.
Till how long can you hold it, Venkat? What's the time horizon that you're looking at?
1 year.
1 year. Okay. Then I'll go to Astha on this one. Astha, your view on Piramal Pharma, should you continue to hold?
See what the numbers company has posted in the Q3 of FY26 that were really dampeners, and that is why we are not able to see the stock performing strongly on the bourses. Because what we have seen is that first of all, the performance was impacted by two factors. One, first factor was destocking, which this company has done, and another factor was certain postponement. So I think all these factors have contributed to the downside momentum of the stock, and hence we have seen the stock is not performing so strongly. Idea here is to stay invested, but I think the kind of cost price at which the investor has invested into this counter, it will take a huge, huge huge lot of time to go till those levels. So right here, just wait for some more time. Let the results come in for Q4. FY26 and then make any sort of decision into this counter. So because right now if he exit from this counter, definitely the losses will be on higher side. So I don't want him to incur huge losses at this point of a time. Just wait for the results to come in and then take the decision, because cost price is higher. I think initial levels which we are seeing for this counter, in case if it performs strongly on the bourses, then also it is 180 to 190. So I think cost price is really on the higher side. It will take a lot time. Just wait for the numbers to come in and then again ask a query in this show.
Well, got that view, Astha. But the next question coming in on Vedanta, very topical today. Address Sarad Babu from Dubai is holding 295 shares at 670, asking what he should do in the short term. Now, Swati, we saw the company come out with an exchange filing, just putting out details in terms of what will be the demerger ratio. He's sitting on a good profit right now, 30,000 rupees. Should he book out, or is there still some more upside from here?
See, the long-term setup is definitely positive, but on a shorter degree, the weekly chart shows some sort of a negative divergence from the last 15-20 trading sessions. So I believe at least partial profit should be booked at the current levels, because the stock is trading in a overbought zone. So after such kind of a rally from almost 650 to 800 levels, definitely a profit booking cannot be denied at the higher levels. So partial profits can be booked at the current market price. Second partial, you can hold on by keeping a profit stop loss of 750. If the stock manages to give a breakout of 790, then the positive move is likely to be continued towards for a target of 840 to 850 levels. So at the CMP, partial profits can be booked.
Just for viewers' perspective, the demerger date is set on 30th of April. So that's when the demerger takes place, and price discovery will happen from 9:15 onwards for all the demerged companies as well. But moving on to the next one, Tata Tech is the counter that Gautam wants to know about. He has 100 odd shares at the levels of 1032. Wants to know if he can sell or continue to hold, basically is what he's asking. Swati, your view on the charts on this one?
Looking toward the current market price, my view is definitely positive, because from the last few at such years, we can say the stock is not performing really very well. And as of now, it is coming out from the oversold zone. So the depth is limited from the current market price, but definitely a bounce back rally or a upswing rally can be expected in the near term future. And the stock will continue this kind of a rally towards to 700 to 800 in the coming few months as such. So you can definitely hold on for a long period of time. If possible, after the quarterly results, one can think about the average out position so that your buying price will come down. So once again, you can review this particular count.
Got that view, Swati. A crucial quarter four. A lot of positive commentary from the company in quarter three about quarter four was at least 8 to 10% growth is what most brokerages are also highlighting, but a crucial one for all tech companies. Let's go across, take the next question from and caller actually from Mysuru. Mohan has a stock query for us. Mohan, very good morning to you. Welcome to the show. What's your query?
Very good morning. I just want to know, can I buy Swan Defense and Heavy Industries at this time for a long-term perspective?
Got it. Well, Astha, would you recommend that? Swan Defense and Industries, is this a good buy for the long term for Mohan?
So would like to say that right now what we are seeing, despite we are seeing a very good momentum in the defense space, the company is not able to show that strong performance as of now. Although the news flow which is coming into this counter is looking to be on the good side, but right now my idea here is just wait for some more downfall to come in and then make any sort of entry. Maybe at around the level of 1750 to 1730 are the good levels to make a fresh entry into this counter rather than at this point of time.
The next one is coming in from Rajesh, who's writing us from Bengaluru, asking about whether to invest in physics wala right now or urban company. So he's looking at new age tech, as a theme, and wants to know whether he should go ahead and invest in one of these from a slightly long-term perspective or short-term perspective. Asta, what would you recommend from a slightly long-term perspective, urban company or physics wala? Which one is more attractive?
So right now, we feel that urban company is more attractive, although physics wala is also now gaining attraction. But what we believe that in the education sector, especially this is my point of view, that you are dependent on certain quality of teachers, and if they shift to some other institution, then definitely create some sort of a difference in the institution. So I know the kind of business model which these companies are carrying is looking not that attractive, and that's why we have seen that these companies, which in the past also we have seen like Compucom, etc., which were into the AppTech, etc., which were into the education, they were not able to gain so much of market traction. Although this company is different from those companies, but still I'm not very much convinced with the business model. Hence, I would like to go with urban company at this point of time.
Interesting before we move on, because we're getting a couple of views, because JP Morgan actually on physics they initiated coverage today with a target price of 125, and a couple of key points because of the large addressable market. Something that Asta also highlighted is something that JP Morgan likes, and the online business co-profitable attracts growth is something also that they've highlighted, and the foray into school will be cautious and provide a further optionality to them as well. But that's largely a key one on physics wala. But very important point that Asta mentioned, because of the total addressable market that's there for urban company also, and the competition there with Snapit will lead the company to a better, stronger performance in the near future. Something to watch out for of how it happens. But before we take further more queries, time now to dive into the BSE F&O market setup now, and Sharad is joining us exactly to do the same. Sharad, over to you.
Thanks a lot for that, Puneet. And largely we see a stable up move coming in the initial hour of trade for the benchmark indices, and see almost all the stocks in the Sensex are in green. Of course, BL and Reliance, they are in the red, but not so much to be of concern. A good buying, a follow buying is coming post the gap up opening as well. Of course, Asian Paints, Adani Group stocks, ICICI Bank, HDFC Bank, all of them doing well in the trade. Stocks are up 1%, and markets are getting an optimism for an extension of ceasefire. Even the VIX has cooled off, but let's see the stock-specific moves where the action is. And long build-up includes PNB Housing Finance, and because of that, all the housing finance companies are rallying in trade. A very strong numbers coming in as the recoveries beat PAT estimates, and AU Small Finance Bank also seeing a good buy. The stock is up almost 4%. Amongst the short build-up, we are having SBI Life. That's where sell-off is happening. Earnings is also slated to come in, so that's where the street is not happy. And ICICI Pru also, the story remains the same. The stock is down 1.5% as well. Long unwinding candidates include Samman Capital and ICICI Lombard, but not a major trade, to be honest, to be made. And short covering is there for the realty stocks as well. Lodha is leading the pack. The stock is up 4%. And also I'd like to point out Vodafone Idea, renewed interest has come in the stock. The stock is up 2%, and some volume pickup is definitely happening. And the street is expecting some kind of a news flow as well from Vodafone Idea. So stock specific moves happening in the F&O space, but net, the good strength in the markets is there, especially in the broader indices.
Thanks so much for that, Sharad. But let's go across, take another caller from Hyderabad now. And Kavya has a stock query for us. Kavya, good morning. Welcome to Ask Profit. What's your query?
Yeah, good morning, everyone. I brought SML Mahindra, the average price of 4,624 and quantity is 20.
Okay.
Should I hold it for long term or should I exit, as results are not good in this quarter?
Right, Kavya. I mean, definitely the margin impact was something to watch in this particular quarter. But Astha, how are you viewing SML Mahindra? Because it had a very sharp run-up once it was announced that Mahindra is acquiring it somewhere around the second half of last year. And since then has been around this level. Do you feel that once the acquisition is complete and integration with Mahindra, I think they are looking to keep this listed entity for now. But what would your advice be for Kavya right now?
So what we are seeing today is purely a result impact because the results were not on the greater side. Especially if I talk about the bottom line, it was just 2% growth which they have posted as compared to year-on-year basis I'm talking about. So not at all a very, very strong growth. In fact, if I talk about their operating profit, because operating profit holds a key importance in any numbers. And here also what we have seen is the degrowth. So the results were not on the positive side, and all the margin, whether I'm talking about operating profit, net profit margin, they have seen a strong fall as compared to last year. So markets are not liking that. Now talking about the corporate arrangement, definitely it will be on the higher side. But right now, I think markets will be more influenced by the kind of number which this company has posted, and hence we are also not very much optimistic about this counter at this point of time.
Okay, all right. So that's the view coming in on SML Mahindra. The next one that we have, before I take the next question, I was just wondering that we should also start asking our viewers as to what age they are of. Because when I heard Kavya's voice, I felt like she's a pretty young woman who's, tracking the markets actively, probably even studying. It would be interesting to know, as to how young they are and since when they've started tracking markets, just from that perspective. But moving on to the next question, I think Priyanka from Mumbai is writing in, and she's holding 220 shares at the levels of 7586. Wants to know whether she can continue to hold this going forward. She bought it from a long-term perspective, but wants to know as to what should be the next step for her. Asta, your view on Tata Elxsi?
So my view is just if she wants to buy this counter, just wait for some more time. I don't feel that this is the right time to make entry into this counter. So we are of the view that definitely what we know that the company will going to announce its numbers on the 21st. That is today. So let's wait for the numbers to come, and maybe markets are sensing something very strong in the numbers, and that is why we are seeing 2% move. But I would like to recommend safety is better than right now taking risk. So just wait for the numbers to come in and then make entry into this counter. So wait is what I'm recommending at this point of a time.
Wait right now is what Asta recommends on Tata Elxsi. Is most certainly the results today, and of course we'll be covering it in NDTV Profit. But let's go across to our next caller from Hyderabad. Rama has a stock query for us. Rama, good morning. Welcome to the show. What's your query?
Yeah, hi, good morning all. Thanks for taking my query. Yeah, I'm related to query. Mazla and Dark Shipbuilders. Shall I accumulate for long term? Which is right time to enter?
Okay, for the long term, got it. Well,
Yes.
Asta, on Mazagon Dock, would you recommend Rama to enter this stock right now? What would be your view?
For long term, we are positive on these stocks, like defense-related stock, and hence we are really, recommending our clients also to start accumulating these counter or start buying in a small quantity. So yes, Mazagon Dock is a counter where one can start buying in a smaller quantity, not put your entire amount into this counter at one tranche, just put your money into, installments. So right now, yes, one should start investing in this counter, but not a lump sum investment is recommended.
So that's the view on Mazagon Dock. It's time for our first rapid fire round. Asta and Swati, you both know the drill. The first question is coming in from Divya, who's asking about Swiggy. She's got 125 shares at the levels of 396, currently sitting on a loss of around 15,000 rupees. Swati, from a 3-month point of view, can she continue to hold?
Yes, definitely you can hold on for a target of 340 rupees on high side.
Mostrep Technologies is the other one. We haven't spoken about the stock for a while. Our viewer Mahesh has bought it at 218. He's holding 264 shares. Swati, any view on the counter now?
Yes, view is positive. Upside rally can be extended at least towards to 225 to 230. So you can hold on your long positions.
Okay, Nalco is the other one. Arun from Hyderabad is holding at the levels of 235, and 100 shares is what he's holding. Wants to know from a long-term perspective, can he continue to hold? Asta?
Yes, from long-term perspective, it is a hold with a price target of 460 to 465.
Okay.
PNB Housing Finance, we took a fundamental view from Asta, but Swati, our viewer Thomas George from Cochin actually holds shares at 480. Would you recommend him to continue holding this counter on the technical view as well?
Yes, definitely you can hold on. Upside target for a short period of time, 1050 to 1100. So you can definitely.
Okay, the next one is on Varun Beverages. Venkat is holding about 60 odd shares at the levels of 482. From a long-term perspective, hold, accumulate more. Asta?
from a long-term perspective, accumulate more, but at the lower levels. So right now, hold and accumulate more also.
Can I buy into Jupiter wagons for the next 2 to 3 years? What Navendu is asking. Astha, would you recommend that?
Jupiter Wagon is looking good to us. Yes, one should buy this counter. Our price target for this is somewhere at around 320 at the initial levels.
Sterling and Wilson Solar, 100 shares bought at the levels of 181. Shankar from Bengaluru wants to know if he can add more at the current price, planning to add 200 more shares. Swati, would you recommend that?
I will not suggest to add at the CMP, but any tips towards to 190 to 185 levels are the attractive level to long position. Immediate target will be 240.
Okay.
Between Asahi Glass, NetWeb, as well as Schaeffler India, Astha, either of those stocks for the next 5 years is what Archana is asking that you are interested in?
NetWeb Technologies, definitely it is looking very strong to us on the basis of the data center theme, and so we should look after NetWeb Technology among all the three.
Okay, Astha, one more question your way from a medium-term perspective. That's 2 odd years. Akash wants to know as to what healthcare stocks can he add to his portfolio?
So from 2 years perspective, definitely Apollo is our preferred choice. So Apollo Hospital can be looked upon. Apart from that, what we believe here, Narayana Hridayalaya is also looking good to us. So these are two counters which they are positive.
Got it.
Kaushik from Baroda actually wants to invest 1 lakh rupees in the green energy space. Any stocks or particular plays, Astha, that you like from here?
NTPC Green is still looking very, very good to us. So we recommend NTPC Green at this point of the time in that space.
Ryan Pro Solutions, can I buy at this price? B. Somaya wants to know. She's writing in from Chennai from a short-term perspective. Swati, your view on the charts?
I will suggest wait for some more time. If you're getting any tips towards to 880, 870 levels will be the attractive levels to take a long position.
Another one, Masgon Doc, we took the fundamental view, but Swati, our viewer actually is bought at 1100 rupees and 76 shares. Would you recommend her to continue holding?
Yes, definitely. The short-term targets I'm looking forward towards to at least 2850 to 29 levels, so you can hold on the longs.
Okay, Tata Power, from a 3 to 12 months perspective, our viewer Puneet Saxena wants to know whether he can continue to hold. His buying price is 350 rupees. Swati, your view on the charts?
Yes, I will suggest to hold on the long position by keeping a profit stop loss of 415, and the immediate target I'm looking forward towards 460 rupees.
Okay.
ONGC bought at 263, 200 shares by Abdul. What would you recommend here, Astha?
ONGC is a hold from our side with a price target of 295 to 300.
Well, that is the end of the first round of the rapid fire in this edition of Fast Profit. But Astha as well as Swati, stay on. Lot more stock-related queries on the other side after this very short break. Do stay tuned.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Sell Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on New York.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either give us a call or send your queries on WhatsApp number that are flashing on your screen up there. We've got our next question coming in from Mahalakshmi, who's writing us from Hyderabad, asking about Polycab. She's bought 80 shares at the levels of 3525 and probably is in profit. That's correct. Oh, she's sitting on significant amount of profit. The stock is currently trading at 8,220 rupees. Wants to know whether she can book profits right now and invest into something like Electra Green Tech or JBM Auto from a long-term perspective, and whether this is a good decision or not. Astha, do you think that's the right strategy?
So I think Polycab is also looking very, very good to us. So there is no need to exit from this counter. In fact, this counter is also well poised to move or to show more upside from here, because what we have seen that in the fundamentals also, whatever growth they are showing, they are very, very strong growth which the company is seeing, especially on the domestic front. And in fact, this kind of a growth is also able to offset the margin pressure which the company has witnessed. Going ahead also, we will see that margins will beginning to normalize. So I think Polycab itself is looking good to us, and we are recommending a hold on this counter with a price target of 9,500.
But massive profits there for a viewer. Got in at invested 2.8 lakh rupees in profits of 3.75 lakh rupees. So good on you at that. To get it at that price point also very interesting there. But go across to the next query now. Take it from V Murli from Bangalore. He wants to know about Shelly Engineering here, Swati. He's holding shares at, roughly, I think it's 1966. And he's asking what he should do with this counter now. Now, Swati, it's been a very interesting journey, right? Year to date, stocks down, but since March 21st, it has just been in a downward spiral, down 22% from those levels as well. What's leading to very volatile, right? What would you recommend here to V Murli?
Yeah, at the current level, my view is a little bit cautious at this particular counter. If you look towards at least 2 to 3 months data, we are continuously hitting the low levels, trading in a pattern of the low tops, low bottom formations. And the observation is that the stock is not giving the breakout of the 20-day moving average also. So which is a little bit cautious sign. At the current level, we are getting a little bit bounce back rally, which should be utilized to exit your long positions. If you're getting any bounce back rally towards to 2000 levels, I will suggest to exit your longs, because the stock has under the formations of the head and shoulder pattern, and if it gives the breakdown of 1800 levels on the downside, more selling pressure is likely to be intensified, which will take a counter towards to 1500 to 1600 levels on the downside. So on every rise, you should exit the long positions.
Okay, all right. So that's the view coming in on Shelly Engineering. The next one that we have is from Vandana, who's writing us from Bengaluru. She says that she's a long-term investor and she's planning to invest around 1 lakh rupees right now. Wants to know if this is the right time to invest into something like an Angel One or Groww based on today's market price. Astha, your view on any one of these, and which one of these would you choose?
I would like to go with Angel One, and the reason being, yes, in fact, the Groww has posted a very, very strong set of numbers. But what I believe that from the valuation perspective, Angel One is looking much, much better at this point of a time, because right now also we have seen a very strong jump in the prices of Groww. So right now, I mean, entering at this price is a little bit, over expensive, and hence Angel One is looking good to us. So one can make some entry into the Angel One at this point of time.
That view, Astha. But the next question coming in now from Jeet from Kolkata. His question between ESAB India as well as Grenville Norton. Swati, what's a better chart to invest for the next 6 months? What would you recommend?
Yeah, at the current level, if you look towards the ESAB chart, as of now, is under very good formation, trading in upward rising channel, but not suggested to take a long positions at the CMP. If you're getting any dips towards to 5400 levels are the good levels to take a long positions, not at the CMP. Regarding about the second counter, the counter has already shown a very small, strong rally from almost 1350 to 1650, well crossed above the 200-day moving averages. So the setup is really positive, but the risk reward ratio is not favorable at CMP. So wait for some more time. If you're getting any dips towards 1550, you can definitely go for a long position. So both the counter looks very positive on the technical front, but you should wait for some more time and buy on deep strategy should be implemented.
Got that view, Swati. The next question now, very interesting here from Prashant from Bangalore. He's taken a lot of time to send us this question in a very detailed manner. So Prashant, thanks so much for that. You can also call us, Prashant, speak to us because your analysis is on point. Now, Astha, he's holding shares of Dixon Tech and he wants a 4 to 5 year horizon. And as a very simple question, because Keynes, Amber, Sirma, the ROE and ROC profile is below 10% is what he's mentioned. Only Dixon is the one with a 30% ROE and ROC. Now, his question is it a good time to enter this particular stock? And what could be the share of this particular counter in his portfolio? What would your view be?
So yes, Dixon is looking very, very strong to us, and hence we have also given a buy call on this counter previously with a price target of 11,800 in our short-term portfolios. So now talking about Dixon, yes, the growth is very strong in the Dixon's. Especially if I talk about the smartphone sales, although we know that it has seen some sort of a dip in the last few months, but going ahead, we believe that Dixon is well poised to garner the opportunity which is present in the sector. And hence, we believe the kind of ratios which the company is posting is also looking very good as compared to the peers. So right now, Dixon is one counter in the EMS space, which we really like. Apart from that, Sirma SGS is also looking good to us. So both these counters, we are positive on at this point of a time. Now, if a person wants to enter into this counter, then I think around 10% of the portfolios should be given to this counter. So we are not giving more than 10% to this one space. I'm talking about the space, not a particular stock. So in that, Sirma and Dixon can be taken.
Okay, all right. So that's the entire perspective that we got on the EMS space. The next one that we have is from Shankar, who's writing us from Delhi. He says he's gone a bit overweight on his portfolio on banking and financial stocks. So his portfolio is spread across ICICI, HDFC, SBI, Bajaj Finance, Geo Finance, as well as Bank of Maharashtra. So 60% of his portfolio is in banking. Should I trim it down? What are the other sectors that I can look at? Asta, I don't think this is for sure recommended. What would you advise him to do right now?
So I think even banking space is looking good to us. The kind of numbers which we are seeing in the Maharashtra Bank, excellent set of numbers apart from the ICICI Bank number. So banking is one of the sector which continues to hold key at this point of a time. So there is no need to, cut down the allocation from this sector. Other from this sector, what we are really liking at this point of a time is the power. And hence one should look after that sector as well. So power in that Adani Power, Tata Power, NTPC, these are along with the power grid. These are some of our picks which we are recommending to our clients as well.
Got that view, Astha. But let's go across, take another caller now from Bengaluru. Raghuveer has a stock query for us. Raghuveer, good morning. Welcome to the show. What's your query?
हम आस्था के पास पूछना था. मेरा पर 1000 शेयर है वकार फार्मा का 1470 रुपए में.
और ये आपका लॉन्ग टर्म के लिए है रघुवीर?
हाँ सर, 3 महीने का पहले भरने बाई किया था.
अच्छा, ठीक है, समझ गया मैं. गॉट इट. आस्था, वोखाट पे रघुवीर जी ने 1470 में शेयर लिया है. आपका व्यू क्या रहेगा इस पे आस्था?
कि इसमें व्यू पॉजिटिव है और आप अपनी पोजीशंस को कंटिन्यू कर सकते हैं होल्ड करना। तो वोकाट फार्मा, वैसे हमें फार्मा स्पेस भी अच्छा लग रहा है और उसमें कुछ एक सेक्टर्स ज्यादा कुछ एक काउंटर्स ज्यादा अच्छे लग रहे हैं। वोकाट फार्मा की बात करें तो यहाँ पे भी मुझे ठीक ठाक लगता है ये काउंटर बने रहिए, क्योंकि जिस तरह के नतीजे इन्होंने पेश किए थे, जो तीसरी तिमाही थी वित्तीय वर्ष 2026 की, बहुत बढ़िया नतीजे थे। जैसे मैं यहाँ पे ऑपरेटिंग प्रॉफिट की बात करूं, जिसे हम कामकाजी मुनाफा भी बोलते हैं, सब में बढ़िया 20% से ऊपर की ग्रोथ थी। तो ये काउंटर भी अच्छा है और यहाँ पे भी बिल्कुल बने रहा जा सकता है, तो होल्ड कर लीजिए। वैसे भी आपकी कॉस्ट प्राइस कुछ बहुत ज्यादा दूर नहीं है, मुझे लगता है आने वाले दिनों में बिल्कुल ये काउंटर आपको प्रॉफिट देता हुआ नजर आएगा।
Got that view, Asta, but let's go across, take another call from Bengaluru. Pradeep has a very interesting stock query for us. Pradeep, very good morning. Welcome to the show. What's your query?
Good morning, to be with you all after some time. They regularly never miss out your program. See,
thanks so much for that, Pradeep.
100 shares of Avalon Tech, right, bought at 509.
Okay.
I'm a long-term investor, and the stock has more than doubled.
Right.
So I just wanted to know, for long-term, whether I should hold on to it or should I book profit?
Firstly, Pradeep, very good buy and very good price as well. When did you buy this? It's been a couple of years since you bought it and have been holding on since then?
Yeah, around 2 years.
And what prompted you? Because, you know, whenever we talk about EMS, we talk about Dixon, Keynes, Amber, as we spoke about with Asta. What led you to buy into Avalon? Because very niche company in that sense, right? So, and it's worked for you very well. But what led you to buy it?
See, normally when I go for a stock, I see the fundamentals. Basically, I see the fundamentals. So I was pretty satisfied with the fundamentals, and I thought there is some growth prospect, and it has not disappointed me.
Well, Pradeep, that is, you know, fair analysis at this point of time. The only EMS company also to have manufacturing in the US. But Asta, what would be your view on Avalon? Should he book his profit now, because valuations have caught up now with the fundamentals? But should he still continue to hold or exit?
So it is one of the leading players in the electronic manufacturing space. And what is the major attraction of this company? The kind of numbers they have. They are continuously posting. It is like, you know, more than 40% rise. If I talk about top line, bottom line, or operating profit, all three main line of items which we see in any financial statements or a P&L statement. So that is why I think this company has been able to garner such high valuation, because it is quoting at a price to earning multiple of around 75, which seems to be on the higher side. So there is no harm in booking certain profit in this counter, not the entire one, but maybe around 20 to 30% profit is booking is recommended at this point of time.
All right. Okay. So that's the view coming in on Avalon Tech. The next one that we have, and before I start taking the question, Sankar Narayanan has written that it's a remarkable service by NDTV team for experts guiding investors. So thank you so much for those kind words. I think these messages just make our day. So thank you so much for that. Basically, he's holding 50 shares of Schneider Electric at the levels of 755. He says that the prices have gone up in the recent time. At what level can I go ahead and add? Says that he's a long-term investor. Asta, I'll stick with you for this one. Schneider Electric, what's the view like?
So view is still positive in this counter, and hence we are recommending adding more at this point of the time, and maybe some at the lower level. So around the level of 1050 to 1061 can add more to this counter.
Got that view, Asta. But the next question coming in now, it's on Havells, and Raghuvan Srinivasan is actually asking us this question. He's holding shares at 1178, says that the stock's not moved in the last couple of years, which is the case. And he's just in minuscule returns right now. Swati, what would be your opinion on Havells? Because the fundamentals definitely have been impacted because of Lloyd's, amongst other key aspects. But what's your view on the stock now?
At the current momentum, view is definitely positive, because whatever the rally we have seen from 2024 to mid of 25, the stock has given the 100% retracements of those levels, and it has tested the 2023 lows. So the price correction has already happened. No wonder we will take some sort of a time corrections, but these prices are really attractive to take a long positions for longer term horizons. Short period of time, my target is 1450, and beyond that level 1550 levels can be seen. So definitely you can hold on your long positions, or if you you want to build up the long positions, you can go for at the current market price as well.
We've got our next caller. Anita is calling us from Hyderabad. Anita, very good morning to you. What's your query about?
Yeah, very good morning to all of you, ma'am. Thanks for, allowing me to ask the query. So I'm having SMS Pharma of 800 shares at the price of 390.
Okay.
So what is the long-term and the short-term view on this? And recently it hit the new high 440, but not able to reach that point again. So, yeah, what is the short-term view to sell this? Or if I can able to hold long-term, what is the target?
Okay, Anita, so when you bought this, you saw the charts basically while buying it, correct?
Yes, ma'am.
Okay, got it. I'll stick with Swati for this one then. Swati, it's a fairly small company, 3,800 crore of market price. Basically, it is into integrate interest in active pharmaceutical ingredients, that's API and intermediates as well. But any view on the charts? What she's saying is that it hit 440, but it's not able to bounce back on those levels. Do you think that's possible in the charts?
See, definitely the view is positive and 440 levels can be seen, but not in for a short period of time because the counter has already reached the overbought zone, and from there onwards we have seen a negative divergence. And the stock has given a very strong rally within a period of 6 months from almost 330 to 450 levels or 447 levels. So the profit booking cannot be denied. So I will suggest to book your profits at the current market price as your buying price is close to nearby itself, and we are likely to hit the lower levels of 370 to 380 levels. So again, you can re-enter into this particular counter. So at the current momentum, book your profits. Any dips towards to 375, 370, you can again go for a long position in this particular counter, and the immediate target will be a 440, and beyond that levels, 500 levels can be tested.
Got that view, Swati. Swati, I'll stick with you for another one on Info Edge. Harsha from Vijayawada, who's now a regular viewer, is holding shares at 1,299. What should she do with her 75 shares? Stocks down 20% for this year. What would be your view?
See, at the current levels, definitely you can hold on to long positions because the counter has given a cluster's resistance of 1,040 levels, and it's trading in the pattern of the low tops, high tops, high formations. And definitely this kind of a correction, after such kind of a corrections, a bounce back rally is expected towards to at least 1,200 will be the initial targets, and beyond that 1,250 levels can be seen. So no need to book your losses. Definitely the rally is likely to be extended towards to 1,200 rupees. So you can hold on to long positions.
Poonawalla FinCorp is the next one. Our viewer, Jonah from Hyderabad, is holding 400 shares, bought at the levels of 388. What she's saying is that she already has a lot of banking and NBFC names in her portfolio. Can she continue to hold this from a long-term perspective, Asta?
Yes, one should remain invested in this counter because what we believe that this quarter we can see some good numbers from this space, and hence Poonawalla FinCorp is among those counters where we can see some good numbers coming ahead. So there is no need to exit at this point of time. Just wait for the numbers and remain invested in this counter.
2,500 crore QIP also very recently completed by the company at 370. So something to watch on Poonawalla FinCorp. The next question coming in now on Bluestone. Shivani from Mumbai actually is holding shares at 479. So stocks up from those levels. Now her question largely being, what is the next target for this particular counter? Swati, what would you recommend?
I will recommend to hold on your long positions because the stock is under the formations of the patterns, and it's a W-shaped patterns on the weekly chart as well. So for immediate target, I'm looking forward it's 600, and if it surpasses those levels, then 690, 700 levels can be seen very soon. So you can definitely hold on the long positions. If possible, keep a stop loss of 500 rupees and carry your longs.
All right, okay. So that's the view on Bluestone. The next one, I think we've got a caller. Aruna is calling us from Vijayawada. Aruna, very good morning to you. What's your query about?
Very good morning, ma'am. Thanks for receiving my query.
Our pleasure.
I'm planning to buy Biocon.
Okay.
I'm planning to buy Biocon, ma'am. So recently it just hit the 338 low, and basically what is the short-term and long-term view on this? And if I want to buy, what is the right price to buy? And what is the targets for short-term and long-term?
Okay. Aruna, so basically I want to understand, are you seeing the charts for this one, or are you seeing the fundamentals of the company while you plan to buy it?
Just I have seen the charts, ma'am. Not much idea on the fundamentals.
Got it. Aruna, I got your question, and I'll take this up with Swati then. Swati, do you think this is the right time to enter back on seeing the charts?
Yes, Mahima. If you look towards a longer term horizon data from 2023, the counter is under the form trading in the pattern of the high tops, high bottoms, upward rising channel, and it had tested the lower trend line of that particular channel, which comes to nearby 340 to 330 levels. So at the current market price, I will suggest create a long positions, but 20-30% of quantity is only recommended. If you're getting any dips towards to 340 levels, you can add on. The short term target I'm looking forward to is 400 levels, and beyond that 470 levels can be seen. So at the CMP, you can add on at least 20-30% quantity.
Got that view, Swati. The next question now coming in again. It's on Sundaram Fasteners as well as another stock, but Satyan, you know the drill, one stock at a time. He's asking now that what he should do with this particular counter. He is currently sitting on a loss of almost 12%. Astha, on Sundaram Fastener, you know, we saw the company when they sold one of their key business verticals a few months ago. What's your view on the counter now? It's not very fast moving in that sense, right?
Right, absolutely right. And in fact, if I see the numbers also, so from the numbers perspective also, we are not very much, encouraged by this counter. And hence, I recommend just try to exit from this counter at every higher level. This is what I'm recommending right now.
Okay, all right. So that's the view coming in on Sundaram Fasteners. The next one that we have is on CleanMax. This is from our viewer, Guru Datta was writing in. He's got 1750 shares, bought at the levels of 995. Can he continue to hold? 1 year is his time horizon. Astha, your view?
Yes, CleanMax is looking good to us. This is the company which came in with the IPO recently. And what we believe that the kind of business model this company is having, it is a very strong business model and we are expecting strong set of numbers also. Remain invested in this counter with the price target of around 1150 at the initial level.
Got it. We cannot not ask Astha a question on IPOs, and especially when Astha is the guest, we definitely get quite a few of them. So it is pertinent that we take one with you, Astha, at every point of time. Cohance is another one where our viewer Manoj from Mumbai is holding shares at 500 and he's holding 200 shares. Now he's not mentioned if he wants a technical on a fundamental view, but asking what's the road ahead. Now, Swati, massive correction has been seen. Is there a better upside from your on?
Same. Slowly and steadily we will witness some sort of a move, but not at the current market price, because already from 270 levels to 380 levels has been seen, and the stock has showing a negative crossovers from the oversold, overbought zone. So we might witness some sort of a profit booking in this particular counter, which can be test the low of at least 340 to 330 levels. So long positions are not created at the current market price. If you're having, just maintain the strict stop loss of 355 levels. If it's break those levels, that more downfall can be witnessed. So wait for some more time to create a long positions.
Got that view, Swati. But time now for the rapid fire round in this edition of Ask Profit. Astha as well as Swati, you know the drill. Keep your answers as short as possible. The first question coming in from Satvik from Lucknow. He's holding 125 shares of Varun Beverages at 661 though. What should he do here? Swati is asking if he can hold for another month, but any chance of coming back to that price?
It will take some more time, not within a span for 1 month. For 1 month, for 520, 530 levels can be seen.
Okay, the next one is on Shipping Corporation of India. Sri Kumar has bought at the levels of 320 and 300 shares is what he is holding. Whether to hold or not, viewing the chart, Swati, what's your view?
You can hold on this particular counter, but if you're looking for a short period of time, just keep a stop loss of 290 rupees on a downside. Pullback rally can be witnessed to 320 on down.
Okay.
Mahalakshmi is holding ABB at 6,422. Astha, what should she do with her 150 shares?
Right now, we are positive on this space, so book only 30% or 40% of the profit and remain invested in the rest one with a price target of 85%.
Canara Bank, are these the right levels to buy? If not, what levels to watch out for to buy into this counter? Swati, your view?
I would suggest to take a long position at the current market price. 30-40% are recommended. Any dips towards to 135 should be also the good levels to take a long position. The immediate target is 160.
Indraprasth Medical Corp, Astha Nagababu is holding shares at roughly around 400. What's the long-term view on the stock if you track it?
Medical Corp is a long-term view is not very much attractive because I believe that valuations are not that strong. So rather than move to other counters like we have already discussed, Apollo Hospital, etc.
Okay, BEML 140 shares bought at the levels of 1630. Saidranath from Hyderabad is asking this. Wants to know if he can go ahead and book profits on this one. Astha, your view?
I think BEML is a space where one should remain invested in. If there is no hurry of booking profit, then remain invested with a price target of 1850 to 1900.
Okay.
Bank of Maharashtra bought at 68 by Sudhir from Bangalore. He's asking if it's a good time to book profits now, Astha. Would that be your view or continue holding?
We have recommended this counter, so we are still positive on this counter with a price target of 90 to 95. Remain invested in this.
Okay, Gale bought at the levels of 158. 350 shares is what our viewer is holding. Continue to hold. Swati, or book out. What's the view on the charts?
I will suggest to hold on Mahima for a target of 170 rupees, and you can keep a stop loss of 156 rupees on the downside.
Okay.
Sunita from Hyderabad is asking on Urban Company. She's bought at 193. We took the fundamental view with Astha, but Swati on the charts, she's asking if she should average now.
Not at the current market rate, but definitely if you're getting any dips towards to 125 to 120 levels, you can think about it, not at the same.
Okay, the next one is from Sunny. He's asking about ABFRL. He's bought 1,000 shares at the levels of 62. Good time to average. Astha, your view on this one? This query is for you specifically.
Maybe at the lower level, but yes, ABFRL is looking good to us with a price target of 70 to 72.
Okay.
The next question coming in now on Wipro at 204, holding 800 shares. Should he hold on or exit, Astha?
Wipro, hold on. This is what we are recommending.
JSW Energy from a 6 months perspective, buy right now, wait for the dip. Swati?
I would say just wait for a dips towards to 530 to 520 levels. Upside target is 620.
Ashok Leyland bought at 163 now. Should he hold on or sell out? Swati is the question.
I will suggest to hold on. Immediate target 200 rupees and keep a stop loss of 170 rupees on the downside.
ITC 100 shares bought at the levels of 378. Sanjay wants to know whether to book loss, hold, average. Astha, your view?
Right now, just hold this counter.
Alright, so that brings us to the end of this round of rapid fire as well as Ask Profit. Swati and Astha, thank you so much for helping us answer all those 61 queries that we managed to answer in this last 1 hour. So thank you so much for that. But viewers, completely out of time on Ask Profit. But do stay tuned. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
कुछ बड़ा होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence, and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. And also let's talk about the overall companies which I'd like to get in KYC. It's a very interesting company which I have got for you, but I'm not going to give the name right now. I'm going to give you some hints. Try to guess it, and it has been a flavor when the IPO had come. It's a Delhi-based pre-engineered building related products company. Also, let's hold on and let's give you some more hints about this. It's the second largest PEB player in India. I'm sure a lot of you must have guessed by now, but I'll give you more hints also for those who can't guess. As of now, it was listed recently. You could say it's just been 1 year plus listing, but from the listing price, which is the IPO price which I have taken, the stock has moved more than 2 times from its IPO price. Very interesting company. It's a niche and also a market leader. But what is the company in focus which we'll be talking about? And recently the company has been getting a lot of orders. The company in focus is Interarch Building Products. This is the company which we are talking about. During its IPO 1 year ago in 2024, there was a lot of noise about this sector and its growth profile, but definitely that noise has come down. So is there any value coming out from this? That's something to know about. But what are the key questions? Why are we getting this company? Of course, the company has been getting a lot of orders. That's the first reason. Recent order wins coming in. What are the key updates and the timeline from this? And of course, the order book status is something which we'll ask about the Interarch company. The PEB industry, what are the bottlenecks and how is the company mitigating this? Of course, now we are getting a little bit of discovery about the industry as well. It's one of the good times to study it as well. The industry tailwinds, the market share picture for the organized player, and where does Interarch Building Product stand? That's the key question to be asked. The timeline for the commissioning of the Gujarat and Andhra Pradesh facilities, will they be completed by the second quarter of FY27 or is there a delay? Also, current capacity utilization and the capex earmarked for the next 2 to 3 years. And remember, most of its sales is coming through the infra and the industrial segments. Of course, we'll ask the demand also and the incremental benefits to the margins, especially with a lot of automations at play. Does it actually convert into incremental help in the margins? That's something to know about. The important growth targets for FY27 and the expected industry growth rates. Remember, the company is under the silent period also because the Q4 numbers are not out yet. And any new product foray plans, if yes, in which areas? That is where we are looking at, where the growth momentum can be for the company. And to give us more details is company's MD Arvind Nanda. He will speak about the growth prospects of the company and the industry as a whole, and it will be very interesting to have this conversation for Interarch Building. But before that, let's understand what are the key details about the company which should be in your radar. And first and foremost, I would like to give you a perspective that it is a new, you could say a new area has come in, that is the pre-engineered body segment, and in that it's a market leader. The company does steel construction solutions in India as well, international expansions, we'll talk about it a bit later. Integrated facilities they have where there is installation, erection and the pre-engineered steel buildings. जो बने बनाए building होते हैं, if you call it in a very simple word, that is what we talk about it. It's the second largest integrated PEB player, and that's almost 2 lakh plus MTPA is the capacity. Now the company is having 5 manufacturing facilities. It includes Uttarakhand, Andhra Pradesh and Tamil Nadu as well, and one facility is also there in the state of Gujarat. So this gives you a little bit of perspective, bird's eye view about the company, and interestingly, I feel the moat about the company is this. They have 155 qualified structural design engineers and detailers. That is where the moat generally comes in, and you get better clients and of course better margins in an industry which is highly unorganized. Now 3 orders. Recently they have got of 222 crores rupees in last 1 month, and last 1 week itself 2 orders had come, one of 80, one of 60 crores. The acquisition and registration for freehold industrial land was there in Gujarat for its expansion, so that was a recent news flow, and that's what also triggered my interest in the company. And company recently did 100 crore rupees QIP raise as well. Of course, it will be used for their expansion of the 2 facilities, which we'll discuss more. But this is the recent news flow for Interarch Building. But the total order book as on 31st January stands at roughly 1685 crore rupees. This is an important data, do note it down. Apart from this, let's also talk about how the order book breakup looks like. Industries is having roughly 83% of it, so the majority of this is in the industrial front. But the remaining 13% comes in from the logistics, and only 4% comes in from the infra segment. Also, apart from this order booking, let's look at the key tie-ups and clients, and that is where the alpha might lie going ahead. It's not incrementally or quantified yet. The first one is the export presence in the strategic collaboration with Mold Tech. So that'll be pretty much interesting what this is all about, and the strategic partnership it was there with the Jindal Group for urban infra as well. Now, of course, the company would be focusing in the multi-story buildings and heavy building structures as well. So that is something which we will be watching out for. We have already understood the industrial part. Now maybe the residential part is something the company might be focusing in. Clients are really big, large group are the clients. That includes Reliance, it includes Asian Paints, Unilever and Grasim, to name a few. So definitely the company is in the right direction, at least in their industry, and they are one of the key players as well. But let's understand this market, how big this market is and what's the growth rate looking like. The PEB market, it's roughly around 33,000 to 34,000 crore estimated by the end of FY29. And if you look at the segments, how the performance has been, the CAGR growth is strong. Right now the company is focusing mainly on this segment, which is growing at 10 to 11%. But in the future, of course, infrastructure and building is also supposed to be showing a good double-digit strength when it comes to the overall market. So yes, there are sectoral tailwinds as well. But why is this company out of favor? It was once the darling in 2024, but now it seems FIs are trimming position. That's what at least I saw sequential basis. The second reason the stock is out of favor is valuations still remain expensive. Maybe the street is not giving that premium valuation which was being given during the IPO time. Street is concerned about the growth rate moderation, and why that can happen, that's also a reason I would like to point out, is it is still largely an unorganized sector. The organized sector, it's taking time, so it's going to take time until the company actually displays its supremacy, and the competition is coming in from the unorganized players as well. The question remains is, where is the moat? Is it the talent? Is it the automation, R&D? What is it that the moat is there for the company? And of course, the sectoral interest for this segment is out of favor as of now. And of course, in this recovery also, not much has been seen for the stock as well. But is there any alpha remaining here? That's the big question, and that's why we have got our KYC ratings to understand more in details about Interarch Building Products. Is the pain bottoming out? And because of that, we will be studying income statement, balance sheet, cash flow. This is the holy grail for financial ratios, and also the return ratios. Remember, it's a high return ratio business as well. Earlier in the IPO also this was told, and we see the numbers. So shareholding street trade, remember, the overall time is roughly, you could say, 12 to 16 months in our analysis. कंपनी में सिर्फ एक साल से ज़्यादा का listing जो है हुआ नहीं है. Valuations will be very much interesting to have a comparison, but these are the small cap players, so that's caveat to remember. And the outlook, what the numbers they're expecting or what's happening, and largely it is qualitative, so we'll try to understand in case any quantitative outlook comes in from the management. But these are the important parameters where we will be judging the company. And the first parameter is the income statement, and the numbers we have taken from FY23 to FY25, the 3-year CAGR numbers, and look at the top line numbers. 20% 3-year CAGR coming in. EBITDA and PAT, that is where we are seeing alpha. So the company has done really well when it comes to PAT, EBITDA and even revenue. Looking at the metrics for the third quarter, because the fourth quarter numbers are about to come in some weeks, the sequential numbers, there was a decent up move, but the year-on-year numbers have been strong for this. However, a little bit of margin pressure is definitely there. But remember, there will be some questions to be asked, especially on the financials front, but it is a silent period. So that's one perspective to look at. But company has maintained that 9.5 to 10% EBITDA consolidated margin. So that is doing well for the company as well. It will be pretty much interesting to understand what will be the next growth lever for the margins to go up. But net, it's a very strong setup for the income statement. So I'll give a thumbs up when it comes to the income statement. Let's look at the balance sheet. And one interesting thing about this balance sheet, the most important thing is company is debt free. And largely this is pretty much decent. There was a QIP fundraise also. That means in future, the next shareholding pattern update, we will see the promoter stake going down. But the most important thing is the borrowings front. And this is something which is a good unique selling point of the company. That is that the debt levels are zero. And the way they are going about it, it's very much important that their cash flow management would also be strong. And speaking of cash flow, they're having a 200 crore cash as for the end of FY25. So is there any acquisition at play, or is there any expansion at play? They'll be able to fund it internal accrual as well. So it's a balance sheet is also very strong. So I've given income statement and balance sheet, both of them a strong thumbs up. But let's see what's there for the cash flow segment. And largely we see the cash flow management is pretty strong in this kind of a business model, and what the company has. The operational cash flow to PAT ratio is pretty much decent at 50%. And even the net cash flows and the operating cash flows are decent as compared to the other years as well. Whether there is any lumpiness involved in this business, that is something which we'll try to understand when we decode this model. But now, as of now, it's a neutral rating when it comes to the cash flow segment. But let's go into the return ratios. And I had mentioned you earlier that the ROC numbers are very strong in this kind of a business model. 30% plus is something which you are looking out for, but a minor decline has been there. Now, will this decline be arrested going ahead, or will there be a little bit of more pressure? Remember, expansion is also going on, so you can expect ROC numbers slightly to be depressed at least for the next 6 months or 12 months as well. So net, still I would say for a business model like this and the ROCs which are coming to you, it is a neutral rating as well. But let's talk about shareholding, and a little bit of concern definitely comes. 59% was there in the month of September. But of course, because of the QIP, this number will be coming down. FIs, they increased the stake a little bit, then again they sold it off, and it's at 5%. But on the other hand, there is a way to look at it. That's the DIs. DIs, on the other hand, have been lapping up stake, though it's lesser from the 7% which was there. But nevertheless, there was a movement in this quarter. That is where the interest comes. Is the smart money coming back in Interarch? So because of that basis, I'll be giving this a neutral rating when it comes to the shareholding. But apart from shareholding, let's talk about street cred, how much money has been made for a long-term basis and also for the short-term basis, and see what has happened. Remember, 2024, the listing was there. So from the IPO, if you are holding the stock, congratulations, you have made money. The stock has given you more than double returns. But apart from that, last 1 year, it's been a decent 11% up move coming in. From 2025 highs, the stock is still down 24%. And the question remains is the valuations turning favorable, or it's better to stay away from this counter? And year-to-date basis also, the stock is down 14%. So for IPO investors, congratulations, aapne paisa banaya. But for the medium term and short term investors, it's still going to take some time. So net, it's a neutral rating when it comes to the street cred. Now I'll explain you the valuations, and very interesting companies have also come on my radar. Penar Industries is there, and there is EPAC Prefab also. Largely, Interarch is having valuations which is higher than its peers. But that doesn't mean is it very expensive. Remember, from its peak levels, there's always a correction of 20 to 30% in their premiums as well. But maybe it's a market leader. It's the second largest player in terms of capacity in India, the organized one I'm talking about. So that's why it is having a slight premium advantage, and it's justified. But is it justified for an investor to come in? We need to think. So it's a neutral rating when it comes to the peer comparison part. We spoke about 7 rating parameters. The last one I'm going to give you, this is the outlook coming in for the company as well. Now the Gujarat, Andhra Pradesh facility, that's expected to be commercialized by the second quarter of FY27. And also the company is undertaking a lot of automation initiatives. In this industry, automation does help a lot, especially if you need to bump up your margins. The enhanced manufacturing presence in South, Eastern India and Western India, that is where the focus is. Remember, this is a Delhi-based company, so in the central areas and the north areas, they definitely have a good presence. Now, upgradation of their Kitcha, Pantnagar and Tamil Nadu manufacturing facilities, that's also pretty much important. Whether this is the capacity push or is there something else, that's something to be understood. And foraying into multi-story and heavy steel structures, this is a new area. So we need to understand how this business model works and what would be the incremental benefit in terms of the numbers. So let's give you the entire perspective. Outlook of course is a strong thumbs up, but एक revision हो जाए. KYC ratings में हमने क्या-क्या दिया है. So let's understand the income statement, balance sheet has been really strong for this company. Cash flows, it's pretty much decent. Return ratios, it is slightly dipping, but nevertheless still holding that 25% plus ROCE mark. Company is going through some spending, so ROCs might be depressed in the coming time. Shareholding, of course, FIs are selling, DIs are buying. On the other hand, street cred for IPO investors, it's been a great returns, but after that, it has been a bit downhill. Valuations, it is slightly premium, but the street also needs to understand and give a valid valuation for this industry, and this seems to be out of favor. It was not out of favor in 2024, and outlook was good. So net, I have given on the higher side of the average earnings or the average ratings which I give. That's coming in at almost 5.5 out of 8 for Interarch Building. And also on the other side of the break, we'll be having a chat with Arvind Nanda. He's the Managing Director of Interarch Building, to understand about the overall industries and what he does. Of course, he's having a 30 years experience in this industry, and also he's a qualified CA for both UK and India as well. So a lot of conversations just after the break. Stay tuned.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What?
Welcome back to KYC, and we are in talks with a very interesting company for KYC. Joining us is Arvind Nanda, Managing Director at Interarch Building Solutions. Good afternoon, Arvindji. It's always a pleasure to have you. And a lot of order flows has been announced by the company, almost 3 big orders coming in the last 1 month or so. Just wanted to understand what are these key orders all about, and by when can these realizations start coming in?
Thank you very much, Sharad. Well, these orders have come in recently. So our normal starting point for any new order is about 3 to 4 months from the date of the order. That's the time it takes to get the drawings approved, material ordered and go into production so that the supply can start. But this is a part of a pipeline. So it's just a new order that we have booked. They will certainly get executed in the next 12 months. So they should be a part of the FY27 figures, not earlier. So there have been a lot of new inquiries, good inquiries. These are from auto sector, also from the news heavy structure sectors that we are talking about, which means a little on the high-rise building side. So these are multiple sided orders, and we are very happy to note that the serious large inquiries are still very much there in the market, and in fact, the space is only picking up going forward.
Of course, Arvindji, we spoke about the order inquiry, and of course, it seems from our conversation that client confidence remains strong. But of course, right now, there is a silent period as well. So we won't be asking a lot about numbers, but we want to understand the strategy and the thought process behind running a business like yours. There are some bottlenecks in the industries also. How are these bottlenecks there in the industries, and how is the company mitigating these bottlenecks in your industry?
See, I have been personally involved with this industry for over 25 years now, 26, and in the architectural building products like metal roofing and ceiling for over 40 years now. So you can imagine from 1984 to 2026, there have been multiple issues. Whether it's a war, whether it's economic collapse, Indian economic collapse in the late 80s, foreign exchange crisis, no companies coming in, 2008 serious crisis lasted for many years. So we have gone through multiple crises. So we always look at Interarch as a company which has a long-term view. And in the long-term view, I have always believed, I'm not from a business family. Me and my partner both are from government servant families. My father was in the railways. We have no business background. So we have always tried to maintain that let's build a strong foundation. Let's give the customer the best product that we can give him available in the world, not only India, but available in the world. And let us deliver to him as we promise. And let us work with the top class companies in the world. So in India, when we work with companies, they are the top in the world. Because from there, we also learn a lot and we become good partners to them.
Exactly, Mr. Arvind. That's an interesting take on that. But I just was checking the numbers. 75% of the revenue in 9 months was coming from the industrial manufacturing segment. Any kind of a minor slowdown we have seen this, in the recent coming months? Of course, the current situation, there was an LPG shortage, workers going out, and also some issues in the NCR region. And of course, you have a good presence in North India. So is there any delay in inquiries coming from customers, or is there any impact in your industry or your company?
Well, I think the impact is more in sort of delivery, because a lot of workers get involved when the material goes to site for installation, for example. There we work with certified builders who have their own people and get their own resources. So there we are facing a challenge for last 2 or 3 months. First the election challenge, but that is again a part of the cycle in India. Some harvesting, wedding season, monsoon, these issues do come up. At a factory level, no, because factory workers are stationed at where we are. They don't really face any problems, and we look after their issues reasonably well. But yes, these issues have been there. I think manpower has become a major issue in the last couple of months. But we hope that after the Bengal elections, it will get resolved. LPG issues are getting resolved. And the contractors have also learned to take care of their people better. But from the inquiry side, no. See, the clients we deal with, they are very large, long-term companies. A company like Asian Paint or Grasim or Tata Micron or Excite Battery. These guys are very long-term. They don't go by the seasonal up and down or even an annual up and down in the business. It does affect the sentiment, no doubt about it.
Right.
But we have not seen any downturn in inquiries.
Right, Arvindji, that's a very interesting point, and you have clarified it also for the industry as well as for your company as well. And of course, there is no impact coming in on the company or the factory level, and at least no impact on the inquiries as well. I just want to understand a little bit about your tie-ups. There are 2 tie-ups which was very much interesting, which is already there in the public domain. One is with JSW Group and another is the Moltech. So what are the actual benefits like? And of course, you cannot give us any timelines for it because it's not a publicly given information. But what kind of benefits we can understand? You could just give us a qualitative angle to it.
Okay. The tie-up is not with JSW, it's with JSPL. JSPL has a fabrication company where they manufacture structure for themselves primarily and also for others. So we had a tie-up with them because earlier, till our own heavy structure plant comes into play in June, July this year, the heavier structure items were very unproductive for us to make. So we had a tie-up with them because there were orders that we had in the last 2 years where we needed those so-called heavy structure items. So JSPL was our partner for supplying us that on a periodic basis when we needed them. That is still there, but I think once we have our own plant running in June, July, that of course will sort of die a natural death. But it is always there that we can go back to them if we have additional quantities to buy. Moltec is another one. Moltec is a very advanced technical engineering detailing company which has its base all in America and Canada and Europe. They don't do any work in India. So to tie up with them was primarily because they have a lot of clients who work out of US and Europe, and they want pre-engineered buildings, drawing and engineering to be done.
Right.
So
right. That's a pretty interesting take. Arvindji, another question I have is, you spoke about a lot of automations which are happening in the company, and a lot of investors ask, what's the moat of the company? Of course, you work with great people. You have been in the industry for 3 decades. Just want to understand what is this angle of automations, and can this be quantified as a benefit for the company? I don't want the number, but will this be margin accretive, and why?
See, the quality is always a very important issue. Normally, when we automate, we are doing it to improve our quality of the product. And quality of the product will always remain a moat. So that has been from the beginning that whatever is the best available in the world, we should be giving our client, whether it's from technology point of view, whether it's the product point of view, whether it's even the painting, the primer, welding. So technology upgradation is done more to keep up with what is the best in the world so that we can offer that to our client. Of course, it makes for faster production. It improves the productivity of our existing workers. Therefore, we can deliver better and faster to our clients and improve the total production out of a same plant. So that is the reason why we automate. And there are a lot of areas that one can automate in steel fabrication. And we are constantly working on it, but keeping a balance that automation should not displace a lot of our workers. We keep expanding so we can use the workers wherever we go and in expansion. And number 2, it should not increase the cost so much that we can offer a European standard product.
Right, Arvindji. Right. I just have one last question for you. Is there any new product forays or product lines which are looking good so that the company will be starting or entering into? If you could just give us a glimpse about it.
Well, heavy structure is a very, very important area for us because that puts us into a different category where we can do data centers, high-rise buildings, large semiconductor plants, steel plants, fertilizer plants, power stations. So it puts us in a completely different aspect of the steel buildings. Second is exports. We are trying to build up large partnerships with US, Canada, Africa, etc. to supply buildings to them on a supply basis, engineer supply. So we don't get involved in erection, but that is the 2 new streams that we are looking at, and we are building up capacities for that very fast.
Right. That's a pretty much interesting take, Arvindji, for the company as well. And of course, you clarified that the inquiries remain strong for the company and the industry tailwinds continue. Thanks a lot. And it's always a pleasure to have you and a market leader in your segment to talk about the industry and the company. So that's the management we are talking about of Interarch Building Solutions, and they have clearly maintained that the large inquiries are still intact despite a little bit of minor tailwinds happening in the India's industrial front. To get all these important companies in KYC and take out the real alpha, you'll always be joined by me on the weekdays at 11:30 to get in new news for these companies in KYC. So stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ बड़ा होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only.
Dalal Street rejoices amid hopes of peace being brokered at Islamabad talks. Nifty stays above 24,500. Sensex jumps more than 600 points. Real estate IT lead the gains with all major sectors in the green today. Karnataka is rewriting the liquor playbook. Cheaper alcohol gets costlier. Premium spirits get tax relief, potentially cutting the prices by up to 20%. Brokerages see United Spirits and Radico winning on volumes. All eyes on Nestle's Q4 numbers. Street expects mid to single-digit volume growth, even as margins could stay under pressure from higher advertising and staff costs. India and United States are set to begin a crucial round of negotiations from today in Washington, D.C., aimed at advancing the first phase of the proposed bilateral trade agreement amid shifting global tariff dynamics. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar. Let's take a look at the markets. And yes, it's a good day of trade today with some bit of sanity coming in on the negotiations restarting in Islamabad. And that's the cue we are also getting from the global Asian markets, which have been giving positive cues. And that's reflecting and rubbing off on the Indian markets well, and therefore Sensex and Nifty both are gaining in trade, and in fact it's an across the board gain that we are seeing. Almost all the sectoral indices are in the green, barring just pharma, which is on the flat line with just a tinge of negative bias. But otherwise, remember that the advanced decline ratio should give you a good picture, which is trading in the range or the ratio of 9:3, and therefore that particular rift between the greens and the red is really maintained throughout the trading session, at least in the early session today. When we take a look at the broader markets, it's mid-cap 100 universe, which is 0.83% up, slight outperformance to the key indices. When we talk about the banks, which is outperforming, so if you really take a look at the contribution chart for Nifty 50, it is the banks which are attracting the capital, which is really pumping up the key indices today. So that's the important bit to also note. HDFC Bank ICICI Bank are the top leaders in trade. And remember, banks are the quasi-investment into the economy. Now, oil prices, they have been acting up and becoming the largest single factor that has impacted Indian money market as well as the equity market. While money market, with a slight bit of withdrawal from the measures that RBI was taking, rupee is today depreciating in trade. It's a slight adjustment, but largely stable, at least from that momentum that has been broken when it comes to the overall momentum of depreciation. But crude oil prices marginally softer today on expectations of probable negotiations. All right, Nishal Maheshwari joins in. Nishal, always a pleasure to welcome you on NDTV Profit. Do you think that market is showcasing that worst is behind us?
Afternoon, Nisha. Thanks for having me on the show. Looks like basically, I think market is now factoring in saying that, yeah, there is going to be some amount of negotiations and market is factoring in saying that we are not going back to the 2 weeks back war and bombing on each other countries. I think this is what the market is today giving you kind of an indication.
That's right. Apart from the defense play, Nishal, do you also have a view on the shipping and global transportation? Is that also going to see some relief and probably a theme could be building there?
So too early to say basically, because even if the war comes to an end, I think it will take some time for these things to build out, given there has been extensive damage, especially to the oil assets in the Middle East. So I think reviving and transportation getting it to its full thing, I think it will take at least a couple of months, if not more. So I think one has to be a bit cautious, circumspect, because those are the direct impacts. It's not a second derivative, basically, where I think things are going to become smoother much faster.
Right, and how do you play the large caps, Nishal, at this point where a lot of them, and with Nifty 50 also now reaching 1 month high levels today. It touched upon that yesterday as well, but gave up gains. So how are you seeing the momentum when it comes to the blue chip counters, and especially with HDFC Bank also recovering a large part of the lost ground?
So I think banks do continue to have a good amount of value. But then it has been so basically for the last 1 year, and the banks have continuously underperformed. At this point of time, I think the private sector bank is cheapest in the last 10 years. Both HDFC, ICICI at 2 times. I think ICICI 2.3 times. HDFC is around 2 or lesser than 2 times kind of a price to book. And today, HDFC is at 25% discount to ICICI. So I'm saying these kind of situations we have not seen in the last 1 decade. So, or even more time, basically. So, yes, great value here. But the issue is basically that the FIs, if they continue to come and sell India, these are the 2 largest holdings they have. And they come and sell that only. And I think that's why the underperformance.
Right, but Reliance Industries also has been muted for quite some time and has had a fairly volatile kind of a session in terms of also the trade-offs, global trade-offs in terms of the India play. But at this point, earnings season has already begun. We are at the initial stage. What's the sense you're getting, and what's your outlook on these earnings and the next, if the war continues at least for 1 more month, there will be some impact. What's being baked in, according to you, Nishal, and what are the factors at your on your radar for this?
So I think market is baking in too much of an issue, basically, as far as earnings is concerned. We really cut on the Nifty side, basically, there is hardly any direct impact. Whatever impact the oil marketing, the oil companies will have, basically, because of this, I think it will get compensated by the metals side of it. Banks and all, I think the numbers have been pretty good, and at least for FY27, things seems to be okay. IT, I think it's already been cut. Oil is where I think the impact could be. So I think maybe at the moment, I think the market is discounting too much. Most of the people have cut their earnings of FY27 to 10 to 12% from a 17, 18% kind of number which they initially started with. So I think it's been overdone. Over the course of the year, if the war ends now and it doesn't get extended, I believe basically you might see some upgrades in numbers.
All right, some upgrades could also come in, Nishal, but all dependent on the war situation. And it's quite a vitriolic situation over there on the flip-flops in the negotiation as well as the stance taken. But my final question to you, Nishal, on other factors that are going to impact the market for the next 6 months going forward. So, of course, weaker than expected monsoon is being also talked about. Second, the on-ground inflation, apart from impacting the company's raw materials, if the war continues, but also the consumer demand could be at play to be watched out for. Any other factors and your view on a summation of factors at play?
So I think maybe monsoon we have to see how it all pans out because there could be worse than expected. Now there are two things where IMD has come and said it's going to be worse, and there is a private company basically which has SkyMed, which has said that it's going to be normal or above normal. So I'm saying basically this is a toss, and we have to see basically how the monsoon plays out. Maybe initially the monsoon may not be very strong and thereafter it comes in. So let's see how it plays out. But yes, monsoon is the only issue which I see. I think all other factors seems to be pretty well discounted. Inflation doesn't seem to be very much of a cause of concern for India. Oil prices at the moment, government has been able to maintain, and if the war gets over now, I think very little impact as far as oil is concerned. So overall, do not seem much of an issue basically at this point of time. Yes, I agree with you. Monsoon could be a spoil spot.
Right, so Nishal, monsoon, and also remember the urea shortage because of the war situation that's impacting the fertilizer sector. Those two are the watch areas because they both together can really impact the agrarian part also. Thank you so much for joining in with your expert take on the market momentum. All right, moving on. India is gearing up to really scale its semiconductor ambition, and the government plans a larger retooled ISM 2.0 by May this year. Now, with a significantly higher outlay and also a wider ecosystem focus, from chip design startups to equipment, materials, and even JVs. Now, the push signals a faster march towards a 75% chip self-reliance by 2030. That's an aggressive and ambitious target. Rishabh is joining in with all the details of government's plans. Rishabh, tell us.
Absolutely. What we're getting is some sort of contours and the details of this much awaited ISM 2.0. And this has been a long-standing demand of the chip sector that wants to be developed here in India. What we can expect is by May, the ISM 2.0 to be rolled out. What you have is MeitY already conducting interministerial talks with several stakeholders, with several ministries, including the finance ministry. This is expected to have a 30% higher outlay. So ISM 1.0 was roughly 76,000 crores. This one could be anywhere between 1 and 1.2 lakh crores. So 30% up is what you're seeing, given that ISM 1.0 was very successful, largely in terms of commissioning about 10 chip facilities. Under ISM 2.0, you'll also have DLI 2.0, which is the design-linked incentive scheme. That will support up to 50 new deep tech firms that will be rooted in design here in India. What is also allowed under the DLI 2.0 is a JV sort of a mechanism wherein foreign companies can come in, partner with Indian companies, but the Indian company should have a majority holding. So it will continue to remain an Indian IP. That is a very important part. What we're also seeing as part of this ISM 2.0 is an ecosystem play. So you'll have a lot of ancillary ecosystem players. You'll have MSMEs, gas, as well as specialty chemical makers that will be allocated some sort of an outlay as part of ISM 2.0. Those are the details that we're picking up at this point in time. So, of course, waiting the EFC's note. This is the Expenditure Finance Committee under the Finance Ministry. They are the ones who sort of appraise any scheme that is worth above 500 crore rupees. So that is what is being worked out currently. And that's what we're picking up on ISM 2.0.
Right, Rishabh, thanks for all the details. Grand plans there for self-reliance, up to 75% of semiconductor chips by 2030. That's a tall order and ambitious target the government is working on. Now let's take it straight across to my colleague Jasmeet, who is joining in with all the stocks to watch, which are buzzing in trade today. Jasmeet, what all makes your list today?
Well, thank you for that. Starting off with my list, I have a few of the counters that are buzzing on the back of that strong news flow. So our first one is the PNB Housing Finance. Well, this particular counter is buzzing on the back of strong Q4. We did note that the overall AUM and disbursement has witnessed a good growth in the Q4. Further, the company has also seen that the overall funding costs and margins have improved, seeing a sequential improvement as well on QOQ and YY basis. Lastly, we also said that the overall recovery is coming in well for the management. Management nearly recovered 167 crore rupees from the retail and the corporate sector, which is acting as a positive tailwind for the particular counter. If you look at the key numbers, total income has come in at 2,172 odd crores, is up nearly 0% YY basis, while the net interest income has come in at 808 crores, which is nearly up 11%. So that's the reason stock is buzzing in trade today, up about 8%. Well, the next counter is E2E Networks. While this particular counter is buzzing on the back of that strong revenue and EBITDA growth we see. Now, if you look at the overall key takeaways, the revenue has seen strong growth on YOY and QOQ basis both. Further, we also know that company records its highest ever monthly revenue rate for this particular quarter, which has come in at 37 odd crores versus 28 odd crores. We see a jump of nearly 10 odd crores coming in with this particular counter, and that's why the overall PAT has also turned profitable for the company. Given the last 3 quarters, we had noted a PAT loss for the company, but here we have seen a profitability in the Q4 coming in. But on an annual basis, the company still remains under loss. If we look at the overall key numbers, key takeaways, we see that revenue is up nearly 36 odd %, while the EBITDA is up nearly 46 odd %. While the margins have improved by 400 basis points and have touched that 60% of margin which we are seeing in this current quarter. Well, lastly, PAT sees a positive up move to 6.4 odd crore versus a loss in the previous quarter. Now, in terms of the other key counters, I have something like HEG and Graphite. While these counters are buzzing on the back of that positive sentiment that's coming in with the Steel Dynamic results, where they have posted a strong beat in the Q1 number, which has led to the overall rally in this couple of counters. Well, next one is the overall fertilizer segment. While we see a strong data coming in for the month of March for fertilizers, that's why the stock focus in fertilizer segment are buzzing in today's trade. Now, stocks like FSCT, Deepak Nitrate and Pradeep Phosphate are buzzing in today's trade. Well, lastly, if you look at the overall MDF price hike, well, that is leading to overall up move of 2 counters. That is the Greenply and Rushil Decor. The price action, which is the overall price hike, will help company increase the margins. That's why the couple of counters, that is Rushil Decor and Greenply, are buzzing in today's trade.
All right, Jasmeet, thank you so much for getting us all those stocks to watch in trade today. All right, let's shift our focus to an important developing story that is in high spirits as well, because Karnataka's new excise policy is driving a clear premiumization push with higher taxes on cheaper liquor and lower duties on the premium brands. Now, this could really mean price hikes at the lower end, while the premium spirits may get cheaper by up to 20%. Boosting their volumes. What does this really mean for the industries and also specific players in those particular segments? Let me welcome on the show J.K. Arora, who's the chairman and MD of Som Distilleries, joining in. Of course, Mr. Arora, good to have you on NDTV Profit. Your stock has been doing well in trade today. In fact, over 1 month, you have gained almost over 23% as a stock. First of all, what do you make of this excise policy that the Karnataka government has really proposed, and how will it really impact Som Distilleries?
You see, the Karnataka government has always been a torchbearer to all the states. That's the one state which sets the trend to follow by all states of the country. This time also, they have done a really good job in the sense that, their aim is to take revenue from 40,000 crores to 45,000 crores. That is the target they had set for themselves. So this is one issue. The another important thing is they have said taxes according to percentage of alcohol. If you are in a drink, if the more alcohol, you pay more taxes. If the low alcohol, you pay the low taxes. So that is the, by and large, it is a very good policy for the youngsters, consumers, and the actual users of the drink. Which means if you are consuming less alcohol, you will pay less taxes. If you are having a more alcohol, so you will pay more taxes. This is regarding beer, what they have done. As your question is on the reducing the taxes on the premium spirit and on the increasing on the lower IMFL increasing the tax is concerned, their taxes on the premium whiskey like scotches and bioproducts were comparatively high in all over India. So premium whiskies were quite expensive in the state of Karnataka, which was resulting people were bringing the stocks from the another states for the listing, which was harmful to them. By doing this step, it is good for them. I think this will help in improving their revenue. As regards increasing the taxes from the lower alcohol to increasing some taxes is concerned, because as of now, they were the almost, I think, cheapest in the country as a cheaper alcohol. So they have increased about 10 to 15 rupees a nip on cheaper alcohol, which is reasonably good, and this will help in increasing their revenue. So
All
this policy is a path breaking,
Right.
and will set the example for all over the country.
All right, very well put there, Mr. Arora. You gave all the details on why Karnataka is coming up with this excise policy and how will it boost their revenue and also bring in the premium liquor more at play in terms of circulation, which was seen as an expensive commodity. All right, very well put. Let me also add another, company for taking this discussion forward along with Mr. Arora. Aditya Ishan Varsheni, who's the CEO of Latambrem Chem Breweries, and he joins in now. Thank you so much, gentlemen, for taking forward this discussion. Arora as well as Aditya Ishan Varsheni. Aditya, when we talk about the Karnataka policy, how do you see the impact on the overall sector and your company?
Hi. So, I think it's a groundbreaking sort of policy for craft beer brands like ours, Makadi, because we've always believed in creating a movement around beer. Right? Beer is never been a product that you can have one for every occasion. There's supposed to be lighter beers for afternoon occasions or evening occasions, and then stronger ones for different occasions like partying. And today, with the policy that's always existed, it's been around the fact that today beer has always been unfairly taxed, where it's been gauged by volume, which means that spirits always ended up working out to be cheaper than drinking a beer. Now, because of which overall beer consumption in the country has been lower as opposed to other parts of the world where taxation has always been done the actual content of alcohol that exists. So I think this move, will allow breweries like ours, younger craft breweries, which, will now start innovating in all spaces, whether it's low ABV, mild ABV or high ABV, giving variety to the customer. So I think it opens the doors for a lot of innovation, a lot of new styles. And, I think there's a lot to see that's going to come by brands like us now down the line in the Karnataka market.
Right. So that's a good view coming in, Aditya. J.K. Arora, you were talking about the overall impact, but I also wanted to know Som Distillery's own working when it comes to beer as well as also Indian-made foreign liquor segment. How is this move going to impact both these sides? And you also said that cheaper liquor was too cheap in Karnataka, and that's why the price escalation move has happened. Do you think it will impact the demand?
I do not think that it would impact much because the kind of ambitious target for their revenue, 40,000 to 45,000 crore is not a small jump. And especially when you are doing extraordinarily well in comparison to all other countries. If you look at the size of the Karnataka economy in comparison to the same size of the states, like Madhya Pradesh and Karnataka is the same size as Madhya Pradesh is 17,000 crores and they are at 40,000 crores. So, and on this revenue plan, if they are having the 5,000 crore extra, then you have to have a little bold decision. And I think this will not impact much. Maybe 4-5% consumption goes down for the cheaper liquor. But I think beer and the premium range liquor would compensate them well. So it would not impact no counterproductive impact on the revenue or the sales. I think it's overall a very, very good policy, I would say.
Good policy, J.K. Arora. Aditya, your final word on the demand and also higher taxation even at cheaper liquor. How does this augur for companies like yourself? And we have seen enough innovation taking place in the indigenous market in the liquor space of late. Of course, gin, beer, all of them put together. So how is this move going to impact the overall condition commercially as well, and when it comes to these different segments and people's consumption pattern?
You see, as far as beer is concerned, there would be a much better environment would be there because this pricing for the low alcohol beer, there would be a price advantage. I would say some advantage would come, and impacting is little impact on the cheaper liquor would also benefit the beer. And same time, so for a large number of consumers, it is going to be beneficial because beer is going to be priced reasonably. So it will benefit the beer directly. IMFL, as I said, would not impact much, and higher alcohol will give them the more sales. So would be so overall. I do not think any negative. This is they have actually, it's not a quick policy. They have formed a Krishnan committee.
Yes, which has done a detailed study. So I'm sure they understand the market and the consumption pattern a lot. Also, Mr. Arora, just one last question I have time for, and let Aditya just put in his word on how is it changing really the consumption pattern. Is also, Aditya, this is the first time that a tax rationalization is going to happen under the present, government structures where the overall direction has been on higher taxation and also deferment as well as discouragement of the sin stocks.
Yeah, right. So, I mean, I think the impact is going to be large in overall consumption patterns, right? Especially in price-sensitive consumers, right? Today, because of the past taxation structures, consumers have always steered towards the higher alcohol beers, right? Regardless of what their taste preferences are or what the occasion is. Primarily because the cost of making the product strong versus mild, the difference in pricing is not that, costing is not that high, but the taxation was being similar, always made consumers go towards the stronger beer because the price discrepancy wasn't much. Now with taxes getting varied between the two, there will be a clear advantage or a cost benefit in consuming a lower alcohol product, hence driving the price sensitive consumers also to be consuming the milder beers in the right occasion, right? So I think we'll see an overall uptake in lower ABV consumption, and I think overall better for from a health standpoint as well, because now consumers will steer towards lower ABV products, which are better for health, better for overall benefit of different things, right? So I think we'll see a lot of positive come out of this, not just from an industry standpoint in beer consumption, but also from an overall well-being perspective of the consumer.
All right, high-spirited discussion is always welcome and very interesting, and this is a big development. Thank you so much, J.K. Arora, as well as Aditya, for joining in on this very riveting discussion and path-breaking move, probably heading towards a parity between the low stack segment liquor as well as the premium liquor as well. That's where the direction probably looks like, early to say. With that, it's a wrap on Markets at 12. Thank you so much for tuning in.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the self-prospectus and the tranche 1 prospectus dated March 30th, 2026, together referred to as the prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and Sharad Dubey, who's standing at the NDTV Profit Market Pit with all the action in the markets. Sharad, good afternoon. An interesting day of trade. We're nearly at the day's highest levels as we speak. And the interesting comments coming in that there is a possibility of Trump, who will be visiting Islamabad as well when you talk about the true stocks. Probably markets are picking up some positive sentiment on that front as well.
Yes, that's right. Good afternoon, Hiral. And it's a fingers crossed. Everybody is expecting all the asset classes. And look at Nifty as we are talking. It's up 200 points and we are at the day's high level. Nifty Bank's technical setup is much better than Nifty. Even that is also doing really well. If you just like to point out, yes, we are almost near the day's high level and Nifty Bank is up more than 1.2%. Put that in perspective, a 700-point rise coming in. But what are the key triggers to look out for in today's trade? Most importantly is the ceasefire optimism is lifting the sentiment across the asset classes. And of course, the benefit is definitely coming for our markets as well. But remember, there might be volatility in the last hour of trade because you cannot rule out the Nifty's expiries, their weekly expiries there as well, where the focus will be there. The Nifty has going trading past that 50 DMA mark as well. Psychologically, these levels are showing much more buying signals going ahead. And also Nifty Bank, let's see what's happening there. I would like to give a resistance range for that. Good momentum coming in, that 57,500 to 58,000. This is the resistance range we are looking at. If that breaks, then we can see a further up move as well. Apart from that, let's also look at the SMID segment. This is doing really well. Value buying continues in the small cap and the mid cap space, be it HNIs, institutions or retail, and housing finance companies, fertilizers and graphite electrode makers are rallying in trade. What's not working is the life insurance stocks. That's where the sell-off is happening. The street might be a bit scared on the SBI Life numbers. Rupee has weakened as RBI has lifted the forex restrictions on banks, and that's what we had seen earlier today. And that's also a developing story. Also, the earnings today, 3 earnings to track, all of them doing well. HCL Tech, Persistent Systems and Nestle is something which we'll be talking about. But remember, today the ceasefire deadline ends today, EOD. So that's an important day. But nevertheless, what stocks are there in your watch list, Hiral?
Thank you for that, Sharadita. It's a very interesting day of trade. And Before we just head across to the watch list, let me just look at the contributors in terms of Nifty 50, the ones which are contributing to the kind of gains that are coming in with Nifty 50 trading at the day's highest levels. Names like HDFC Bank, ICICI Bank. Both of these counters did not really move to that extent post earnings, but today you're seeing that pickup rally that's happening there because nearly around 90 points contribution coming in from both these names. Bajaj Finance is another one, and Bharti Airtel. What's putting pressure? What is interesting is to see SBI Life, which will be reporting numbers tomorrow. That is seeing cuts. Reliance Industries is another one, BEL as well as a Titan. These are the ones which are contributing to the losses. But it's interesting to see the financials which are contributing to the trade today. On the watch list, APG Hotels at Lemon Tree. Both of these seeing some smart moves in trade. In fact, APG, they are looking at a new hotel in Ayodhya, Ujjain. Lemon Tree volumes are very strong. PNB Housing, a strong Q4 has been reported, and that's the reason why you're seeing that kind of a move. SBI Life and HDFC Life are also buzzing in trade, strong volumes building up on both these counters, and you have the life insurance data which has come in, so that's providing some bit of fillip there. Alcobev stocks are in focus like a Radico Khaitan because Karnataka liquor policy is looking at a revamp. Some will get expensive, some will get cheap. Asian Paints, there is a price hike that is in focus, and brokerages are also seeming to be very positive because the last 1 month has been very strong when it comes to Asian Paints as a counter. Nestle, the expectation is of a double-digit revenue growth. Let's see what happens on that front. Hyundai and TVS Motors, they're inking a pact to develop E3-wheelers, that's electric three-wheelers, in India. They've done a prototype in 2025 and now they're taking that partnership further. So both these counters will be in focus, and TVS Motors, to be honest, has seen a good growth from FY25 to FY26 in terms of the E3-wheeler category in the sales numbers. E2E Networks, strong Q4 stock split, and as we know, L&T is one of the majority stakeholders as well. Around 15 or 18% is the kind of stake that they hold in E2E Network. Apex, Gokuldas, these are a few of the other names which have US exposure are buzzing in trade because US has started the refund of import tariffs since yesterday. Realty stocks are also buzzing on the back of a positive business sentiment. Bank of Maharashtra, a strong set of numbers along with the SML Mahindra. Carousel has expanded their quartz zinc capacity, and that stock is in focus as we speak. So that's the watch list, but let me head across to Sharad to take the rapid fire with Saumil Mehta of Mirai Asset Share Khan.
Thanks a lot, Hiral, for that. Good afternoon, Saumil. It's always a pleasure to have you at NDTV Profit, and I'd like to start the rapid fire segment. And the first stock in focus is PNB Housing Finance, a very strong set of quarterly numbers coming in. Brokerage is also giving a thumbs up. Your views on it?
Positive in the short term. In the medium term, my targets would be around 1080 and 1135.
Right, and your views on SBI Life and HDFC Life? Seems like a little bit of sell-off is happening ahead of the earnings which will be coming in for SBI Life. Any important trade to take here?
I think it's an avoid at this point of time. I'll be a little bullish once it crosses above the previous swing high of 1995.
Right, and the next stock is Radico Khaitan. There are also volume buzz is happening in this counter. Any important levels to track?
Radico Khaitan, I'll be positive on this stock. This is just a pause which we've seen right now. My targets would be above 3,600.
And your views on E2E Networks, a very strong turnaround quarter, and also the company come out with a stock split as well. Will we see a good momentum in the stock or time to put partial profits?
E2E Networks looks positive to me. You can keep a trailing stop loss around 2,680 and keep your positions open. My targets would be around 3,200.
Right, Q4 updates also coming in, and also the realty stocks are buzzing. Your views on Sobha and Oberoi Realty? Any alpha to be made here?
I think Oberoi definitely looks good to me. I'll watch Sobha, but Oberoi and DLF both looks good to me. I'll go with DLF at this point of time. DLF has a very good risk to reward ratio. Stop loss could be around 570 and my target for DLF would be 670.
And Saumil, your views on Bank of Maharashtra? Very strong set of numbers coming in. Even the management commentary was strong post-market hours yesterday. Will we see a good up move in this space, especially in the PSU banking?
PSU banking definitely looking great to me. Bank of Maharashtra, high top, high bottom formations in all the time frames. So great setup. I think the stock is headed towards 90 levels in the short to medium term outlook, but I'll be looking for much higher targets. In PSU banking, I like Union Bank more, and Union Bank looks great to me. I'll be having a target of around 210, 220.
Right, and your views on Carousel, of course, there is a quartz capacity expansion at play, and they are having exposure in the Northern American markets. There is a buzz of, you could say, the tariff refund also coming in. Is there any positional setup happening for this counter?
See, I'll wait for a breakout on the upside. The breakout levels would be above 930. Once it goes above that, my next level on the upside would be 1060 and plus. So I'll stay positive on the stock. Keep a very strict stop loss around 800 levels for positional view.
Well, that's a pretty interesting take coming in. That's rapid fire for you. Thanks a lot, Somil, for that. And over to you, Hiral.
Thank you so much for that, Sharad. But let's quickly shift focus to the stocks which are trending on Google as we speak. You know, a couple of names that have been making to the list so far. IEX has been interesting to see, you know, the kind of cut that we saw in yesterday's session. Yes Bank, another one, Apollo Micro, and Apple Fin, a few of the other names. In fact, let me come to you, Somil, with regards to IEX and Apollo Micro. Volumes are also pretty strong. Both of these counters have been in the news in the last couple of trading days. What are charts indicating?
For IEX, I think it's an avoid at this point of time. I'd be a little bullish once it crosses above 200 daily exponential moving average, which is 141, 42 levels. But at this point of time, avoid.
Okay, so that's with regards to where IEX goes. But thank you so much for speaking to us, and sharing your views as well. But Sharad, over to you, because Groww is one counter which is seeing some smart moves. Brokerages are also seeming to be positive. In fact, just before the earnings as well, a lot of other brokerage notes that did come in to talk about what's happening with Groww. What are you picking up?
Right, Hiral, that's right. And brokerages post the earnings have also continued to give thumbs up to this counter. UBS has maintained a neutral rating, but there is a hike in target price. And they have stated that the product metrics for this counter remains strong as well. Also for Jefferies, if you look at it, they have maintained buy, and the target price has been hiked from 210 to 225 rupees per share. And of course, there's a PAT beat coming in, and the way the company is having its agencies in different sectors, especially when it comes to the mutual fund, is auguring well for the stock as well. Citi also has hiked their target price, and the management is focusing much more on the product-centric business as well. And largely, the non-banking financial product is something where the bullishness is happening. So this is what the brokerage stake is coming in from Groww. But in the morning itself, we had a chat with the management of Groww. Do listen into what they had to say.
I want to start off after the fabulous numbers that you've given. How did the product mix evolution, because derivatives is so high for you, contribute to the margin expansion despite higher volatility?
So if you look at the growth rate from a YOY basis, I think last year was relatively a one-off because of the regulations. The quarter was slightly lower. If you look at on a Q-on-Q basis also, the company has grown well, where actually the volatility that you talked about actually helped. So which has increased the equity derivatives contribution as well, because the number of orders went up because of volatility. A lot more people started trading on derivatives as well. But that number is still small. So I think earlier this number was more closer to 14 lakh. This time it is around 17 lakh. And order per user also went up because of volatility. People across different asset classes did more kind of in and out from both cash and equities, as well as what happened on the commodity side, which has something new that we launched last quarter, and it has scaled up, and the growth rate of commodities even higher. And on YOY basis, if you look at the MTF, is another business that we have launched almost 1.5 years back, and it has started contributing now 7 to 8% of our revenue, which used to be like 2% last year. So all the new products have significantly improved in terms of margin, in terms of contribution. And our cost structures are relatively fixed in nature. So whenever the revenue increases significantly, the operating leverage shows up across the board, including EBITDA as well as on the PAT side. So the growth rate actually helped us to improve margins.
The MTF book grew about 22% quarter on quarter, quite a bit. Even the commodity derivatives active users hit a fairly decent high for you. What drove this outperformance in a period of an index declining about 15-16%? And how does FY27 therefore look like?
So the base effect is significantly large on MTF side. So if you look at our market share is closer to like 2.7% today. This used to be 1 point something percent in the last quarter, and 1 year back it was less than 1%. If you look at the fair share that we look at, which is the equity ADTO levels, where we are currently like mid double digits, around 15%, I think that is where in longer run it will reach to. So the penetration across our customer base of MTF is increasing, and it is not really correlated with market yet. I think once we reach to the fair share, probably it will be more correlated.
Well, that's an interesting take coming in from the management of Groww. And joining us right now is Raghavendra Kedia. Good afternoon, Raghavendra. It's always a pleasure to have you at NDTV Profit. We're just discussing about Groww, and the management also come out with its commentary. There's a good up move already there in the stock. Do you think the valuations are justified for the growth ahead for Groww right now?
Good afternoon, Sharad. Broadly, we believe that there is growth ahead in this particular brokerage company. The business verticals are doing very well in terms of brokerage, AMC, and this recent start with the MTF margin trading facility. So broadly, with India's demographic trading more into capital markets, this is a good stock, asset-light model, platform-based business, and immune to any global shocks in terms of war or any global macro. So it's more inward-looking in a business composition. What investor could have. We believe a full year EPS of 4 rupees is possible, and giving a multiple of 60 times, 240 is a price target. We are looking at Groww for a 1 year investment horizon. Currently, the stock is trading at 215. So any price correction to levels of 200, which is possible, we believe, that can give you a 20% upside if you can enter at levels of around 200 for a price target of 240. 4 rupee full year EPS, 60 times P multiple, inward-looking asset-light platform-based business, good stock to have in your portfolio.
Okay, so that's with regards to where Groww goes. But moving on, PNB Housing Finance has also reported numbers, and that stock is doing pretty well in trade. Let's just pull up that counter on the screens. Little over 8% is the kind of moves that you're seeing on this one. My colleague Shivam is standing by to tell us what has worked. Shivam, what are you picking up in terms of the factors that have worked for a PNB Housing Finance in terms of where the numbers go?
Well, yes, PNB Housing Finance has posted a strong Q4 numbers, and starting off with their AUM and disbursement growth, both have witnessed a double-digit growth on YOY basis. The borrowing cost of the company has declined by 15 basis points on quarter, which has aided in improvement in margins, and which stands at 3.69% versus 3.63% in previous quarter. On the other side, OPEX was higher due to the branch expansion, but apart from that, the collection efficiency of the company has remained stable with a significant improvement seen in 30 plus and 90 plus days bucket. The net interest income of the company has also gone up by 11% to stand at 808 crores, and the profit after tax has gone up by 19% to stand at 656 crores. In terms of asset quality, the company has done pretty well, where the gross non-performing asset stands at 0.93%, and the net non-performing asset has also seen a decline of 11 basis points this quarter, which is positive for the company. Now let's look at the few important points which the company mentioned in their con call, and the company aims to grow their loan book with the growth rate of 18 to 20% and to cross 1 lakh crore mark in FY27. The return on asset is expected to remain in range of 2.4 to 2.5%, and yields, which has seen a moderation in Q4, they are expected to be bottom out and will improve from Q1 of FY27. The NIMs are expected to be within a range of 3.55 to 3.6%, and going forward the company will focus more on the affordable housing and emerging segments, as they believe it will aid in the improvement of fields.
Okay, so that's with regards to where PNB Housing Finance goes. Raghvendra, good afternoon, Hiral on this side. What is your view when it comes to a PNB Housing Finance? Because there's a strong set of numbers that have been reported. And apart from that, if you talk about their commentary for FY27 as well, loan book, a 1 lakh crore mark is what they're targeting in FY27, which is pretty strong. 18 to 20% is what they're looking at. ROA, again, stable. NIMs will be stable. And they're saying they're looking at affordable housing and emerging segments, and the yields will improve from the first quarter of FY27. This is the positive commentary that I am looking at. How do you look at, FY27 and a PNB Housing Finance?
Good afternoon, Hiral. For PNB Housing Finance, we believe that at levels of around 980, the stock is trading at price to book value of around 1.3. So that's fairly cheap. And specifically, if you compare with LIC Housing Finance or Bajaj Housing Finance, there is a catch-up play in terms of valuation metrics for PNB Housing Finance. Very moderate upside of around 15% from current levels for a price target of around 1120 is possible in PNB Housing Finance. The recent commentary is very upbeat, comforting in terms of loan book growth growing at 20%, 18 to 20%, and the NPAs have also come down by around 10-11 basis points from, I guess, 0.68% to 0.57%. So both on the growth side, on the cutting down on their NPAs, the company has done excellent. So PNB Housing Finance, buy on dips, and even at current levels, it's a safe, slow and steady bet for a 1120 target for a 12-month investment horizon. Cheaper to its peers and safe set of numbers gives us very good comfort to enter at current levels also.
Right, and in a matter of 1 hour, we'll see Nestle's numbers also coming up. But to give us a flavor and the preview about it, we joined in by Mahima. Mahima, what's there for Nestle?
Probably less than an hour from now, but I think a double-digit revenue growth is what we're expecting for Nestle. As per Bloomberg estimates, we're expecting an uptick in revenue of about 12-odd%. EBITDA may see a growth of around 8-odd%, and margins may take a slight hit. This is on account of higher staff cost plus raw material inflation impacting the margins. And lastly, profit may see 5% of an uptick as per the estimates. Now, underlying volume growth could be around that 4% mark as per what analysts are expecting. Growth largely supported by trade normalization post the GST cuts that we saw. Domestic business is expected to rise in double digits. 12% is what analysts are expecting, and this is on the back of volume growth and rural recovery coming in. Gross margins likely to decline year-on-year basis, and higher advertising costs and staff cost will impact margins. In terms of key things to watch out for, I think two main things. Key commentary coming in terms of raw material inflation as well as price hikes going forward, and the entire impact of this West Asia conflict coming in on the supply chain plus raw material inflation. And lastly, in terms of demand outlook as to how rural and urban recovery is taking place. So this is the overall view of what you can expect from Nestle earnings.
And Mahima, will there be any impact on that 12 tons of chocolate being stolen?
No, not on Nestle India business.
Fair enough. This was a small joke. But Raghvendra, I just want to get your view also on that. For Nestle going ahead, what does this mean, and do you find more value in this counter?
So Sharad, in terms of it's a safe bet, and if somebody is holding Nestle at levels of 1300, we believe continue hold. But on a full year basis, the company would continue to clock an EPS of around 35 rupees, and it's currently trading at around a P multiple of 35-37, which is moderately fair, we would say. So continue holding Nestle, and if someone is looking to fresh deployment, levels of around 1100. 1050 would be better. It's a safe, steady bet. But in terms of valuation comfort, we would be more happy to enter if there is a 7 to 10% correction at current levels. If someone is holding, continue holding.
Okay, so that's with regards to where Nestle goes. But moving on, the refund of import tariffs by USA is something which has actually begun since yesterday officially. And the US government has initiated the process to refund import tariffs. This is amounting to almost $166 billion. On the back of it, companies like Apex Frozen, Coastal, you have Gokuldas Exports, Pearl Global, all your textile companies, your seafood exporters, all of them have been in focus because these will be few of the beneficiaries that could be getting the refunds back. A quick view, Raghvendra, in terms of companies that could be potentially receiving refunds?
So we believe that's a welcome move. money is always welcome, and that will straight away go down to the bottom line, specifically to the textile companies. And plus, icing on the cake would be in terms of the price appreciation. We believe that the strength in US dollar versus the Indian rupee. So again, the exporting companies would benefit more. And if this money comes in as a rebate, a refund from the US, that straight away goes to the bottom line. So the next quarter to 6 months from now, we would expect some positive one-off positives in most of the exporting companies. So we are a bit about this rebate coming in, and the dollar strength would also add to the positivity.
Okay. So that's with regards to, exporters who could be beneficiaries. But moving on, E2E Networks is another one. It's very interesting because L&T holds nearly 15 to 18% stake in E2E Networks. That stock is locked in upper circuit. Reported numbers, Jasmeet is here to take us through.
Well, thank you for that. If you look at the overall quarter, it was a really turnaround quarter for the particular company, given the company was reporting loss from last 3 quarters and we see a profit coming in this particular quarter. Let's quickly understand the key takeaways on the particular result. We see that the overall strong revenue growth coming in terms of the QOQ and YY basis. Further, the company has also seen its highest ever monthly revenue, where they have recorded nearly 37.8 crore, which is a jump of 10 crore from the previous quarter. That's helping the overall revenue up more. Further, the company also sees the revenue grow on the back of that capacity expansion they have seen in the previous quarter, and they further expect it to go ahead going forward. Further, the current utilization stands at 80-odd%. Now, in terms of the other key aspect, the finance cost has dropped nearly 21-odd%, supporting the overall margin growth. Further, the company also reports the overall positive PAT at 5.7-odd crore versus a loss in the previous quarter. Now, here are the key numbers by the board. Now, what we see is the revenues of 36-odd%, while the EBITDA has seen an uptick of 46-odd%. The margins have expanded nearly 400 basis points on the back of that reduced depreciation. While further, lastly, net profit is at 6.4-odd crores. While the board also announces a stock split for 1:10, where one share stock will get divided into 10 equal parts. Well, this is done amid to make the stock more reasonable for retail investors, and further they also will increase the overall shareholdings from 202 crores to roughly 200 odd crores going ahead. Further, the L&T also holds stakes in the company. That's why it makes a very interesting counter for L&T, given the company's plan to move into asset light model by partnering with L&T. So it is something to watch out for. How does it transfer for the company going ahead? The only thing that's over a hang on the company is the depreciation charge. So once the company moves to asset light model, depreciation should also reduce eventually and help the profits grow further.
So that's with regards to E2E. Raghvendra, quick view. We just have 30 seconds for this one on your view on this counter.
So we would wait and watch, let the company post positive numbers for 1 or 2 more quarters. It has moved from negative EPS into positive. That's a positive sign. But we would actually be very cautious at current levels.
Right, cautious at current levels. But another stock is in focus, SML Mahindra, on back of its earnings. Puneet is here to decode what has happened in the earnings. Puneet.
Well, thank you for that. It's a good revenue growth, almost 16 to 17% in this particular quarter. But largely the stocks were under pressure because of margins being, in a downward trajectory, and hence, not reacting too well in that aspect. The company's cargo volumes grew by almost 10%. Passenger growth is almost 16%, but that hasn't translated in margins because of operating costs being much higher than anticipated. While it is a Mahindra-owned company now from August 2025, so the long-term plan continues to be one of favor for shareholders. But in this particular quarter, it has been a disappointing performance. A lot to watch out for the company in the next year, especially in terms of margins.
Thanks a lot for that, Puneet. And Raghvendra, I just want to get your views for SML Mahindra, a quick view on the fundamentals of the company.
So the EBITDA wise, it's pretty flat, and in terms of PAT also, it's not very impressive. So even at current levels of 4,000, when the stock has slightly corrected, we would actually expect the stock further correction and levels of 3,700 for better entry levels, or we would review. As of now, it's an avoid.
So that's with regards to where SML Mahindra goes. But thank you, Raghvendra, so much for joining in. Always a pleasure to speak to you. Completely out of time, but that it's a wrap on this edition of Trending Stocks with Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ खास होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to.
Dalal Street rejoices amid hopes of peace being brokered at Islamabad talks. Nifty stays above 24,500. Sensex jumps more than 600 points. Realty and IT lead gains with all major sectors in the green. And Karnataka is rewriting the liquor playbook. Cheaper alcohol gets costlier. Premium spirits get tax relief, potentially cutting prices by up to 20%. Brokerages see United Spirits and Radico winning on volumes. And all eyes on Nestle's fourth quarter numbers. Street expects mid to single-digit volume growth, even as margins could stay under pressure from higher advertising and staff costs. India and United States is set to begin a crucial round of negotiations from today in Washington aimed at advancing the first phase of the proposed bilateral trade agreement amid shifting global tariff dynamics. Sources tell NDTV Profit that the government is set to roll out an expanded India Semiconductor mission by May, and the plan could see an outlay of close to 1 to 1.2 lakh crore rupees aimed at boosting India's chip manufacturing push. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But first things first, let's take a very quick look at the markets. And it's looking like the Nifty and the Sensex are in great shape right now. When you talk about Nifty, that 160-odd point uptick is what you're seeing coming in. As far as the Sensex is concerned, that uptick, in fact, is much sharper for the Sensex as well, and that's something that you're looking at. Other than that, when you talk about the Realty Index, that is also buzzing away in trade with that 2.5% also uptick thereabout coming in. And banks in good shape, media, financial services, PSU banks, all of these sectors are in great shape right now. When you talk about the list of gainers as well from within the broader universe, you do have something like a PNB Housing that's buzzing away with that 8% uptick coming in. Elcon Engineering, Zentek, those are some of the other buzzers from within the broader universe. But when you talk about Nifty 50 as well, something like a Trent, Bajaj Finance, ICICI Bank and HDFC Bank, those two heavyweights also doing decently well for themselves right now, and that's the kind of update that you're seeing coming in. As far as some of those stocks are also concerned, in terms of the top losers from within the Nifty 50 pack, something like an SBI Life, Quality Walls, BEL and Dr. Reddy's, some amount of weakness that you're seeing coming in as far as some of those counters are also concerned. So that's largely the kind of update that you have coming in, at least as far as the market's concerned. But let's also take a very quick look at the entire world of commodities in terms of the update that you have in store there as well. But before we do that, Just as a quick heads up, of course, you do have oil prices that are dipping and gold that is extending losses, and that's something that we'll be talking about in just a short while from now. But before we do that, let's quickly take a look at something like a Groww that's also standing out. And, that does have that update also coming in where you do have UBS maintaining a neutral rating, Jefferies maintaining a buy rating, Citi also maintaining a buy. In fact, Jasmeet is standing by with that entire brokerage verdict as well. Jasmeet.
Well, thank you for that. Yesterday, did see that the overall Groww results were upbeat in terms of what the Q4 numbers came out. They were positive on YY basis, but there was slight pressure on QOQ basis, and the stock did see slight downtick. But today, the brokerages have come out and they have remained bullish on this particular counter. Starting off with the first one, I have UBS on Groww. While they maintain neutral stance, but they have hiked the target price to rupees 210 from earlier 185, and that's why we see the strong moves in the particular counter. Now, what they see this is the overall Q4 quarter was beat in terms of the key metrics. They also make a note that the strong growth was driven by the operating leverage that we saw in this quarter, and also the company has gained the market share, which is a quick positive for the company. Well, second is Jefferies on Groww. While they maintain buy on this particular count and they have hiked the target price again to 225 from earlier 210. Now what they say is the overall Q4 was beat, which was led by the new initiatives by the company, which is a key positive for the company going ahead. Further, they also say there is more left in the tank to grow. That's why they have hiked the target price. Well, lastly, I also have Citi on Groww. While they maintain buy stance, and even this counter has hiked the target price. They have hiked to 230 from earlier 225, which is the highest. Now what they say is the overall Q4 was steady for the counter, while they also expect the execution of wealth and product diversification is a key strategy to make a note on of how that goes going ahead. Further, they also say the overall beneficiary of ongoing equity market volatility leading to the elevated volumes in this particular quarter, and they expect it to go at a similar trend going ahead as well. So we do know that the overall brokerages have turned positive in this particular counter and have higher target price as well. That's why the stock is trading in today's trade up about 10%.
No, absolutely. But Jasmeet, while you're with us and you're talking about buzzers as well, let's take a look at something like a PNB Housing that's buzzing away in trade, and that's something that I marked earlier for our viewers as well. Look at that 8% uptick also coming in. Let's talk about the factors for not just this one, Jasmeet, but that entire list that you have for us right now.
Well, as rightly said, we have a lot of counters buzzing on the back of that strong business update and on the back of strong earnings as well. Now, something like PNB Housing is buzzing on the back of that strong Q4 which we saw. While the company makes a note that overall AUM disbursement in this particular quarter has shown a healthy Q4 growth. Further, they also noted the overall funding and margins have improved considerably, and that's why we see the up move in particular counter. While company also make a note that overall recovery stands at 167 odd crore in this particular counter, coming in from the corporate and the retail category, and that's why the overall margins have improved for the counter as well. Now, in terms of the key numbers, we do make a note that the overall total income stands at 2,172 crore, which is up nearly 7%, while the overall net interest income is up at 808 crore, which is up nearly 11%. While the second counter is E2E Networks. While this counter has seen a turnaround, you see the overall strong revenue growth in terms of QOQ and YY basis as well. Further, we also make a note that company has recorded highest ever MRR, that's monthly revenue rate, at 37 crore, up move of 10 crore on YY basis, on monthly basis. Now, in terms of the other key aspect, we have seen a strong growth in terms of the overall capacity expansion and nearly at 80% and management expected to go strong ahead as well. Further, the overall finance cost has reduced in this particular quarter, down about 21% sequentially. Lastly, the PAT has turned positive after 3 quarters of negative losses for the counter. Now, in terms of key number, the overall revenue is up by 36%, while EBITDA is up 46%. In terms of the EBITDA margin, it's up nearly 410 basis points, and this quarter turns positive for the company at 6.4 odd crore versus loss in the previous quarter at 5.4 odd crore. While the next counter, if you look at it, it's HEG and Graphite, while the stocks are buzzing on the back of that strong Q1 upbeat coming in from the steel dynamics. That particular result of the steel dynamic company has led to the positive sentiment in these two counters as well, and that's why the stocks are buzzing up about 3%. While the next one is the overall fertilizers company. Now we see that Fact, Deepak Nitrite are buzzing on the back of similar business update as well.
No, absolutely. And Jasmeet, that's something that you're looking at in terms of all of those counters as well. And that entire pack that is yet again in focus on the back of that strong March update also coming in. But let's also get you the word going as far as commodities is concerned. Thank you so much for joining us with that though. But when you talk about oil prices, they're dipping with Brent also really pairing some of those gains that you've really seen coming in right now. So about a 0.4% downtick also for Brent, and WTI is somewhere close to that, about 0.6% thereabout. When you talk about oil in terms of what is happening, yet again, there's Hormuz disruption that is very much there. And because of that, you do have that $110 a barrel level that's very far away right now, but that's also something that you should be keeping an eye on in terms of all of that uncertainty. But let's also try and understand what the impact is that is being penciled in right now. In fact, Kunal Shah, Head Commodities Research at Nirmal Bang, is joining us right now. Mr. Shah, thank you so much for taking time out for us this afternoon. First things first, I wanted to try and understand what you think about the Hormuz disruption, because it's not like all of those issues are currently resolved. They're far from that, right? So given all of that, do you think that prices are going to be making a comeback pretty soon?
Yes, quite rightly pointed out. I think this disruption, what we are seeing right now, is historical, and we've not seen anything like this, where the 20% of the global supply of crude oil is passing. And it's been more than 47, 48 days where they continue to witness this kind of disruption. So one thing is very sure, until we see a full-scale resolution coming to this crisis, when there is a deal between US and Iran and Hormuz is open, till then, I believe that the downside is very limited for crude oil. We are not going to see a sharp correction, sharp fall. In case, even if the announcement comes that there is a full-scale deal between US and Iran, at that time, the downside would be maximum 8 to 10%, not below that. So $80 would act as a very strong floor for crude oil, and I believe that it is not likely to go below that. And if it goes, it won't sustain, because the fact remains is that we are seeing unprecedented level of supply disruption. The physical trade and the futures trade prices are both reflecting a vulnerability in the market, where if you are buying Brent oil, so BFOE, if you are buying any of these grade, then I think $15 to $18 of premium is there charge in the physical market. So, and shipping itself is an issue. So I believe that the downside is very limited, and whatever downside you see, it would be a buying opportunity as far as the trading outlook is concerned.
Right. No, that makes a lot of sense in terms of how the critical infrastructure has really been moved also and has been impacted. But, I also wanted to try and understand if you think that the goalpost when it comes to oil prices has shifted drastically. Do you think that the base level, even when there's some weakness, that has really shifted given all of the supply chain disruptions that we've been seeing?
Yeah, so I believe that you see any further retaliation by any of the counterparties, okay, I think oil is going to flare up immediately. So let us hope and pray that doesn't happen. But the kind of situation which is there in the market, it's so fragile that any further escalation from here would be a catastrophic as far as oil is concerned, because markets cannot afford to have any more supply disruption. We've already seen enough. So let us hope and pray that the sanity prevails. But I would say that if the way things are right now and they continue or even slightly worsen, then another 15% upside would come in immediate terms.
No, absolutely. And that's something that's very important. That was actually my next question, and you've brilliantly, answered that. You do have a high stakes negotiation that you should be looking at, viewers. So that's something that's very important to highlight right now. But, when you talk about gold as well, you're seeing that decline really being extended right now. Where do you see the bottom for gold prices given everything that has been happening?
Yeah, so now gold and other commodities are just waiting for the direction of these peace talks, and whether there is going to be a prolonged disruption in the supply or whether there is going to be some deal taking place. So in both scenario, if there is a prolonged supply, then the inflationary shock would be quite immense, even though the dollar strengthens in a shorter term. But the fact remains is that this will impact the growth globally, and the inflation would remain high. So we'll end up in a stagflationary scenario, and that is basically positive for gold. So I see a strong floor at $4,600 on CME on gold, which is trading at 4,800 right now. And on MCX, this all should translate into levels of 1,45,000, something like that, where I see a strong bottom, and that will be a level where you can again restart accumulating gold. And fundamentals for and the second scenario is there is a deal between US and Iran. Oil goes down. In that scenario, we are going to see Fed likely to accommodate and start with the easing stance. and that shall also be supportive for gold. So
No, absolutely.
downside is very
But
limited.
since, Mr. Shah, since you're talking about the Fed, I also wanted to try and double down here and understand what you think about the outlook as well for next week, because you are keeping certain very important updates on your radar when it comes to the Fed. That entire bit is extremely important to be looking at right now. Do you think that that's also going to be reflecting in prices pretty soon?
See, I think my view is that Fed will increase its floor for the inflation. So earlier Fed was saying that 2% target shall be met. I don't think so. They will shift that target to the higher trajectory. They would say that 4% or 3% will be the new normal. So I think Fed will have to somewhere select between raising rates or being status quo. Forget about cutting right now. So I believe they will continue with the status quo policy going forward, and they'll be okay, if even if the inflation remains high for some more time, rather than initiating into a tighter monetary policy. They are not in a state where they can come up with a tighter monetary policy. Their debt to GDP ratio is 130%. They are not so if I was doing some calculation yesterday, and I found out that if the interest rates in the US, it goes up to 5%, then their interest on the debt would be $1.1 trillion. So that's not possible for them to pay. So I believe that they will continue with the status quo policy,
right?
No hike, and the 2% target in next couple of months will be gone. That is what my reading is.
Okay, thank you so much for helping us with that calculation as well. Quite interesting the way that you're looking at things. Just before we let you go, just a yes or no answer, please, Mr. Shah. I just wanted to try and understand if you think that long-term fundamentals then are pretty intact right now.
Absolutely. Long-term fundamentals are intact.
Understood. Thank you so much for taking time out and joining us this afternoon. So there you go. Long-term fundamentals are intact. This is a little bit of weakness that you're seeing right now with gold extending losses, but a lot to monitor and a lot of headlines to take a look at. And speaking of headlines, let's also get you an exclusive. In fact, India is gearing up to scale its semiconductor ambition. The government plans a larger retooled ISM 2.0 by May with a significantly higher outlay and a wider ecosystem focus. Now you're looking at chip design startups to equipment materials and JVs, the push really signaling a faster march coming in towards 75% chip self-reliance by 2030. In fact, Rishabh is joining in with all of those important details.
Absolutely. What we have coming out of the meeting is, of course, the ISM 2.0, the much awaited second version, the second iteration of the Indian semiconductor mission. Of course, with a bigger outlay. This time, the first one was roughly about 76,000 crores. This one, the outlay is expected to be roughly 30% higher, anywhere between 1 and 1.2 lakh crore rupees. What we also have is, of course, confirmation that this is currently under interministerial discussions, including with the Finance Ministry. A panel of the Finance Ministry, the Expenditure Finance Committee, which essentially looks after government schemes worth more than 500 crore rupees. They are the ones who will be giving a nod to this. The hope is that this will be rolled out by May. Apart from that, the contours of the scheme include the fact that there is going to be a full ecosystem play. You'll have MSMEs, gas and specialty chemical makers, raw material makers that will stand to benefit from this. There will be specific outlays for these players as well. Apart from that, there's a renewed design focus in this. So there was DLI 1.0, the design linked incentive scheme, as part of ISM 1.0. The DLI 2.0 will be a part of ISM 2.0. This will essentially envision up to 50 deep tech chip design firms to come out of India. What DLI 2.0 will also entail is a mechanism to create joint ventures between Indian and foreign companies, with Indian companies holding a majority, so that the domestic IP creation happens. And that's what the government is essentially focused on, is that more and more IPs get created in India. What we're also looking at is, of course, this domestic capacity building is gaining more and more prominence as this West Asia conflict is dragging on. What we're also seeing is the fact that India aims to achieve up to 75% self-reliance in chip design as well as production by the end of this decade. So a very important move in that direction as well.
Yeah, absolutely, and thank you so much, Rishabh, for joining us with all of those updates. There you go. So that's the important update coming in on that front. But let's also talk about Karnataka's new excise policy that is driving a clear premiumization push with higher taxes on cheaper liquor and lower duties on premium brands. This could mean that price hikes at the lower end is something that you're looking at. Premium spirits may also get cheaper by up to 20%. In fact, Mahima is joining in with all of those details. United Spirits seems to be buzzing away in trade, Mahima, and a lot of counters to be looking at when it comes to this one as well.
Right. So basically what has happened is the new excise policy has given a new track structure when it comes to excise duty as well as additional excise duty. The revised rates, of course, are open for negotiation and subject to objections right now for the next 7 days, and it will be implemented from 25th of April. This, of course, gives a strong push towards premiumization, but what's changed earlier, the tax was calculated at bulk sales. Now the tax will be calculated with regards to the actual content of alcohol in that one particular bottle. So basically for cheaper brands, tax will go up sharply because of base rate going up, and for premium brands, tax will come down, and this is because the overall slab rates have been cut down from 16 to 8. Now Nuvama has said that they expect prices of spirits for listed companies to cool off due to lower taxation, and this will drive volume growth going forward. As per Nomura, the new policy indicates a 10 to 30% duty cuts for prestige and above category, that's the premium category, and a duty hike of around 20 to 30% for popular category, that's the mass consumption segment. Karnataka accounts for 12 to 15% of United Spirits in terms of volumes, and that's why we're seeing the buzz coming in. Radico Khaitan also around 7% of volumes. Prestige and above category forms 90% of United Spirits sales, and that's why it's one of the most beneficiaries of this coming in. And as per Nomura, they've also said this thing, and that's an interesting observation because they've said that MRP will no longer be fixed by government according to them going forward. It will be as per market condition, as per the company's discretion going forward probably. But we'll have to wait and watch out for the fine print and the final print to come in. So this is the overall view of what this means for the entire sector.
Absolutely, and thank you so much, Mahima, for joining us with all of those details. As Mahima very rightly pointed out, look at that United Spirits stock as well, about a 3.8% uptick coming in on this particular counter. And MK thinks that this is a key beneficiary. The stock seems to be cheering that as well. But let's also talk about capital market linked stocks that are seeing a sharp rally in April, led by strong retail participation as well as sustained interest coming in from both HNIs and institutions. In fact, Sharad is joining in with all of those very important details.
Well, thanks a lot for that. The capital market stocks have been doing really well in the month of April. And if you look at it, it's been a wonderful time. Now, the question is this a further re-rating or are the valuations turning expensive? In April itself, you see BSC, that stock is up almost up 30%, Groww up 22%, Angel One, MOSL, all of them doing well in trade, stocks going up more than 20%. But let's find out the key reasons for it, why this is happening. The strong retail HNI participation, this continues across the asset classes. Secondly, the shift is continuing for the household savings, and it is moving much towards equity as well. The Q4 numbers were largely decent despite absorbing the M2M losses, which were there largely in the AMC plays. Value buying seen in the recent correction for this capital market stocks which was there, and the institutional interest that still remains strong for the capital market theme stocks. Now the BSE market share has seen gains in the FNO space. That's one of the important triggers. Apart from that, Anand well, they have maintained their long-term growth rate. These are the numbers, operational updates which I'm talking about for the fourth quarter. Angel One, the realizations were better. And if we move ahead and see the other important impact, that's Groww market share gains. And we just spoke about the brokerage is turning bullish. ICICI Pro AMC has better than market growth, and HDFC AMC's core business has also remained intact. So capital market theme, especially the wealth and AMCs, has done well, but the valuations is very much interesting. These are the 5-year peak numbers. They are still current valuations. If you look at it, they are still trading at a premium. That means there is a scope for a further re-rating as well. That's what the valuations are suggesting. But what lies ahead? That's the big question to be asked. First is, of course, the capital sector re-rating may continue, especially if you're a long-term investor. Keep an eye on this. And ancillaries such as Prudent, CAMS, K-Fintech may see buying interest, a follow-up buying interest in these counters as well. And of course, the most important, the NSE IPO is expected to come towards the end of the second half of this calendar year. So a lot of buzz is there, and it seems like there is more fizz left in the capital market theme.
No, absolutely. And thank you so much, Sharad, for joining us with all of that. So there you go. That's the entire update also coming in as far as some of those counters are also concerned. Let's also talk about something like Physics Wala that's standing out. That stock is in fact buzzing away in trade. Look at that initiating, the JP Morgan initiating overweight as well. And you do have that stock also really up about 2.5% thereabout. You know, when you talk about the factors, they're talking about how there's an attractive online education player with offline option value. And that's the key USP here. They're also talking about how the company is enjoying a large addressable market. They're talking about the disruptive pricing model that helps them gain the share. And lastly, when you talk about the online business, that is the profitable core that enjoys attractive growth as well as margins. Their school foray as well is going to be cautious, but still provide a little bit of optionality. And that particular growth lever is also something that you should be watching out for something like a Physics Wala that's buzzing away in trade as well. But let's also talk about another company that is also in focus, which is Hindustan Copper. And the company, in fact, has laid out an aggressive Vision 2030 roadmap. Varsha is standing by with an update on this one.
Overall key takeaways from the annual meet that Hindustan Copper held was, one is, of course, they're aggressively expanding. That's the capacity expansion. This is followed by capex, and they are diversifying into new growth areas, and also strong profitability is expected in the next 5 years, and digital and governance transformation is underway. Talking about the capex plan, when it comes to mine expansion, the total planned capex stands at around 7,188 crore, and also heavy investment phase is expected ahead. Onto the production expansion, ore production is expected to grow from 4.2 MTPA to 12.2 MTPA, and mining capacity is also expected to expand almost 3x. So this indicates, 3x to 4x scale, that the scale of expansion that the company is doing. Now onto the profitability, the PAT growth, the PAT is expected to grow from 589 crore in FY26 to 1,568 crore by FY30. That's a good growth, a strong growth that the company is eyeing. Onto the dividend, strong, of course, 177 crore of dividend is expected to expand to 470 crore by FY30. Onto the diversification strategy, company is entering into critical minerals and renewable energy. And lastly, the IT vision, of course, the 5-year company has laid out 5-year digital transformation roadmap and objectives for safe, connected, and intelligent enterprise. So overall, this is the overall. If I have to conclude, company is doing rapid expansion followed by diversification strategy.
All right, then, thanks, Varsha. That's all the time that we have on this edition of Lunchtime Trades. Thank you so much for tuning in.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the self-prospectus and the Tranche 1 prospectus dated March 30th, 2026, together referred to as the prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India.
Good afternoon. You're watching Small Cap Bazaars on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. So what's on the show today? Firstly, we'll be speaking with the management of Aeroflex Industries. Now, the stock is up nearly 50% on a YTD basis. And what are the key questions that we'll be asking the management? Firstly, what's the FY27 outlook and how are they progressing towards increasing contribution coming in from the high margin products? These are the two main questions that we'll be asking the management. Apart from that, it's Rolex Rings, which has been buzzing. The stock was trading at a 9-month high on an intraday basis, and this was after the company said that they will consider a buyback in their board meet. When it comes to Nelco, a Tata Group company reported a strong set of numbers, in fact reported profits on the back of tax write-backs, and that has got the street quite excited about this counter. It was its biggest intraday gains that the stock has seen since December 2024. And lastly, when it comes to Ravindra Energy, that stock has seen massive volumes. In fact, at one point of time it was 200x, but recently the volumes were up nearly 100 times its 20-day average. Now recently the company, as associate companies, have actually signed MOUs for the delivery of 1,000 electric heavy-duty commercial vehicles. On the back of this news, this stock has seen strong volume action. Now if you look at the markets, a good day for markets. In fact, the third consecutive session where we are seeing an uptick. Markets were up nearly 200 points at one point of time. Right now we are just 195 points up. 23,580 is where we had seen some selling coming in, but market is currently holding on to 24,560 levels. And if you look at the sectoral indices, Nifty Real Estate and Nifty Media are the top sectoral gainers. On the loser side, we have the PSU, which is in red, marginally in red, but Nifty Pharma and Nifty Metal, not much of movement, largely flat in trade. That is what we are seeing. But when it comes to the small cap index, Varsha, which are the stocks that are buzzing here?
Let me start with Dynavine and Chemicals. If you see, the stock is up almost 20% in trade, if I'm not wrong. Now, also buzzing on the back of volumes there. Even Rolex Rings is also buzzing again on the back of news flows, as Somit was saying. You have Butut Microfinance buzzing on the back of strong numbers that the company has given. Hindware and Gaudium IVF are some of the other counters which are buzzing when it comes to small caps. This is of course on the basis of volumes. Though on the loser side, you have Solar. This is under pressure now. This is on the back of weak numbers, weak Q4 numbers that the company has given, and hence we are seeing pressure in Solar. There you go. The stock is down almost 5%. You have Fisher Medical Ventures and Pashupati Cotspin, which are under pressure. So overall, this is the losers and gainers when it comes to small cap segment. But one company which is in focus is Aeroflex Industry. Now, lot of triggers actually working for this company. If you see, company is shifting towards high margin products like liquid cooling solutions. And to speak more about this and what lies ahead for the next 2 to 3 years, we are here joined by Asad Daud, who's Managing Director at Aeroflex Industries. Hello, sir, and welcome at NDTV Profit. Let me start with the liquid cooling solutions that you have ventured into. How big can this segment become, and what is the opportunity size that you're eyeing?
So if we talk about the international liquid cooling space, right, it's about $3 to $4 billion right now, and projected to grow at about 35% CAGR to about $20 billion over the next 5 years. So this is a huge space that we have entered into, and I think the focus of the company would be over the next 3 to 4 years is to ramp up the capacity significantly in this particular business vertical, as we see a tremendous opportunity here. And I feel over the next 3 to 4 years that this business would be a significant contributor to the overall business of the company.
And considering the liquid cooling adoption, given that many data center still use air cooling, what makes you confident that liquid adoption, or rather liquid cooling adoption, will drive this shift, and you'll see a huge growth on that?
As we see the AI, computing increasing, and as the GPUs are becoming, more and more heavy in terms of the processing power that they require, air cooling is not sufficient to cool, these kind of new age, GPUs. The only way to cool them, and through the effective and in terms of the lower cost of cooling, would be through liquid cooling. So that is the only solution right now in the world for to cool down these high power guzzling GPUs. So that is why all the new data centers which is coming up right now, and obviously which is being planned for the next few years, all have to be liquid cooling, because air cooling is not sufficient to cool these data centers.
Right. Sir, I'm looking at your stock performance here. On a YTD basis, the stock has moved up 50%. Definitely a lot of triggers that are working in favor of the company. But if you could just give our viewers what is in store for FY27. What is the kind of growth that the company is internally penciling in when it comes to the revenue, net profit side?
In terms of the outlook for the FY27, I think we are extremely bullish in terms of our outlook for this year. We are ramping up our capacity in the liquid cooling space, which will be commissioned by the end of the first quarter and the start of the second quarter. So we'll see significant uptake in sales coming in from the liquid cooling space. We are also seeing very high demand coming in from the data center space for our flexible hose assemblies as well. So that is something that we are seeing in the international market, specifically that demand coming in. Plus with our capacities coming into operations for, for the flexible division by the end of Q2, I think this year we would see a significant jump in both the top line as well as the bottom line. So we are extremely bullish for this year.
If you could, help our viewers, if you could give us the ballpark range that you're expecting when it comes to revenue growth and margins for FY27?
So in terms of, specific numbers, might not be able to share because, we have our results coming out soon. So we'll be able to share specific details post our results. But in terms of our margins and in terms of our profitability, we have maintained that over the next couple of years, we want our margins to be in the range of 24 to 25%. I'm talking about our EBITDA margins, and that is where the company's focus will be. And all the new sectors or verticals that we are entering into will help us to achieve those kind of numbers. And in terms of the top line, like I mentioned, we have a lot of capacities and a lot of operations in terms of our liquid cooling capacities coming in. So we know we'll see a significant uptake in the revenue numbers as well for the current financial year.
Okay. In the last 9 months, if you look at 73% revenue contribution is coming in from exports. Given the geopolitical tensions that we had seen in the fourth quarter, any issues that you have faced regarding your export business, any delays in shipping the products, any increased cost for shipping the products?
Increased because of the issues that we have seen in the West Asia. I think the demand from international market has only been affected in the Middle East region. We have not seen any reduction in demand coming in from Europe or from the USA. I think it's only the Middle East area which has been affected, which I'm hoping over the next few months that will be resolved as well. In terms of our percentage of contribution of exports, I think we'll see more percentage of contribution coming in from the domestic market, specifically considering that our the data center business that we have.
I understand that there was no demand impact. I was actually asking about the cost side. Has cost increased for you? Was there any delays in shipment? I was trying to understand on that factor.
So yes, shipping cost has increased in terms of the ocean freight that has increased for us, and there has been a delay in the shipments, especially considering the blockage of the Strait of Hormuz. So, but we are working with our customers to overcome that. I think that is something. Yes, the cost for that has increased for sure.
Okay. Also, I believe you are looking to increase your skid assembly capacity massively, and the new capacity is expected to be deployed in June 2026. I believe from 2,000 units to 15,000 units. So, is that capital expenditure capex plan on track? Will it be deployed by Will it be operational by June 2026?
Yeah. So out of the increased capacity from 2,000 to 15,000, already 6,000 capacity is already being commissioned, and now it is into production. And we are expecting the remaining to come up either by the end of June or the start of July. So we are on track with our timelines.
Of capex, sir, in miniature bellows, you have reduced your capex. Does this indicate any demand slowdown there?
So this was the decision that we had taken during the end of Q3, where we felt that we wanted to deploy our capital more towards the liquid cooling business, where we are seeing a significant demand come in, and then we feel that post our expansion in the liquid cooling, then we would continue with our expansion in the miniature metal bellows. So it's a temporary pause. It's not something that we have completely abandoned. It's just a temporary pause where we want to reallocate the capital to areas where we see immediate returns.
Right, and your domestic market did see strong growth in 9 months. With High Dare specifically seeing traction in railways, are you looking at Vande Bharat or other high-speed rail projects, if any?
Yeah, so we have already, we are in discussion for business from the new segment of railways as well. And that is an area where we are already focusing on. And I think you'll see a significant uptick in the sales in the domestic market for Aeroflex, both coming in from High Dare as well as coming in from the liquid cooling space.
Lastly, your value-added products contribute 54%. Will this mix remain same, or you want to change the mix? Any target there?
This mix is actually going to increase. So we are focusing on generating more and more sales from value-added products. So over the next few years, you will see that the mixture from value-added products, would be even higher.
Right. Well, thank you so much, sir, for joining in and having a conversation with us. It was a pleasure speaking to you. Thank you so much.
Thank you so much.
Well, this was Aeroflex Industries, carving out its growth plans for the next 2 to 3 years. But with that, let us also invite our guest for the show is Narendra Solanki, Head Fundamental Research, Investment Services at Anand Rathi Shares and Stockbrokers. Narendra, hi, and welcome at NDTV Profit. You heard the management of Aeroflex Industries, shifting towards high value projects. What's your view on that counter?
Yeah, good afternoon. Yeah, definitely I've heard the business plans for the next 2-3 years. I think the company's new initiative, which is into liquid cooling and data centers, so this is a very happening space, and a lot of investments and a lot of companies are investing into this space as the market is very huge and the opportunity is very huge, and we are just at the initial cusp of this industry taking off. So the medium to long term for this industry is very good. We are also positive on this industries. Now, coming to this company specifically, we do not have any coverage or active recommendations, but yes, I think execution would play a greater role because the liquid cooling area specifically for data center is complex and is further subdivided into two kind of coolings, which is submerged cooling and another is non-submerged cooling. So I don't know in which part the company would venture out into. But having said that, I think the execution would play a very key role. And looking at the trailing valuations, I think the valuations, the investors should keep in mind the high valuations at which the company is trading, and the execution would definitely be a very critical, especially this cooling segment for this company.
Before we move on to our next small cap stock, let's get in Sharath to understand what's been buzzing on the F&O side. A strong day, Sharath, 600 points up on Sensex.
Exactly, Somit, and the best point is it's very hard to locate the losers in the entire play, and we see with this largely Reliance is only playing SAR today. It's down almost 0.7%. Earlier at 10:45 it was positive, but net a strong momentum coming in. Both the banks, ICICI Bank, HDFC Bank, definitely lifting the BankX trend. Bajaj Finance also doing well. Adani group of stocks also seeing a strong buying momentum. Let's just see what are the stocks which should be on your radar when it comes to the long build-up. And we have housing finance companies doing well. Capital market theme stocks we had earlier highlighted also. Now we are seeing a good up move in Nippon Life. Stock is up 5%. LIC Housing Finance, that's up 5% as well. Let's see what's there for the short covering. And we have PNB Housing Finance, a very strong quarterly numbers coming in. And because of that, all the other companies are doing well. In Trent, one of the top gainers, that's also doing well. That's up 3%. For long unwinding, nothing much to look at. Saman Capital and Colgate, both of them down 2% each. And short build-up is for the life insurance stocks. So SBI Life, that's also down 3.5%. The results will be coming out post-market hours. So we'll be actually figuring this out as well. And Polycab, that's where a little bit of sell-off pressure is happening, but not so much as well. But net, the overall sentiment of the market is very strong as we are near the day's high levels.
Right, got that, viewers. Thank you so much, Sharath, for joining in and giving us all the details. With this, viewers, it's time for a quick short break. Stay tuned to NDTV Profit.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Welcome back. You're watching Small Cap Buzzers. Well, next stock which is in focus is Rolex Rings. Let's pull up that stock. The stock is buzzing. Is up almost 14% in trade, but let's bring Puneet to give us more details on Rolex Rings.
Well, thank you for that. Stocks at a 9-month high today, given positive outcome led by volumes amongst others, and largely in the back of a news that the board will consider buyback in the next board meeting. Now, this comes at a time where the stocks, of course, up almost 14% today, but since listing back in 2021, stocks given returns of only 36%. So, compared to the broader market return of 48% for the Nifty 50, even after this correction, stock's been a rank underperformer over the last 3 to 4 years, and hence buyback enthusing the street at this point of time. When you also look at, they're specializing, of course, in bearings as well as piston rings, and larger player like Shriram Pistons continue to dominate the market share. So there has been essentially lack of growth in revenue also, and that's visible in the stock performance as well. Now, when you look at the revenue mix specifically, the auto component business is now 52% versus almost 55% in FY25, and the bearing ring business has actually grown by a similar percentage to 48% out of the total revenue. Within the industry mix, passenger vehicle has seen a major growth, now up almost 53% in terms of the 9-month revenue versus 46% in the same time last year. And the chart visible on your screen right now, industrial has remained largely same, but the CV business has come down materially, which has helped the PV business revenue go up. Now, when you look at the total, the Q3 highlights, they had mentioned a couple of key ones. 10% improvement was seen in exports in Europe. Now, if that still has been the case in Q4, will be something to watch, because they'd also seen underperformance and tariff overhang, which led to lower revenue from the US business in Q3. So, multiple key moving parts, but the buyback news definitely enthusing the street. A lot to watch out for the company in Q4.
Right. Well, thank you so much, Mohit, for all the details. Narendra, coming to you on this Rolex Rings, company is expecting a buyback, and hence we are seeing that surge. What should investors do at this point of time?
Yeah, again, we do not have any active recommendation and coverage on these stocks, but it's a auto ancillary play. So as a sector, we really like auto and auto ancillary companies. But coming to this company, I think there are 2-3 issues which the company is facing. One is the lack of growth in its existing business. Plus, because of the West Asia crisis, there has been a concern over how the export market would be behaving for the next 2 to 3 quarters. And the company being heavily dependent on export is again a risk in the near to medium term. So I think the today's move would be more related to the enthusiasm or optimism related to the buybacks. The impending buyback announcement, and hence investors should keep the important risks in mind before taking any decision.
Right. Another counter that remains in focus is Nelco. Now, after the company reported its Q4 numbers, we have seen a strong buying interest coming into this counter. But do remember that the company has reported profit, but that is largely on the back of tax write-back. Let's get in part to understand in more detail how the Q4 has stood out for the company.
That's right, Somit. So Nelco is a subsidiary of Tata Power. The company provides domestic satellite communication services which connects their customers to their remote operations. Now, the reason why the stock is in focus today is because they reported their Q4 FY26 earnings yesterday, in which we saw revenue growing 17.2% year-on-year, reaching almost 80 crores. But their EBITDA and margins saw a downside. Their EBITDA fell by 11.19%, while their margins also saw a downtick. The company reported a net profit of around 1 crore versus a loss of 1.19 crore year-on-year. But as you rightly mentioned, this was only because of the tax write-off which the company got. The company's profit before tax in Q4 was just 1.75 crore, while their tax expenses were on the higher side at 2.50 crores. But due to a 2 crore deferred tax which the company got, it boosted their bottom line, and this was what led the company reporting profit in their Q4 numbers. Also, in fact, if we have a look at their last 3 years financial performance, we can see that the company is struggling a little bit with their revenues being almost flat from 320 crores in FY26 to 307 crores in FY26. Their EBITDA has almost halved from 60 crores in FY24 to 29 crores in FY26, while their margins have also collapsed from 19% to just 9% right now. But due to the good Q4 numbers that they posted yesterday, the stock has gained almost 10% today. This is their biggest intraday gain since December 2024, and in this April month, the stock has gained almost 45%. So a sharp recovery is what we are seeing in this counter currently.
Okay. Narendra, any view on Nelco, given the fact that the only good thing in the company's financials was growth on the revenue front? Apart from that, operationally also the numbers seems to be weak.
Yeah, definitely. And again, do not have any active recommendation or coverage, but you can see the space the company operates. It's providing reset services, wide area van services, and managed services. So this kind of a space is now dominated by very large players into the telecom segment, and it has become a very highly competitive space. And if you see the overall revenue profile, the company's revenue has been stagnating for last 3 to 4 years, and the profitability is also decreased. So I think there's really concern regarding the medium to long-term growth and stability in terms of profitability for the company. So I think this risk has to be keep in mind in order to deciding to take any positions.
Right. Well, thank you so much, Narendra, for joining in and giving us all the details. It was a pleasure speaking to you. Thank you so much.
Thank you.
Well, the next stock which is in focus is Ravindra Energy. Let's pull up that counter. Let's see what that is doing, because if you see, the company has had a high volume of around 100x of its 30-day average, and the reason why Ravindra Energy is in focus is their associate company has signed MOU to deploy 1,000 electric heavy duty commercial vehicles. Now this company is they sell solar pumps and they also set up solar generation power plant. But let's talk about the strategic partnership that they have gone into. They're going to deploy 1,000 heavy duty electric trucks across India, and this will combine vehicle supply, leasing, this to enable large scale electric fleet adoption. Now onto the deployment scale, of course the 1,000 electric heavy commercial vehicles will be rolled out over the next 2 years, and EIM, which is the associate company, brings OEM expertise and battery swapping technology, and driven the company with which MOU has been done will provide leasing, financing and fleet operations. Talking about the industry momentum, the collaboration builds on Driven's $80 million commitment and broader EV ecosystem partnership. Onto the revenue guidance that Ravindra Energy has given, FY26 is expected at 550 odd crore, FY27 revenue is expected at 800 crore, while on the EBITDA guidance, FY26 is 92 crore and FY27 is 127 crore. So overall, the MOU which has been signed is the reason why we are seeing Ravindra Energy stock is up almost 7% in trade. So with this, it's time to wrap this edition of Small Cap Bazaar. Stay tuned to NDTV Profit.
Capri Global Capital Limited is a well-diversified retail-focused, systematically important, non-deposit taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open.
Welcome, you're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani, and with me as always is Puneet Zaveri. And before we start taking all your stock related questions, let's take a quick look as to how the markets are doing at this hour. As and when, as far as we talk about the benchmarks, the Nifty 50 is still holding up by about 182 odd points, almost trading at its day's high point, well above the 24,500 levels is what we're seeing, up by about 0.7 odd percent. Let's try to pull up the heat map and see as to whether the counters that we saw at 10:30 are also holding up or not. You have names like Trent is still holding up 3.5%, followed by something like Bajaj Finance, ICICI Bank, HDFC Bank, Axis Bank. So a lot of private banking names have come up and are trading almost 2% higher each. Adani names also doing fairly well. Adani Ports up 1.4%, followed by Apollo Hospitals. Eternal also seeing gains about 1.25 odd percent. Let's try to pull up. In fact, even the bank Nifty is doing fairly well, up 1.5 odd percent, trading in that 57,300 odd levels. Let's try to pull up the sectoral heat map to see as to what sectors are doing right now, whether all of them still trading in the green or not. And yes, except for the Nifty CPSE, largely all of these sectors
trading in the green. Nifty Realty, of course, still topping that chart, up 2.4%, followed by private banks, largely led by the names we just talked about, right? HDFC Bank, ICICI Bank, as well as Axis. You have media, which is also seeing an uptick of 1.4%, followed by defense, as well as, you have PSU banks also doing fairly well. So that's with regards to where the sectors go. But the advanced decline ratio, that's an interesting one to watch out for because, yesterday's trade was still a tad confusing when it came to the broader markets. But today, I think we have clear winners. There's bias purely towards the bull side, and you have around 1,800 odd advances versus that of 700 odd declines. Of course, the ratio has narrowed down, Puneet, but overall, the broader end of spectrum is also holding up.
Most certainly, and we're still awaiting numbers from Nestle.
Yeah.
It's like we've gone through 2-3 shows now and still no numbers from Nestle yet. So we could be expecting some probably in this show. We are ready with Mahima already in the studio, but continues to be a good one because it's fallen off from the day's high, now trading just sub 1,300 odd levels. But an important earnings expectations are strong, as Mahima has been highlighting throughout the day. Volume growth is something to watch, but overall it's going to be an interesting one as and when it decides to come. But overall, the mid cap and the small cap also very interesting space where they are in. We've seen follow on buying both on the mid cap 150 as well as on the small cap 250 as well, which has been outperforming all benchmarks today. So it has been the second day in a row wherever the markets have been up. The small cap index continues to outperform the benchmarks at this point of time. Is the story that is unfolding in front of us. In terms of the BSE 500 though, individual names, you saw in the morning a couple of them continuing to do well. Lemon Tree was one, fallen off a little bit from the highs, but Kenta Summer is now up 8.9% in trade. PNB Housing still up 8% on the back of earnings, and it's taking along with it all the other housing finance company as well in terms of strong expectations. Deepak Nitrite also up 5.4% on the back of possible product pricing upbeat for the specific products that it operates in. But let me welcome in our guest for today, Sachin Janardhan, EVP Derivatives, and Radharaman Agarwal, Managing Director and CEO of Swom Advisors. Mr. Raman, I hope I'm pronouncing the name of your advisory company correctly. It's Swom Advisors?
Advisors, yes.
Okay, it's definitely a tongue twister there, but thanks so much for joining in, and let me go across, take the first query right away. And it's been something that we've been talking about for a while now. It's in terms of HDFC Bank. Now, our viewer holds roughly shares at 825 rupees per share, and MM Kapoor is asking what he should do with his 70 shares now. Mr. Raman, what would you recommend on HDFC Bank? Should Mr. Kapoor continue to hold?
I think he should hold on. I think results also out, and banks have given a reasonable result. So I think he should continue to hold, and I think overall the banking sector looks positive from here. So he should be holding on the positions.
Okay, all right. So that's the view coming in on HDFC Bank. The next one that we're talking about is SBI Life Insurance. This is coming in from one of our viewers who's not, by the way, mentioned his name, but basically he wants a really short-term view on this one. He's got 42 shares at the levels of 1908 and wants to know the next target for the next 15 odd days. I'll stick with you for this one. I think I'll take this up with Sachin first. Sachin, your view on SBI Life?
So SBI Life currently is in a downturn basically. So a good bounce has come from the bottom, and it has already given a 15% return. So today's candle basically is a bearish candle, and what we can see right now, the support levels are around 1859 and 1828. If these supports are not holding, then we can see a new low coming and it can break 1728 levels as well. So a stop loss of 1828 will be the must for if he wants to hold his stock.
But let's go across, take our next caller from Bengaluru, and Ram has a stock query for us. Ram, very good afternoon. Welcome to the show. What's your query?
Yeah, hi, good afternoon. I'm looking for a 2 to 4 years horizon, and I'm looking at between Bajaj Auto and Eicher Motors. Okay. So both the P's and the ROC and ROE are similar, but slight variance in the returns.
Right.
So I don't have any holding. So wanted a view on which is a better stock to buy, and is the timing good to enter at this stage, and what will be the entry levels?
And is this more from a long-term perspective, Ram?
2 years. 2 years, I'm looking at 2 years.
2 years, got it. Well, Radharaman, what would be your opinion between Eicher Motors as well as Bajaj Auto? We've seen, both of them launch the electric vehicles ventures as well. But Eicher has been outperforming Bajaj at this point of time. Would that be your consensus buy as well at this point of time?
So I think between Eicher and Bajaj, Eicher holds a better position, given the premium biking and the way we look at. Between the two, although Bajaj has been doing extremely well in terms of exports, and if you look at the data, they have done well. But between the two, if you want me to maybe pick one, Eicher will be one, given the premium positioning of the motorcycles, what they're looking at. And premiumization will be a theme in the two-wheeler space as well. So I think between the two, if you ask me to pick one, Eicher will be the one which we'll be looking at.
All right, so that's the view coming in on all of these auto names. The next one is on Varun Beverages. Bhaskar from Bengaluru says that he wants to buy this for the next 2 odd months. So from a short-term perspective, he wants to know your analysis, Sachin, on this one. Your view on Varun Beverages?
So from last 2 days, it is trading above the 200-day moving averages. Yesterday, it retested it, and yesterday's high is also broken. So basically, this is a confirmation of going long right now. But already the stock has moved from a bottom around 27 to 28%. So what I recommend will be to buy on dip right now. And the levels will be around 460 and 445. These are the support levels for the stock. So he can buy right now 50% and then wait for the rest to add at the support levels mentioned. We can see from here around 5 to 10% if the time frame is shorter. If 2 months time frame is there, then around 10 to 15% we can see.
Got that view, Sachin. The next question coming in on HDB Financial, and this is Shrishti writing to us from Bengaluru. She's holding 106 shares at 745, which is very close to its IPO price of 740, asking if she should continue to hold or shift to some other sector. Radharaman, the recent quarterly results were actually quite strong for HDB Financial. We saw that stock move upwards also. But would you recommend Shrishti to average down at this point of time, given the positivity?
My suggestion will be from an HDB Financial, she can look for maybe switching to gold finance companies. I think they are expected to post good numbers, and there's been a good correction in the gold, and the prices are expected to move up. So the ideal scenario should be maybe switching it to maybe a gold finance company to that extent.
The next one is coming in on CG Power. Our viewer, Jayakrishnan from Kerala, wants to know if this is the right level to buy from a swing trade perspective. Sachin, any view on this one?
So on a daily chart, it has actually broken out from inverse head and shoulder type of a pattern, which is a bullish pattern basically. So he can enter right now and the targets will be around 875 and 992. These are the pattern targets basically. So overall, the pattern took around 6 months to form. So we can expect the target first of 875 within 3 months, and the second will be 6 months.
Got that view, Sachin. But let's go across, take our next caller now from Jammu. And Vivek has a stock query for us. Vivek, good afternoon. Welcome to Ask Profit. What's your query?
Good afternoon, sir. Actually, I want to know about the stock is TVS Holdings.
Okay.
I want to know about this this analysis of the stock from investment point of view, from holding it from long term, for 5 to 7 years. What is a good stock for wealth creation, and what is the right price to enter it?
And is there any reason, Vivek, you want to enter TVS Holdings? Because definitely the holding company has multiple businesses, largely driven, of course, by TVS Motor. But is there any particular reason you want to buy a holding company right now?
No, because it is one of the most diversified conglomerate of the country. So there are various businesses involved. So from that perspective, I am trying to just enter the stock. So in one company, we can get better diversification only through one company.
Right. Well, Vivek, most certainly you get the advantage of diversification. But Radharaman, on TVS Holdings, because we've seen Bombay Burma, which holds majority stake in Britannia, has also been in a sidewards momentum. What is your view on TVS Holdings? Is it something that Vivek should venture into?
So ideally speaking, maybe taking a position in the holding company, there's always a holding company discount, and the true value of the company does not emerge out in those companies. So if you look at from a true sense of investing, ideally we should avoid such setup. But at the same time, if you want to maybe take a conglomerate and then try to take it, then I think TVS holding will be a good thing for a long run perspective. But you'll always have a trouble in terms of value add, and then the holding discount will always apply. And that can further get deepened at times. So it'll be difficult to that extent to make money in those companies. So ideal speaking, you should avoid a holding company. But if at all you would like to invest, then I think it's a good company to take up on.
Okay, all right. The next one is coming on Canfin Homes. Our viewer has bought it at the levels of 808 and 139 shares is what he or she is holding. Wants to know if averaging out at the current levels makes sense or continue to hold this counter. Tell me about the companies, what he's saying. So I'm guessing he wants a fundamental view on this one. So Radhaman, I'll stick with you for Canfin Homes. What's the view like?
I think we should be looking at good numbers going forward as well. So he should be sticking to the particular script and maybe let the positions be rolled over. So effectively, he should hold on.
Okay, all right. We've got our next caller, Dia, I think is calling us from Bengaluru. Dia, very good afternoon to you. What's your query about?
Yeah, good afternoon, ma'am.
Go ahead, Dia.
I'm having transfers and rectifier shares of 800 quantity of 300 average.
Okay.
So what is which price point I need to sell this? Should I hold or just, exit the price today? I think 335. So can you please help us with a short-term and long-term perspective on this?
So Dia, when you bought this, did you see the charts while buying it?
Yeah, ma'am.
Got it. Okay, then I'll take this up with Sachin. Sachin, she's sitting on small profits right now, but given her quantity, she's gaining around 23,000 odd rupees. Do you think she should continue to hold? There's further upside on tariff, or can she book her profits?
So currently, I'm not able to fetch the company's name basically. So
Transformers and rectifiers. Transformers and rectifiers.
Transform.
Okay. Trill is the ticker for it. It's up 2.7% as we speak right now. If you can try to pull up the 3 months and 6 months chart as well for this one, till Sachin tries to fetch the chart.
Overall, yeah, I got it.
Okay, sure. Go ahead.
Actually, the NIC code for this is TARIN. So I was searching for TRIN.
Okay, got it.
It was not fetching. So currently, what we can see, the base formation has happened in the stock. But right now it is at the influence stock, basically at a 200-day moving average, which is currently placed at around 346 level. So this will be the nearest resistance for the stock, and the support will be around 306. So basically, after the base formation, what we can look in the stock, if it is sustaining above the 344 levels, then we can expect 396 and 448 levels. In this case, it needs to hold 279. So this will be the stop loss. If she is hold with this 279 stop loss, we can see the upside level. But overall trend is down, so we need to be cautious. Without stop loss, should not hold.
Got your view, but definitely. So at the bottom of the screen, of course, Nestle numbers flashing in, and we'll get to that in just a bit as Mahima goes through. I'll just take a very quick question. Or actually, we'll just stay with this because the numbers currently suggest, Mahima, at flaws that a beat in terms of the revenue, but what are you picking up?
Yeah, I think it's a beat in terms of where estimates were. The estimated number was around 6,100 and the uptick that was expected was around 12%, but I think it's come way beyond that, 6,186 crore versus of an estimate versus that of 6,748 crore coming in for Nestle. So it's a huge beat coming in. I'm sure the stock is also reacting to it. They've also declared a final dividend coming in. The net profit is also a beat, a 926 odd crore, slight beat of course, versus that of 1114 odd crore. So the expectation was of an uptick of 5% when it comes to net profit, but I think it's beyond that. Around 7 to 8% of an uptick is what we're seeing on the net profit number. Let's see if we can get the EBITDA numbers also soon flashing on the screen. But the stock is most certainly reacting to it. There you go. There's a sharp spike coming in for the Nestle counter, up 3% as we speak. And on the back of that, today throughout the day we've seen, in fact, in the past couple of days also we've seen Nifty FMCG reacting, positively. We saw Bajaj Consumer coming in with good numbers, and now Nestle also coming in with numbers completely beating the estimates, the analyst estimates, consensus estimates that we'd given, up 3.5% as we speak now. Let's try to, see if we can get the EBITDA number also. But, before I Sachin, any view on the charts quickly, considering that we are seeing a spike on this one? EBITDA numbers, in fact, by the way, have also come in. Yet again, a beat on EBITDA numbers as well. 1772 crores versus that of 1498 crores when it comes to the EBITDA numbers. So I think the margins would also be in that range of 25%. We'll get you that in a bit. But Sachin, your quick view on the charts for Nestle?
Nestle, it is closing above the 1335 level, which is very near. Basically, today it has made a high of 1334. There were the earlier levels for 1334.80. So only a shortfall. Basically, if it is closing above the 1335 level, we can see 1422 and 1510 levels on the upside.
Well, it's in terms of employee benefit expenses, Mahima looks at the other key numbers. That's actually not increased too much on a YY basis, and the other expenses also, while inching up a little bit, and that was expected based on higher advertising cost, was something to watch out for, and has been more in control in that sense as well. But let me also welcome in Mayuresh Joshi at this point. We'll try and connect with Mayuresh Joshi also, who will join us very, very quickly. But Mahima, what are some of the other details that you're picking up?
I think the key commentary coming in, before I go on to that, I think margins, the big beat coming in. The expectations was to come in at that 24% mark and come in at 26% mark, which is even better as compared to what they did in Q4 FY25, which was around 25%. So that's definitely on a very surprising note coming in. I think, like Puneet was mentioning, it's the employee costs which have not moved much. We'll have to see as to how they've penciled in terms of the edible oil inflation, which probably will take effect in Q1 FY27, because edible oil prices, palm oil prices to be specific, have gone up by 25% in this quarter itself. So they, quarter 4 would have been running on the prices that they would have bought in the last quarter. But I think quarter 1 is where they're going to take the hit in. But the commentary coming in, all our business channels have recorded a strong double-digit growth. I think that is something that brings in positivity when it comes to the stock performance as well. Nestle India has reported the strongest quarterly growth in nearly a decade now, by the way. And you're seeing that stock coming up on the back of that and driven by double-digit volume growth. But we'll soon also get you an analyst view on Nestle as a whole. But Radharaman, by any chance, if you've had the chance to take a look at the numbers, any view on Nestle?
I think there's a good beat both in terms of revenue and bottom line. We have to look at the finer details by the time we get it, but there's a very strong set of numbers coming in and maybe define the whole piece. In fact, we've seen the results of Bajaj Consumer and then followed by Nestle. So I think once we deep dive and maybe understand from the call, but it's a very positive beat on both the sides. And especially on the top line side, I think they have done extremely well.
Okay, we've got Avinash joining us on the phone call now. Avinash, very good afternoon to you, and thank you so much for joining us at such a short notice. Your first read on the numbers, it seems to be a big beat coming in, and I think the surprise for me was on the front of margins. What's your take?
No, definitely. See, margins seem to be much better. In fact, the street was expecting a little improvement in the EBITDA margins, but I think this kind of beat is quite surprising, and I think the markets would like to know how sustainable these margins are. In fact, what has been the volume growth trajectory, what has been the value trajectory. I think overall these numbers, I think clearly indicate that maybe the first quarter of this financial year, that is April to June, also should be good. For a long time, markets were expecting that the margin improvement was always reiterated by the management was not coming. So I think this quarter it's got reflected. So net it's a good performance, but we'd like to wait for some more clarity and some more inputs from the management.
Avinash, they're saying, in the commentary they're saying that they've seen a double-digit volume growth coming in. Any rough estimate of what this volume growth could look like?
No, I think, it could be close to, I think, double digits. But if it is beyond, say, 9-10%, I think that's a very good number, because on a higher base, if the company is managed to, show this kind of volume growth, it means that demand has actually picked up pretty well. And I think we like to know, which category of, segments have actually grown, because ultimately, it's finally, they have a large rural base also. Plus, they also cover most of the urban markets. So I think, we like to know which category has grown the fastest. And obviously, overall, if it is more than 10%, I think it's definitely good for the stock. I think the stock should show a good upbeat.
As you rightly mentioned, Nestle is one of those companies that has higher exposure when it comes to urban markets. Do you think that this is an indication of urban coming back strongly?
Yeah, it looks like. See, I think frankly, my sense is, they are into product categories where pricing is very competitive, and I think, the demand pool is also very strong. So I think, yes, demand again seems to be coming back in a strong way. And I think hopefully, if this volume growth momentum is sustained, then I think margins also could be maintained. So we'll have to see net from the management what kind of growth outlook they share, post the numbers.
Certainly, Avinash. And one interesting aspect which, Mahima was highlighting in terms of the commentary by Manish Tiwari, the chairman and managing director, he's mentioned that a double-digit volume growth has been achieved, driven also by a 50% increase in advertising spends. Despite that, the margins are at 26.3%. Avinash, while of course we're dissecting these numbers, despite such a high advertising spend in this particular quarter, something that analysts were penciling in, the EBITDA margin number, I think, is just a standout, right, at this point of time?
Yeah, exactly. I think 26% EBITDA margin, Puneet, definitely is a very strong kind of indicator of the pricing power of the company. And I think, the kind of money they have incurred in the advertising, kind of budget, I think finally the payback seems to have come very well. So, ultimately it's a question of payback, how swiftly revenues grow. And I think that has got reflected in the top line and the volume growth and obviously the margin. So I think this is something the markets would definitely appreciate, by giving a thumbs up to this kind of performance.
And just Avinash, one last question with regards to how, we've been talking about this raw material cost inflation, right? Might be something that we pencil in Q1 FY27. But, as per Kotak Securities note, Nestle is the least affected, but still will have to take another 3% hike coming in, which might see impact on volumes going forward. Any thoughts on this?
No, I think, my sense is 3% increase in prices may be staggered. It may not be announced immediately across all product categories, but even if it is done, I think, the company has a very strong product portfolio, very loyal customer base. And I think, to that extent, maybe not in the first quarter, but starting from the second quarter, these prices would be comfortably be absorbed. So I don't think it's going to create a very significant amount of margin dent for them. Of course, in the near term, it could mean a little bit of margin pressure, because they may not immediately increase every product category price. But second quarter, I think things should normalize.
Okay, all right. Avinash, thank you so much for helping us with, all those insights that you gave on Nestle. Most certainly the stock, zooming in trade as we speak on the back of its Q4 numbers, as, has beaten analyst estimates by almost 500 crore when it comes to the top line. Plus, a 12% of increase was what the analysts were expecting versus that of a 22% of increase that's coming on top line. But with that, completely out of time on this edition of Ask Profit, Sachin as well as Radharaman, thank you so much for taking out the time and helping us with all those perspectives that you gave on the stock-related questions. Viewers, completely out of time on this edition of Ask Profit. Do stay tuned. India Market Close comes up next.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better.
Welcome, you're watching India Market Close, and what a fantastic close it's turning out to be. The cherry on top was Nestle, but even before that, superb strength on the Nifty, pull up the intraday. So a couple of things are happening here. There seems to be more and more signs that there will be a meeting between the US and Israel. One report saying that Trump may make it to the meeting venue as well. So markets have anyway been higher, and then Nestle came in and just gave it that one accelerator, didn't it?
Absolutely. Another instance where you're seeing Q4 numbers that are ahead of estimates. And is this going to be a trend that we see across the board? For the FMCG pack, certainly, but a few more sectors as well. Pull up the heat map for the Nifty 50 and you will see Nestle right on top of the pack today. There you go, Nestle up 4%, but take a look at HUL as well, and we'll pull up the intraday chart. You just saw the Nestle intraday chart, so pull that up again and you will see what we're talking about. That spike immediately after the numbers. It's trading at the high point of the day, but also pull up the HUL chart, because the initial indicators that you're seeing through Nestle might actually flow through to the rest of the FMCG pack as well. So pull up the constituents of the FMCG pack next and see beyond Nestle and HUL whether there are bigger movers. Varun Beverages, Dabur, HUL, Patanjali, Britannia, the whole pack, apart from a couple, are actually at the high point of the day.
No, so Nestle is exciting. I mean, a huge beat on top line. We're going to go across to Mahima for a second. Just want to pull up for you what's happening in the markets before we do that, because yes, Nestle is the big story, but what we're seeing in the markets overall also crucial because of all of the news flow that is coming through. So let's pull up the mid cap and the small cap if we can, those key indices at this point, and take a look at what's happening over there. The mid cap about 0.5% up, so this is more of a nifty story today, I would say. The small cap, though, about 1% up. Let's pull up the advanced decline ratio, and then we'll give you the market recap as well, right, on what really is happening right now. 1800 to 800 odd is the advanced decline ratio. Beautiful gap over there pairing out. Meanwhile, the sectoral heat map will give you a sense of what's moving. And FMCG, you could have got that spike because of Nestle, but Nifty Realty really is the star of the day. Since this morning, you have not just the one company that had its business updates across the board, because remember, it's become an indicator and a play on what is happening with input costs in the war. The only thing in the red is the Nifty CPSE mildly 0.5% down.
I will also point out, though, Tamanna, that the Nifty Bank has been trading higher. It's the private sector banks today that are really pulling the weight, and both HDFC Bank, ICICI Bank doing well. through the session today.
Delayed response there. So it's a terrific Tuesday. Nifty has gained for a third consecutive session. It's gained over 200 points on an intraday basis. Ceasefire optimism is what has lifted sentiment. It's a decisive close above 24,500, which is clearing a path for a fast move towards 24,800. I mean, it's a while before we even spoke about those levels. 24,600 is the intraday resistance. We'll have to see before the end of trade today, do we hit 24,600? 24,500 and 24,450 are support levels. Value buying is continuing in small and mid caps. Bank Nifty outperforming today, all components trading in the green. Private banks are leading the gains, crossed the key psychological hurdle of 57,000, resistance at 57,700, supports at 57,000 and 56,800, sustaining above 56,500 now is vital. But let's talk about the stock of the morning, stock of the day, I think. Nestle. Mahima, this is a surprise on all fronts. You were talking about a massive top line beat, isn't it?
Absolutely, absolutely, Tamanna. The expectation was that a double-digit growth of around 11 to 12% on the top line, but the top line beat has come in at that almost 23% of an uptake. So it's a big beat coming in, almost a 500 crore beat as compared to what analysts were penciling in. And this is despite of, I think this was the highlight for me, where Manish Tiwari said that this beat is coming in on because of a 50% increase that they did in advertising spending. And this 50% increase in advertising spending, despite of that, margins have, upheld and in fact seen 700 to 800, 70 to 80 basis points of an uptick. Margins have come in at that 26% mark versus that of an expectation of 24%. Overall, in terms of revenue growth, 23%, EBITDA growth at 27%. And overall, we've seen a good growth coming in for profits as well as compared to the estimates. I think the key takeaways that all of the products have seen double-digit volume growth coming in. Strongest ever quarterly growth is something that they've posted. Domestic sales, the expectation was that the growth could be around 13 to 14%, which has come in at 23%. I think this is suggesting that probably now is the time when urban recovery is kind of playing its part. And of course, the GST rate cut benefits is now flowing in completely for these FMCG companies. Overall, if you take a look at how segments have done, powdered and liquid beverages have seen a high double-digit growth. There's also prepared dishes, cooking aids, etc. that have seen good growth in terms of a value as well as volume goes. And here they have said that this is fueled by engaging urban consumers. Now, this is a important comment coming in from the management. Pet food business has also delivered a double-digit growth, and milk product has also shown a steady growth. They've said that as they look forward, consumers centricity, penetration-led volume growth, reinvestment behind brands, as well as accelerating tech-led sales is something that they're going to focus on. I think even in terms of raw materials, because coffee prices have continued to trend lower, plus cocoa prices is something that have remained subdued, has played its part when it comes to Q4 earnings. But, let me also get in Kaustubh Pavaskar, lead analyst at ICICI, joining us now. Kaustubh, very good afternoon to you, and thank you so much for taking out the time. Your first read in terms of where Nestle earnings go, because it's a huge beat coming in where the numbers are concerned.
So, strong set of numbers, better than what we had Street were anticipating for the quarter. So 23% growth in the domestic business is much, much better than what we at Street were anticipating at around 15 to 16%. So I guess all the segments have done well, and they have clocked in double-digit volume growth in all the segments, and I think that has led to the strong revenue growth during the quarter. Also on the margin front, 26% margins improved by 100 bips on YY basis. So again, strong set of numbers on the margin front as well. So overall, it's a strong beat at all levels.
Kaustubh, hi. Good afternoon. Tamanna here. Just trying to understand whether you're seeing any signs of urban consumption recovery in the numbers, and where do you think that top line beat is coming from?
See, this is the first quarter after the entire GST transition. What our sense was that food companies will see a faster recovery compared to the other FMCG categories. And I think we are seeing that in the Nestle's numbers. So I believe that on the growth trend this quarter they have done extremely well. I believe other food companies will also follow the same. But if you talk about the sector, I think sequentially most of these companies will deliver good set of numbers on revenue front. Also the margins would also be better on the if you consider it from sequential point of view. But going ahead, you need to wait and watch, how things would be. Because for Nestle, they have said that most of their raw materials have remained behind, but vegetable oil packaging first, it has gone up. So we need to wait and watch that how things pan out in the quarters ahead. There will be some bit of, there might be some bit of pressure in the near term on the margins, but I believe that if volatility in the commodity prices reduces, I think those margin headwinds will go and things would be near normal for most of the FMCG companies.
Good afternoon, Alex here. So I take all of the points that you've raised, but just a question here about the fact that the street seems to have underestimated the extent of the tailwinds that Nestle in particular has benefited from in the fourth quarter. So this is ahead of consensus estimates on revenue as well as on EBITDA. Margins have come in ahead of expectations, and therefore it's a beat on the bottom line as well. Double-digit volume growth. I'm wondering how much can this be extrapolated for the rest of the sector? Is there a possibility that there is a significant degree of under-expectation for the rest of the pack as well?
Specifically about Nestle, I think they have, highlighted that in their press release that they are spending on their media and advertisement, promotional activities. Also, they are focusing on increasing their distribution strength in the rural market and also, improving their penetration of most of the categories. So I think that is helping, a company like Nestle to drive growth. And as I said, that this was the, quarter after the GST transition. Obviously, most of the companies will benefit, but even Nestle was benefited out of it. So I think the growth has improved. Whether this growth will continue in the quarters ahead, it is, it will be, it is wait and watch. But I think Q4 solid, numbers.
Kaustubh, in terms of volume growth, they've of course mentioned a double-digit volume growth coming in. But as per your analysis, can you help us quantify, by any chance, if you have a number in mind as to how much of a volume growth they would have had? At 12%, 13%?
Very difficult to gauge, the exact volume number because they don't like that. But I think the volumes must have improved sequentially, volume growth. So there should be a sequential improvement in the volume growth. That is what I feel. But very difficult to give you the exact volume growth number.
Okay. The margins have also been exemplary, actually, at 26.3. The full year average was 23%, just for reference there. Kaustubh, thank you so much for joining us on the show. Sudeep Bandyopadhyay joining us right now for a view. Fundamentally, he's Group Chairman, IndiTrade Capital. We also have Vishnukant Upadhyay, AVP Research and Advisory at Master Capital Services, for the technical view. Welcome to both of you and thank you so much. Sudeep, first take on Nestle, since that really is the talk of the town right now.
Fantastic set of numbers, Tamanna. I mean, I think best ever quarterly result in about a decade. It's much better than what the market was expecting. The best case scenario being plotted was 15-16%, and they have come up with a 23-24% growth on the revenue. So it's fantastic. Margin also has surprised everybody on the positive side. So, and I understand that pretty much all the product lines have contributed. They are talking about urban sales revival, which is very interesting because it will have a cascading impact on multiple other FMCG companies. Nestle was always a well-managed company, and the kind of margin now they are showing 26.3% is really impressive. So yes, it's not a cheap stock. The valuations are rich, but performance has been outstanding, no doubt about it.
Okay. So outstanding on Nestle, Vishnukant Upadhyay, just want to get a nifty call from you. Even as we're talking about Nestle, and I'll come to you on Nestle, what's the nifty call right now? Or do you think we can lick it 24,600 anytime soon?
Good afternoon, Tamanna. Definitely, prices are heading towards it's a 200 exponential moving average that position somewhere around 24,800. So definitely, we are continuously seeing bullish momentum in the prices, and prices are currently trading up it's a short-term moving averages, that is 21.55, and now heading towards a 200-day moving average. But we can expect some sort of profit booking from the proximity of that level. So for the target of 24,700, 24,750, one can go long in Nifty.
All right. One of the reasons why there could be this kind of excitement in the markets as well, one of the reasons are these reports, Alex, and I don't know what you think, saying that Trump may join the Iran talks. Now, this is coming at a time when on the other side you have handles which are supposed to be representing the Iranians, saying that our preliminary team, our secondary team, our zero teams have even left for those talks.
So it's interesting because on the one hand, you have the US that seems to be very or making a very concerted effort to say that these talks are heading in the way that we want them to head. On the other end, there is actually a lot of disparate information that is coming through. There seem to be three different cohorts that are talking about, okay, possibility of talks. Somebody else is saying absolutely not. And the third person is saying we won't negotiate with this sword hanging over our head. So we don't know from that side what the deal is. I will believe it till when I actually see footage of Donald Trump or any of his representatives meeting with the Iranian delegation.
Yeah, let's see them in the same room. But in fact, let me go across to my colleague Vishal Vivek. He's associate news editor at NDTV, and he's been tracking this story very closely. Vishal, thank you so much. What is the latest that you're hearing?
See, it's as Alex rightly mentioned, it's conflicting reports coming in from the cohorts. Different cohorts are there. And even from inside Iranian regime, there are two different factions right now that are emerging. The first one, of course, is the Iranian negotiators themselves, who seem to be quite willing to negotiate with the US side. But on the other hand, IRGC's, IRGC regime inside, they don't want the negotiators to budge on any of the points that Iranian regime has been talking about for the last 3 or 4 weeks. So there seems to be conflict, inner conflict going on. On the other side of the spectrum is Trump himself, who has been giving contradicting information for the last 3-4 days. It started on Friday with him saying that a deal is almost finalized. Iran has agreed to almost everything. And now, just about 24 hours ago, he said that he's ready to blow up Iran if the deal does not go through. So what deal was he talking about when he said that Iran has agreed to almost everything? Iran has, of course, completely rebuffed whatever Trump has publicly said. So we'll have to see how all of this, confusion unfolds in the next few hours or so, because we have just about 36 hours before the deadline collapses. And mind you, Trump himself has extended the deadline by about 24 hours. So we have just about 36 hours to deal with this huge problem, following which the war could be escalated to the next level. What that means, only Trump knows. So we'll have to see what Trump says now.
Absolutely, Vishal. Thanks so much for summing that up for us. And so certainly there are a lot of, I think the one way to put this is the only certain factor is that there are so many uncertainties. In that context, what are the individual counters that you should look at? We've taken an index view, but Vishnu, what is the strategy on the individual counters and the technicals that you would suggest?
Alex, currently one stock is on my radar, and that is Niva Bupa. And talking technically, the prices has given a very clear-cut breakout from the falling trendline resistance that had been acting as a very stiff resistance for long. Apart from that, the prices are currently drifting well above its all key moving averages. We can say the cluster of the key moving averages, that is 21, 55, 100 and 200. In yesterday's trading session, we have seen some sort of retracement to the breakout point, but now prices are up around 2%, and we are expecting this bullish journey likely to remain intact with a potential upsurge towards 84, 86. So on the lower side, one can put a stop loss below 77, while on the higher side, 86, 88 sort of levels will be on card very soon.
Got it. All right, let's talk about PNB Housing Finance. And this is the stock of the day today, because what a set of numbers. I guess to a certain extent, the argument can be made that Nestle has thrown its hat into the ring, but purely in terms of the percentage increase that it is seeing, PNB Housing is currently taking the cake. Let's go across to Sharad Dubey, who's joining us now to tell us what is working for PNB Housing. Stellar set of numbers.
A really strong set of numbers, and because of that, the other housing finance companies are also rallying in trade. But I'll give you 5 important reasons why PNB Housing Finance has done well in this earnings. The first and foremost is the retail disbursements that has touched its all-time high levels. Second reason, the cost of borrowings, if you look at it, that has been improving and it's declining since the last 5 quarters. The third reason is that the emerging market segment has done well. Almost, you could say, 31 basis points higher incremental yield has come in if you compare that with the prime segment. The fourth reason is the strong recovery coming in, especially from the write-off pool. Almost 24 crore in retail and 143 crore from the corporate books. And the last reason is the credit cost has been negative over the last 5 quarters, reflecting strong recoveries. And that is where the PAT number also drove the PAT estimates. Now let's look at the valuations of how the peers are looking. We have taken the 1-year forward price to book ratio. PNB Housing Finance trades at 1.2 times. You could say it's evenly posed. Aadhar Housing Finance still cheaper at 0.7 times, and LIC Housing Finance on the higher side, almost 2.5 times its 12 months forward price to book ratio. Let's also pull out the consensus rating for the company itself. Out of 14 analysts tracking the stock, 12 of them have a buy rating, 2 have hold, and not a single analyst has a sell rating. And a 12-month target return potential from the current prices is roughly 8.5%. Let's also see the analysts' views, how things have moved. For UBS, they have maintained a buy stance, and Morgan Stanley, it's at overweight. And interestingly, these are the important target prices from these broking houses. But what's the outlook guidance ahead for PNB Housing Finance? The loan book is expected to grow between 18 to 20% and cross the 1 lakh crore mark by FY27. The return on assets, ROA, that's expected to remain in the range of 2.4 to 2.5%. And the yields, that's expected to bottom out and will improve from the first quarter FY27. NIMs are expected to remain range bound between 3.55 to 3.65%. And lastly, the focus would be on the affordable housing and the emerging segment, expected to improve the yields going forward. So this is the important outlook coming in for PNB Housing Finance.
Got it. All right. Let's go across to Sudeep to find out whether he's enthused by this particular housing finance company and what he thinks it means for the rest of the space. Because the entire pack is buzzing today, Sudeep.
You're absolutely right, Alex. I think what is most interesting and heartening for the entire sector is that the retail disbursements are going up, and that's a very, very good trend from a margin perspective because the retail has much better margin compared to corporate loans and larger loans. So smaller loans going up, the affordable segment getting more traction is definitely good news for most of these companies because their earnings will improve, margins will improve, and the risk will get dispersed over a larger number of loans. So structurally, this is good news, and I think most of these companies are focusing on affordable and small loans to retail will benefit. We've already seen how Aptus and other companies in the private sector have shot up as far as price is concerned. As far as the public sector or quasi-public sector housing finance companies, I think PNB Housing Finance definitely is fantastic performance. But I would also look at LIC Housing Finance. I think there is a scope for significant improvement as far as LIC Housing Finance is concerned on the valuation front. Canfin Homes also looks interesting. So some of these companies definitely will come up with equally good or even better set of numbers. We'll have to keep watching the space.
Okay. The West Asia war has, of course, triggered an energy shock and disrupted global supply chains. It's a different matter that right now and today, at this point in the market, no one seems to care. But what really is the big picture that we're going to be seeing? Avendus Sparks believes that India's macro setup remains cyclically well positioned for a demand rebound with an expected recovery across credit, consumption, and the manufacturing capex cycle. Vijay Raghavan Swaminathan, the Managing Director and Head of Research at Avendus Sparks Institutional, is joining in to talk more about this. There couldn't be a better time really to have that conversation, Vijay Raghavan, especially in the context of what we've just seen with the Nestle results. Since you're talking about an expected recovery across credit and consumption, are we seeing that playing out already?
Hey, thanks for having me. If you rewind the story on a macro side pre-war, just 45 days back, clearly, macro is well positioned for a combination of credit growth recovery and consumption recovery and capex recovery. Why consumption recovery? This is predominantly because of the efforts taken by the government and the RBI in the last 12-18 months by ensuring that the inflation cycle and interest rate cycle is pretty much intact, due to which we are logically calling for a consumption recovery. And you add the fiscal benefits of government giving GST cuts, personal income tax, all of this lag effects is what is likely to see a consumption recovery is what we called out. Then, the last 45 days, this war-related, disruption came. Now, right now the priority of the government is to ensure that energy availability needs are met. But having said that, whatever construct we were betting on pre-war, those construct is pretty much intact. Is the broader way we are thinking right now. On the earnings side, so the quarter which has gone by, we are fairly confident that the earnings cycle should definitely be good because of the same reasons which I mentioned. Whatever high frequency indicators which we have been tracking, especially in Jan, Feb, March quarter, should logically mean earnings by and large should definitely come better is a broader thinking which we have.
Interesting. What are the threats to that assessment though, Vijay Raghavan? Because ultimately, you're going to have a situation where sooner rather than later, if the situation does not change, you will have prices at the till, prices at the pump that will go up, and that will bleed through to the rest of the system. And so if prices go up, you will have certain companies with leadership that will have pricing ability, but that will have a bearing on demand, won't it?
Yeah, so it depends on the longevity of the war, which is what we mentioned. None of us knows when exactly this war will end, because today is the last day of the 2-week duration of ceasefire. Assuming if this the status quo continues, if the ceasefire movement continues, we still think we have buffers in place, be it on the monetary side or on the fiscal side or on the inflation side. We can manage. Worst case, the Q1 earnings can definitely be tepid, but we still have a lot more firepower for us to come back in the rest of the fiscal year the way we thought through. It's
just to be clear, and okay, so I want to be absolutely certain of what you're saying. So if you're saying that there is no end to this war, but there is a status quo in that there is no additional escalation, right? So what we're seeing right now. Having said that, if this continues for the next 2 quarters, you're saying that only the first quarter will get affected?
No, it depends on where energy prices ultimately settles. So, which is what we mentioned in our note. India never managed any crude oil prices sustaining above $90. Because if it sustains above $90, it will definitely have ramifications on growth. So, which is what we said, rather than taking a call on, when exactly things will settle, it makes sense to have an approach where whether we can see through the crisis better by going back to the shock absorbers. Those shock absorbers suggest that we can manage the situation at this point of time. Obviously, the more it lasts longer, the pain will also be higher. But at this point of time, it is completely uncertain and unpredictable.
Vijay, if I can call you Vijay, if that's okay. Just trying to understand how you are seeing the results that we've seen so far. We've had enough sizable information as far as the IT sector is concerned and private banks are concerned. What has your assessment been of these two spaces?
Yeah, our assessment is, 2 large banks already announced results over the last weekend. I think nothing much to complain on the earnings which has gone by. So if you look at from growth, margin, and from the earnings growth standpoint, most of them, so far are coming in line with our expectations. We are not seeing any material downgrades at this juncture for the results which has been announced so far, though early days. So we are not going to see any disappointment in earnings trajectory of the companies for the quarter which has gone by.
I'm just referring to your report, and it's all right if you can't comment specifically, but I'm asking in general, based on the thesis that you've just described, Vijay Raghavan, what are the ideas that you are confident about, relatively speaking, at this juncture?
Yeah, relatively speaking, again, I put a caveat, assuming, we put a ceasefire by end of today, assuming this continues. Clearly, where we see margin of safety is the large private banks. The entire banking space looks interesting from earnings comfort and multiples comfort standpoint. That is one pocket where, absolute returns can still be made. The second pocket is select consumer companies which got hammered in the last, say, 45 days of correction. We still think there are good managements out there who can deliver within the consumption cohort, where we can see good earnings recovery prospects in the next 18-24 month cycle. Thirdly, in the whole of manufacturing/industrial space, because we've been quite bullish on this particular segment because of the priority of the government. So we are all aware about the employment issues. Pre-war, the main problem which India macros are facing is the extent of white-collar job creation in the light of IT sector clearly seeing a stagnation. So in our estimate, what can happen is government will give a lot more priority for manufacturing capex once the war-related problem settles. We will see more reforms which will accelerate manufacturing is the broader thing which we have. So financials, select consumption, and industrials are our preferred sectors.
Okay, and any avoids in that list, Vijay?
Avoid, from a relative standpoint again. So to us, the property cycle, the property developers still, we are not able to, reconcile the demand aspect. Though the listed developers are doing good, but aggregate demand is still not showing any signs of strength. So that is one segment we are completely avoiding. Second segment we are avoiding is any companies whose fortunes are aligned to state government, with state government fiscal not in a great shape. We would like to avoid, state government dependent companies in particular. We want to avoid.
Yeah, Vijay Raghavan, thank you so much for taking the time. Pleasure speaking with you. And by the way, I just want to take you through some of the names that they've listed out, Avendis, in that note that they've sent out. And they were talking about the fact that they're overweight on financials and consumption. That includes auto, industrials, pharma, and healthcare. They're equal weight on IT, telecom, and media. So what do they like? Marico, they say, is a quality pick. They like Indigo, Voltas. They say they're defensive and turnaround picks. Jubilant Food, TVS Motor, and Eternal are cyclical picks. In the industrial space, they're looking at Supreme Industries. They're looking at KPR Mills, Tube Investment. They're also liking Ramco Cement. They're talking about Thermax, ABB, Triveni Turbine, Deepak Nitrate, all of which are cyclical picks. They like TCS and InfoEdge as well as Indus Towers. So whole host of stocks that they've spoken about. Vishnu, if you caught the names that I have just read out to you, which of these would you say are strong when it comes to the technicals and the charts?
So it's I think Triveni Turbine or Triveni Engineering?
Triveni Turbine.
Okay.
And so you can throw ABB into the list as well, and Thermax.
Well, so basically, Alex, ABB and Thermax has deviated too much from their moving averages. So definitely there is a correctional fall due in the market. So let's first, talk about the Triveni Turbine, which has given a very good run up in yesterday's trading session, and currently it is trading with a loss of around 1%. Recently, the price has given a very clear-cut breakout from its crucial horizontal resistance that were aligning somewhere around 550. So it is mildly 20 points above from that area. I'm expecting some sort of corrective fall that should be containing around 560, 550. From that level, we can go long in Triveni Turbine, and stop loss should be maintained below 520, while on the higher side, 640, 660 will be on card.
Okay, thank you so much, Mr. Upadhyay, for joining us today and adding your views as well. Sudeep, always a pleasure to have you on. We're going to continue all of our conversations here, but it's time for that part of the show that everyone waits to tune in on, where we give you what's heard on the street. We have some exciting stuff today, don't we, Samit?
Yeah, quite a list of stocks that I'm picking up from the dealing room. Firstly, it's on IIFL Capital. Now, what dealers are indicating is that there's a buzz of some positive news flow regarding a stake sale that could come in from the promoter side. Large FI could be a potential buyer here for IIFL Capital, so keep an eye out for that counter. For Borosil Renewable and Brainbees, buy flows on the large HNI desk. Dealers indicate that prominent HNIs have been accumulating this counter in trade today. Apart from that, there is Industar. Now, there are buy flows on PMS desk. Dealers are expecting some positive news flow regarding either a buyback or dividend that could come in from Industar's side very soon. This announcement is expected. For Nelco, multiple dealing rooms are recommending sell calls to their clients. Now, these are positional sell calls that dealing rooms are recommending, and this could largely be because dealers believe that all the positives are largely priced in for Nelco currently. And lastly, when it comes to 361, there are buy flows on institutional desk that we are seeing ahead of the company's earnings. Earnings and delivery volumes are also expected to be on the higher side. So keep an eye out for 361 as well.
Okay, thank you for that. Please note, when markets are in a good mood, there's always a lot more buzz to talk about. As market mood goes down, that buzz list also.
By the way, we're 7 points away from 24,600.
Okay.
Or just 4 points away.
4 points, okay.
Points.
Okay, maybe we're going to hit 24,600 in the show. Then we'll get a fresh technical view on what should be the Nifty call. We're taking a very short break. You can't miss today's episode. We're coming back with the top BTST idea and a lot more.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Sell Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade.
All right, India market close, becoming an exciting show today. Let's just pull up the intraday of the Nifty. We've hit 25,600 and then come off quickly, not by too much though, not by about 40 odd points at that point. So remember, we told you about that's one important mark to look at, but if you do cross and sustain above 24,600, you could be looking at 24,800 levels. Deepak Shenoy joining in now on the show to talk about what's what. CEO, Capital Mind Mutual Fund. We're also joined by Vinay Rajani, CMT, Senior Technical and Derivative Analyst at HDFC Securities. Welcome to both of you. Deepak, is turning out to be a good afternoon. What is it? Is that no one really is too worried about what happens at this meeting, this ceasefire, or it's just such a surfeit of information that's unclear that people have decided to look at what's in black and white?
To be fair, Tamanna, nobody knows why markets go up when they do. They don't know often when markets go down when they do. So we're all guessing. So if I had to wager a guess, it would be like, oh, the world thinks that we're going to go back to normal, but it might just be just a a strong rally in a down market. Down market rallies tend to have very, very strong moves, and we've seen this in the past as well. So, it could be just that. So until it breaks back into all-time high territory, in fact, once results come, I think you'll see a lot more focus on company-specific moves and commentary around how the current war or the situation is affecting companies. That's when you'll actually see some of the changes underlying the companies kind of reflect into their prices. So we still have a month more of earnings to go. So I'd say a lot more is to come. However, it does seem like nothing can bring this market down, such as same way as nothing could take the market up last month. So you're in a good phase. Just enjoy it while it lasts, I guess.
I will come back to you, Deepak, on a couple of talking points, but I do want to go first to Vinay Rajani. Vinay, enjoy it while it lasts is the message from Deepak Shenoy. The question is, in your opinion, based on the charts, how long will it last? And will we cross that 24,600 mark? Because we touched that and came off pretty sharply. That is the initial resistance, is it not, for the benchmark?
A rally of 11% from the recent swing low of 22,182, and it is not a nifty rally, it is also a broader market participation is there. So overall trend has been positive and nifty is sustaining it high towards the next resistance of 200 days exponential moving average, which is placed at 24,800. And the way broader markets are participating, it seems that even if Nifty comes down, some stocks and sectors will continue to participate very well. Now that we can see that movement is coming in the FMCG now, IT, metal, capital good, power, all the sectors are participating turn by turn. So that is a very good sign. Breadth is improving a lot. So I think market should remain strong in this particular month and coming days. So yes, overall market view is bullish for the short term, and I think this rally is here to stay. Though there could be some running correction on regular intervals as steep rise has been registered, but overall I feel that there will be an opportunity in different sectors across the different sectors. So we will continue to get the opportunity and to generate the alpha in some sectors and stocks from here.
So buy on dip is intact. So what are the individual stocks that you would look at this moment?
So I can see some fresh movement coming in FMCG sector. So one of the stock which I like is the Jubilant Food. So Jubilant Food has given a nice breakout on the short-term charts and got out of the oversold zone. So Jubilant Food, which is trading around, let's say, 469, 472 is looking good for 5 to 7% immediate gain. Today's low should be kept as a stop loss, which is around 453. So Jubilant Food is looking good to us. Another stock from the same sector is the Pidilite industry. Pidilite also is a reversal case, and after long underperformance, this stocks has started getting some traction on the upside. So I think this Pidilite industry, which is placed around 1400 odd level, is headed for 60-70 rupees upside immediately from this level, and the stop loss can be kept at 1380. So these are the two stocks in which I can see a fresh momentum getting built. So Pidilite and Jubilant Food would be my short-term trading picks.
By the way, Nestle is currently trading with gains of 6.7% at the high point or very close to it, and the top performer on the benchmark Nifty 50. Deepak, you were talking about Q4 and the fact that the street will have a decision to make with regard to the direction and pricing of individual stocks based on these numbers. I'm wondering what you thought of these numbers on Nestle, whether you can extrapolate that to the rest of the consumption basket, because Q4 could be good, and whether you're worried at all that this might be a bit of a mirage, because Q1 there will be a bit of a hit.
Both. I think from a FMCG perspective, surprisingly good results. Because usually you would get the 10 to 12%, you're getting 20% plus on a same quarter basis. But I don't remember if there was a one-off last time and there was something else that was happening. But overall, the yearly numbers are still at about 15%. I don't expect this to continue meaningfully going forward. There is, some more of the commentary elements that still have to come in, but I would say this is an interesting first step. So maybe there will be more. FMCG is actually going to do well at this time, despite some of their input costs going up as well. I would say that's actually a pretty good sign for consumption, especially if there's even more than 12 or 15% volume growth. However, the prices of the stocks themselves are quite expensive. So you're actually betting a lot more on these kind of valuations continuing for the long term, which I think is a little dangerous to, regardless of how good a company is, paying 70 or 80 times earnings at a 10 to 20% growth. No, it's not going to be meaningfully useful in the long term. You need much higher growth numbers, and I don't think those are going to be as forthcoming. You might get 20% in 1 month, but unlikely in future months in general, even without a crisis.
Okay.
This is not an industry that moves that fast.
That's true. That's true. I think it's surprised on the positive, and that's why you're seeing that sharp move today. Deepak, please stay on with us. Exclusive news coming in this afternoon on NDTV Profit on IFL Capital. Sources telling us that there's a possible change in the ownership structure that we could see involving Fairfax. Nisha Podar joining on the phone line with more details. Nisha, what are we picking up?
Yes, that's going to be a very big development coming in for IFL Capital. What two important sources with direct knowledge of this development have shared with NDTV Profit is that Fairfax is looking to be the co-promoter and the majority stake owner of IFL Capital, and this will happen in 2 stages. First stage is likely to be where there are advanced talks between Fairfax and IFL Capital currently, where Fairfax is looking to buy close to 10% stake via preferential allotment of shares. So as per the current market cap, 10% is about 1,000 odd crore rupees, and that could be a fund infusion in IFL Capital for the growth of their new businesses in asset management and wealth management. Now, the second one is that after this pref allotment, it will trigger an open offer because IFL already owns over 30% stake in IFL Capital. Fairfax owns. And therefore, after the open offer, it could take Fairfax stake in IFL Capital above 50% and be a majority controlling owner and even co-promoter with the promoter of IFL Capital is what we are gathering. So it's a 2-stage transaction. Of course, the deal is in advanced final stages is what we gather, and it could take a couple of weeks for the announcement to come in. But it's at the final stages, and 1,000 crore rupees of fund infusion as the first tranche is likely to really benefit the company as well. So that's the exclusive detail of this deal development coming in.
Okay, important one there, and we're seeing that stock price spike up even as we're breaking that story. And IFL has been buzzing, featured on Heard on the Street as well this afternoon. Thank you for that, Nisha. Just coming back to the point, Deepak, that of course I'm not going to ask you to comment on this story. It's a breaking story, exclusive story we're doing. But on the point that there is so much happening domestically which has so far not been top of mind. Even I take your point on a company like Nestle and valuations, etc. But the fact that this is one of the best quarters in recent memory, the fact that ICICI Bank is doing what it is doing in a rough phase, and yes, that's a pre-war quarter, but it's doing what it's doing. So some of the numbers on ground that we're seeing are pointing to a stronger fundamental case than is now visible.
Well, I would say doubtful on, say, a bank, because the bank you're speaking of, you're talking about less than 10% growth. I think that is not very good. They got there also on the back of lower provisions. Both the big banks have, because of an RBI thing that allowed them to claw back some of the provisions that already put. So I would say, that isn't impressive. Some of the smaller banks, the public sector banks that have announced some results, I think those are more impressive. But a profit growth of 9% in a banking system which is relatively unaffected by these global changes, I would say is a problem. So while the FMCG major has been good, I don't see many great results from the traditionally large companies, whether it is IT companies or the banks so far. We're seeing more interesting results in the mid and small caps. So I think that way, there may be a recovery, but it may be at the mid and small cap earnings level. the larger caps may be more about stability. So I'd still say it's going to take some time. There may be some, because of these changes, there could be some M&A opportunities, and we're seeing some of them happen anyways. There will also be deployment of cash or new capex announcements, especially in the manufacturing and defense spaces. Those will be interesting, but I don't see the current numbers as particularly exciting on the upside, and in fact, surprisingly, not as bad on the downside.
Okay, stay on with us. It's just an afternoon of breaking stories here on NDTV Profit, and we're talking about a story we've been tracking very closely, which is the Karnataka government's new draft guidelines on how alcohol should be taxed. Deepak Bopanna joining in from Bengaluru now with more on this. Deepak, we have some details of the timeline of when this will be implemented. It will take at least another 3 to 4 years for it to actually happen, isn't it?
Yes, they're going to do it in phases, but as far as implementation is concerned, we can expect it in the next few months. They've already right now put out a draft notification. They're saying that the aim here is to really bring about some level of transparency so that everyone, especially the stakeholders who are involved, they can have their say, they can come out and give their feedback as to what will really happen to their business or whether this is actually optimum for their business, and they consider all of this is what the government at this point in time says. Now, we should note, as far as the Karnataka state government, especially the excise department is concerned, it has been hit with a series of scandals or allegations of corruption at least. So right now what they're saying is that everything that they're doing is in the interest of transparency, to bring a lot of clarity and to remove any sort of roadblocks, be it in terms of licensing. They're saying all sort of payments are being made online. They're saying as far as a yearly licenses, that is being converted to 5 years, and now this entire taxation system, which is going to be a hybrid system of sorts, which is going to involve two ways. One is the alcohol percentage based increase, and also an additional excise duty is going to be added, and it's going to be done in phases so that there's no jolt really for the people or for the stakeholders involved, is what the government right now says.
Okay, we have an exclusive interview as well. Deepak, thank you for that. Basavaraj Raya Reddy, Economic Advisor to the Chief Minister of Karnataka, joining us exclusively on the phone line. Mr. Reddy, thank you so much for speaking with us and giving us some sense of what is the thought, what is the policy initiative that is in mind when these new draft guidelines have been put forth.
Hello?
Yes, Mr. Reddy, can you hear me, sir?
Yeah, of course I can hear you. Yes, right. You are rightly, Deepak has rightly pointed out that now we are issuing a new draft policy on excise. You know that our Honorable Chief Minister has, during the budget, we have made it very clear that we want to go the, taxation on alcohol basis. On alcohol percentage basis, we want to go like a Western style. You know that in Western countries, most of the Western countries, they are taxing and they are charging on the liquor on the percentage of the alcohol content. This is the first time in the India we are doing. Hopefully that we'll get a good revenue. There will be a lot of pilferage will come down.
Sure. Mr. Raya Reddy, so you're absolutely right in that we've spoken to a representative of the industry, and they said that they're very positive on this. They were surprised that this came through because it's not heard of before in India. The only point is that the implication of it is that the lower priced alcohol at this stage might actually see a higher price increase. So is that something that you're receiving as a representation? Is the industry talking to you about?
You know that higher brand like Blue Label, Black Label, or whatever the higher brand whiskeys, you know that they have a more liquor content. So if you bring this, you know that they can, the common man can also, middle class, higher middle class people can buy that.
Okay. No, so Mr.
At a reasonable price.
No, Mr. Reddy, the understanding is, and what all of the analysts that we're speaking to who track this sector very closely, what they are saying in their outcome is that as a result, the amount of taxation on less premium brands will be higher because of their alcohol content, and on premium and above will be lower. There might be exceptions, as you mentioned, but largely it will be the other way around.
Yeah, definitely. But during starting days, it may be little difficult, and definitely in the course of 2-3 years, I think it will be all right.
What is the feedback you're getting from industry so far? Because you have barely a week before you want to implement it.
Industries are welcoming it. You know that already shares and everything because of this announcement, most of the companies' shares have gone up. There is a issue. There is a little issue in this beverage manufacturers, especially in Karnataka. You know that they may have afraid that if the high brand has rates have come down, their sales might be coming down. It is not like that. I'm sure that in a course of time, it will be okay.
From a revenue standpoint as well, Mr. Reddy, I'm sure that certain studies will have been done in the formulation of this policy. What is the expectation on how this will pan out?
I'm expecting another 5,000 crores extra tax will come to the Karnataka.
In FY27?
If you bring this alcohol content, you know that it is called beverage, this thing. Definitely we may get about 5,000 crores extra.
This financial year itself, sir?
Maybe not this year itself. Maybe you may get over 2,000-3,000 crores this year, maybe next year. There are so many things. It takes 3-4 years, you know that, because it's the first time in this kind of measurement is taking in India. No other state has done.
Mr. Raya Reddy, just to understand, this extra 5,000 crores or 2,000 crores in 1 year, it's going to come from the alcohol beverage makers, right? So will their taxation go up significantly?
Not beverages, consumers, you know. Consumers as well as. Consumers are, it is going to be friendly.
Friendly? If it's friendly, sir, then how will the revenue go up? Are you thinking volumes will grow?
Because, yeah, definitely. Because good brand, like I told you, know that good brands, the rate will come down, and lower brands are a little bit going to be costly. Let us see. We'll work out. And secondly, what Deepak has said, Open has said right. You know that the total we are bringing transparency, especially in the excise department transfers. There will be no influence, there is no corruption, everything. You know that this time everything do counseling on counseling basis.
Mr. Raya Reddy, you're saying this is the first time in India. It indeed is. Do you anticipate that other states will also follow Karnataka's
Maybe. We don't know. We are just trying. We are trying. You know, the Karnataka is a pioneer in taxation. Even including GST also, we want to start it in India first only.
Thank you so much, sir, for joining in and giving us clarification.
Let's see that the new system, how it will work.
Yeah, we'd love to have you back once it's implemented.
Alcoholic content basis and taxation, let us see how it will work.
Sure.
I'm expecting 4,000 to 5,000 crores extra. Thank you.
Okay. Thank you so much, sir. That was Basavaraj Raya Reddy, that's the economic advisor to the Karnataka Chief Minister, talking about the new policy and some great insights there coming in. Deepak, have you been looking at this space at all? I know you'll not talk about stocks. I'm well aware of that. But have you been looking at this space at all? We are learning new lessons about how much alcohol content in which brands during this interview. But if you have any insights on this story that we've been tracking?
No, it's a good exercise to figure out what has more alcohol and what doesn't in the... Yeah, even in and what does it mean, you know, from a taxation perspective? I know that
it's in your state, Deepak. As a Bangalorean, how are you feeling about it?
Well, you know, it's the tax for sin, right? So it's almost like alcohol is not a necessity. It's the equivalent of you know, something like this is not it is not considered bad to tax. It's like taxing cigarettes. You tax alcohol more. Not many people will care beyond a certain point. Sure, you know, it will get more expensive perhaps at the lower end, but you can expect that the government, which has only a few elements, the state government has only a few elements it can tax. There's property tax, there's road tax, there is perhaps this liquor tax and whatever comes on petrol and diesel. So I think you know, those are the elements you can expect they'll try and move. they won't try to hit the others. The petrol, diesel has a much larger impact, and it's a necessity. So alcohol is easy. So you target it when you can. So I think Karnataka has seen many of these, about maybe 10 or 15 different points in which we've had a rationalization change. They changed wholesaling from private to only state-owned. There's been different layers of excise duty changes in the past. So I think, yeah, I mean, now it's an exercise for us to figure out which drink has how much.
Yeah.
But I don't think your prices at the pub will change even a little bit. Right now, they will only go up.
The true Bangalorean has spoken and come right to the point. Prices at the pub, that's what matters. Okay, we're going to quickly cover HCL Tech before markets close, because the numbers will come out later today. Jasmeet is joining in with what to expect.
Well, thank you for that. We're expecting a weak quarter for HCL Tech's result this time. Overall revenue is expected to remain flattish, but the EBIT is something to watch out for. We expect a EBIT margin to see a downtick of 100 basis points and overall EBIT to see a downtick of 5%. Now, in terms of net profit, that's expected to see an uptick of roughly 14% on the back of the low base we saw in the previous quarter, which was on the back of the new labor code. Apart from that, this quarter we are penciling in a negative CC growth altogether by nearly negative 1.7 to negative 5%. If we look at the overall IT business, it's expected to do well for the company, but the software business, that's where the problem comes in. Expected to overall see a degrowth in terms of impacting the margin. While margins are also getting impacted by the wage hike and restructuring, which we'll be seeing in this quarter as well. Apart from that, the commentary on overall AI revenue, AI deflation, and further restructuring plan of the man will be in focus. Now, in terms of the guidance, that will be something to watch out for, given brokerages are expecting a guidance between 3 to 6% for the overall FY27 going ahead. It's a wider range compared to what we saw in FY26. And apart from that, management did sound confident in the previous quarter for the EBIT. So we expect an uptick in terms of the EBIT overall margin as well. So all in all, we expect a weak quarter, but strong guidance coming from the management for the Q4.
Got it. Okay. Thanks so much for that, Jasmeet. Let me go across to you very quickly, Vinay, on IT and specifically HCL Tech. Would you buy?
HCL Tech specifically is consolidating, and last week we saw a high of 1475, so that is an immediate resistance. Before that, I would not take a long bet, so let us wait for this resistance to be taken out, which is at 1475, above which we can expect trading gains further. But till then, wait and watch approach should be there.
Okay, on that note, Vinay, as well as Deepak, thanks so much for taking the time and for speaking to us on India Market Close. It's an exciting day. We've had a great show and the market has had a great day. 24,570. We're ending not at 600. We're off that point, but we did hit it during the day. Nifty Bank has done particularly well for itself, 1.4% higher. The real stars of the show today on the sectoral front are FMCG, the Nifty FMCG index, as well as the Realty Index. Pull those two up if you can, so that we can have a look at those two, or just pull up the sectoral indices and we'll have a look at the entire pack as a whole. Okay, so there you go. So 3% gains for the FMCG index, and pull up the Realty Index as well, which has done incredibly well, up about 2%.
You know, the advanced decline ratio is good, but it's not that great. I just want to pull up the intraday for the advanced decline ratio. And so I wouldn't say that there's nervousness or anything like that. It's closed off a bit. It's closed off a bit. Remember, you are going into a very crucial 24 hours. And there are enough people now in the market who've clearly stuck their necks out and said that no one's going to be trigger happy. Let me just put it that way. No one's going to be trigger happy in the next 24 to 48 hours. And that seems to be bet over here, but there is that kind of hesitation. Otherwise, all things considered, we should have done much better. Let's pull up the Nifty heat map, and of course, Nestle is there, top of the charts. Fantastic quarter.
It's a good
8% up. 8% up on Nestle. When is the last time we saw an 8% uptick on results on Nestle? So exciting. I think this is the second or third quarter after Manish Tiwari has taken over. It'll be interesting to see what his take is. HUL is riding that wave. Trent has its own jig going on because of the bonus and the rights issue, but also with this. Bajaj Finance, I mean, I'm Tata Consumer. All of this is telling me, even an ICICI, HDFC Bank, is this the return of urban consumption story that we're seeing with Nestle?
I certainly hope that is indeed the case. My only worry, though, is if this continues for another couple of weeks, you will see prices at the pump go up. And eventually that's going to flow through the system. So the positive triggers that we're seeing on consumption right now, on volume growth, HUL in all probability is going to have a pretty decent number on the volume side, which is why it's going up as much as it is right now. But we're seconds away now, 8 seconds away from closing, and let's have a look at where the benchmark ends today. It's ending at about 200 plus points higher, 220 points higher, just about 20 points shy, the last tick of that 24,600 mark, which remember is the 200-day exponential moving average and a key resistance hurdle to cross. I wonder if that is done tomorrow.
Yeah, we all things, if they remain as they are, definitely we're looking set for that. Maybe a bit of a run-up in Nestle, HUL and Trent could continue tomorrow as well. Keep in mind, HCL Tech will be in focus. SBI Life also will be reporting next couple of days. That will be in focus as well. So keep in mind that those are some of the numbers that you should look at. SBI Life has actually ended quite poorly. Want to pull up the top gainers and losers just before we wrap for the day and on this show. And I wonder if stocks like PNB Housing, etc. have still managed to stay up there. They have about 8.5% up. Lemon Tree buzzing today, 5-star buzzing today. So all of these stocks doing well. Realty stocks were doing very well today. On the losing side, Rajesh Exports, maybe they're not getting that much of a refund from the United States government.
That was a big story,
as
wasn't
the other one. That's a big story, but we had so much news flow today, but that's a big story. Watch out for companies which are going to be getting refunds from the US as that tariff was struck down. Natco Pharma, Shah Metallics, among the other ones which are not doing too well. But really, that's all the time we have on the show from Alexa and the team that put the show together. Thank you so much for watching. Stay tuned. Market Express up next.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन